Good morning. March 9th. Here we go. Get it set up. Good morning, Tree. Gonna be streaming today. Options, stocks, futures trading. Keeping our eye on the news. We're looking at GME, BBBY. Any runners? Good jobs data this morning. I guess the SPY liked it. My short doesn't though. My short doesn't. Morning, SHF. Ben Gurmyaz. I don't know who that is, Moisley. Or who you are. Or what they'd be buying into. Feel free to elaborate. This on here. I'm gonna share it on Twitter. Thank you guys that have been sharing on Twitter. I appreciate it. I think Jason, you did yesterday, and a couple of you guys have been sharing my stream on Twitter. That's awesome. Get you guys on Discord. Okay. Put a link in the chat if you guys aren't on our Discord already. Free Discord. Basically where I'm chatting when the market's closed. And many of you. Very okay. Okay. Got it, Moisley. Erica, good morning. Drew, good morning, Joe. Rehypothecated. We like that. We like the rehypothecated likes. My brokerages. Wheels turning. See what I'm down on this. I only had one micro, so I'm only down, what, 50 bucks on it. Beauty of the scale in. Ops is basically breaking even. GME as well. BBBY also. What's our pre-market stuff? What's going on here? OSHA's up 76%. One of you guys brought us up the other day, actually. Interesting. Not a whole lot I recognize on here. Asana's up 15%. Build-A-Bear is up 15%. Line is up 12. Okay. So more lost jobs than expected, I believe. That was the bullish news this morning. Adidas has reported a big fourth quarter loss and slashed its dividend after the costly termination of its partnership with Kanye West's Yeezy brand in October. Russia says Geneva grain deal talks to be March 13th. When moon? Maybe in like 2 months. FG stay at 4? How's the trend on Happy Money Tube? Yeah, it's fine. I'm pretty slow. I don't just chase after growing the channel. You know what I mean? Just going after the hype stuff. Kind of just documenting what I'm doing, and it's not always very popular. So, been pretty stagnant for a while, just because I've been following GME, and it hasn't been exciting for really like years. So, but yeah, it's pretty good. BBY's gotten some new attention, and we've been following that one. So, never got on with AMC, unfortunately. Not unfortunately. Fortunately for my sanity, unfortunately for the channel growth. Got some bump in Yaz this morning. Moon Pirate does scare people off, you're totally right. So I'm gonna be looking for some more cover calls today. Probably 1.5 for next week still. I'm not convinced we're at a bottom yet. Today is kind of important actually. If we don't break that low, then we might be at the bottom. But I would guess that's that's just logical. If we break it, then we're not at the bottom. But I'm saying, yeah, this is retesting it. So today might be the intraday kind of wick, a down move, and then an up. So curious if we close above 127 today, or if we hold above it today. Buy's come down a little bit here now. Got about 4 minutes. I saw on Unusual Whales a big option trade that was opened up on BBBY. It was a four strike puts, short puts. So sold 4 strike for like April. I can't remember the date. No, it was further out than that. It was a few months at least. SI is liquidating, going bankrupt. Sorry, Jason, if you still have that. Can I show a video with your face on here? No. So, yeah, I might look at some $4.21 strike on BBY if today looks like it's bottoming out. Keep getting into these 1.5 strikes and we keep coming lower, so I'm just not really getting the premium on them. GNS is holding up alright. My other plays, Cosmos holding up alright. I think these things will probably go. Tops was crazy yesterday. That's actually holding up really well. I might have another run soon. Jason. So I have, let's see, I've got 20 cover calls on these 2,400 shares here. I could do 4 more covered calls. And then I have these $40.50 cash secured puts. So those I'm gonna have to roll to next week. Unless we close above $1.50 today. Or tomorrow, I guess. And then I did some cover call. I forgot to mention in my video. Open up some cover calls on these leaps I have on GME yesterday. So those are 8 days, 20.5 cover call. And yeah, not bad. It was like $170 in premium for 8 days. So I'll take it. Again, maybe some poor man's cover calls on BBBY would be Smart. Or just cover calls. The premium on the long calls are, yeah, they're still high. Wriggle and Piggy. Hey, Jan. Got some. Oh, I need Tesla to come down, actually. Look at that rebound it had. Tesla and Rivian. The stunk BBBY cray. Wait, I put in 401k now, tax free to be taxed higher later because taxes go up. Any thoughts on that? Yeah, it's good to invest with a 401k. All right, market's open. Market is open. Ding ding. Some new lines drawn in here. So we'll see if the market seems like it's liking the bad jobs data. At some point, we're going to flip from inflation and raising rates to being concerned about the recession we're actually in. I don't know. Be like here. Put another line down here, kind of that. There we go. BY up 2.5. There you go. A little pop out of the gate. Just what I needed. So I've got, let's see, I have 42 on here. I could sell. Could do another 20, I think. Let's go. You got what I need. But you say he's just a friend. SPY coming down a little bit there. Look at next week's cover calls, 1.5. Do 10 at a time. Ask. Let's see. Natty Gassy. Right. Up a little bit. Up a little bit. Bed Bath. Back to open basically. And yeah, if I get out of these 1.5 cash secured puts, that would be lovely. I'm not really following what you're saying, Tree, but it sounds awesome. Hassan's up 20%, Build-A-Bear up 17, PaySafe's up 10. Oh, Sava's up 6%. That one has been perceived to have correlation with GME. Oh, so I got filled. So I just sold some $1.50 cash grid puts or cover calls on BBY for next Friday. I'd like them to be $2, but yeah, I'm just doing a little at a time. I did 10. Now I'm up to 52. I'll do 10 more at $2. Eyes bouncing here. BBBY. Hitting 135 is a high on there. So the premium for the $1.50, the $10.50 cover calls for next week is $100. Um, and then I have these ones that expire tomorrow. I got $202 for those. Let's have a moment of silence, moment of peace for Jason's position. Buy, breaking out of that level to the upside. Even with that jobs report, I'm not convinced of much of a bounce here. 401's kind of that next level. See if we get up to there. We'll look for just peaks to add to my short. SPY is moving up. BBY is holding up pretty well so far. I like selling the 2 cover calls because that's basically guaranteed profit on the upside. The $1.50 I think is close to break even on my share price. So if I let those go, it would just be no profit. But the 2, then I have at least profit from $1.50 to $2. I'm gonna get these orders in pretty quick because BBY has been selling off pretty quick after open. See if you get a break of this 135. 401k match is $1, 1-for-1 up to 3%, then half for up to 8%. It was like 6% that thought about, just dropped it to 3, so I get 3% more income tax and collect it now to invest how I see. Oh, I see. So you're contributing less to your 401k. I've never had a 401k, so I don't know, but I see what you're saying. Hey Julian, hey Justin, hey Furs, hey Jim. If 135 breaks, we rocket to 139. Just a couple pennies higher. 146 average. That's a nice average. Very low. Very, very low. Okay, Rivian puts are doing good. Tesla short is actually back down. This thing's rallying with the market. I don't want to short again up here actually. Pretty early though. BY is not following the market. Stop. It always has these morning pumps. Not always, but. Hey trader. So chill. Good to hear, Julian. 140 next support. Um, yeah, 1.4. Kind of what I have here. That'd be resistance. I'm curious if we hold this 127 today. I'm not convinced we will yet. GME is moving up a little bit with the market. Mullen's having a little bounce here. 4%. This thing got wrecked the other day, didn't it? Not really. Actually, that's at a kind of historical low. Might be a good long somewhere around here on Mullen. If it holds. Starts to show some signs of strength. A nice little trade up to here. Pretty good percentage if it does that again. 133%. Interesting. That's a lot of percentage. Buy's ripping up more there. Oh, these are not updated. Yeah, I'll be keeping an eye on Mullen. That might be a nice little swing trade there. So I only got 10 covered calls filled today so far. 10 of them. I put them at the ask, so kind of wait for a pop to get it filled. I'll put some a little lower. How strong is a continuation triangle? Probably breaking support to the downside. Yeah, I feel like we might break that low. Jobless claims. Weren't that bad in what way? Yeah, Mullen. Mullen's at a level it might be good long. No, less people have jobs, so that's bullish for the market. Less than expectations. Now it's at 6. I'll do 2, 6. Let's see. Cosm's down a little bit, 0.5% today. GNS is down 2%, 2.8% today. So confusing. This account's like I've got 1.5 cover calls, and I have 1.5 2 call debit spreads. I've got short and long at 1.5. I guess these 1.5s are for tomorrow. Continuation wedge. So you have a wedge, and then you're kind of looking for a breakout to one direction. Yeah, the jobs. It was. So yeah, like I said, at some point it'll be the market will start selling off from recession instead of kind of the opposite, rallying from recession. The estimates was 195,000 jobless claims, but we got 211. So it's close to expectations, but it was worse than expectations. Better for the market, worse for the jobs. There's a pump on SPY. I wonder if there's any of this stuff, or on BBY. Okay. That gas moving up a little bit. I don't know how to play that gas right now. Dip by, I guess. Yeah. Elbiz is up 3%. SPY is holding out at these levels up here. Tesla's up 1%. They don't have enough time on this. Okay. Once I get back to break even, I'm going to close out this Tesla short. Just taking so long. Might have to be tomorrow or the next day. Continuation wedge. GE's up almost 7%. BY's holding up pretty well here. Not having that quick sell-off. Let's see, I started selling off at 950, so we'll see. We've got 5 minutes till that. Thanks for your likes, guys. All 16 of you. 16 glorious thumbs up. Build-A-Bear 21%. This thing, Build-A-Bear has definitely been a squeezy one before. Do they have earnings? Beat estimates, yeah. Look at that thing. BBBY just broke up a little bit to the upside. I can tell because I just got covered calls that filled. Yep. 137 now is the high on that. All of my covered calls got filled. I'm gonna wait a bit now before I do any more. I opened up some 2s and some 1.5s. J&J still at the lows. SPY's ripping. Yeah. SPY's ripping up. BBBY, it's up almost 5% there. Yesterday's high was 139. Oh, that was 2 days ago. Oh yeah, yesterday, 139 was the high. See what happens when we get up there. $137's the high here on BBBY. SCHW, is that Sherwin? Is that Sherwin Williams? Oh, Charles Schwab. quarter a share. Spies ripping. So this is kind of that level. Let's see. Next level up, I'd say is kind of here. Morning, Jason. On Bobby at the 1-4. Safe's up 13%. SGM's up 4%. Now my one contract is going against me a bit. That's a pretty big move there. Buys up over 0.5%. Just so happens to get out at the perfect time. Ace. Why the pop on BBBY? Why the sell-off for the last 3 months? Or 2 months? We'll see what 139 brings. You're the expert. We hit a level. We might be bouncing off that level. It's very possible. This was multi-decade low. It hasn't been this low since back here in January, but before that, this was the lowest it's been since like 94. I don't even think you were born in 1994, Jason. This stock is older than you. .83. Massive sell wall. 139. Yeah, 325,000. I see that. Could be a spoof. Buy's kind of wicking. BBBY at the highs. I'm not opening up any more cover calls yet. Ooh, I could close out some 1.5 cash secured puts though, potentially. I'm still down on those. Let's see. Down on the TD account. And I closed out of the 1.5s yesterday on the E-Trade, that's right. Came up all of a sudden. I see. It hasn't been building, you're saying? The wood elf is 3,000 years old. Why 139, why not 140? I don't know, but this is looking pretty strong to open. Yesterday, our pop, we started selling off by 950, so it's 953 now. See, other days we've had a pop. When did it sell off? This one started at 10, well, 955, so we'll see if we kind of repeat that. When are their earnings? It'll probably be in April. I don't. Have they announced it? I don't think they've announced it yet. U.S. housing market is crumbling under the weight of higher mortgage rates and rock bottom affordability. Europe will need to lock in more LNG for security, says the Shell CEO. $40 of my $2 calls for next Friday for a $2 loss apiece. Probably smart. Yeah, if my cash card puts were they were positive, I'd close them. I don't think I'm gonna take a loss on them. I'll just roll them tomorrow. Reddit saying he tweeted hello in Chinese yesterday. But there is some tin about the timing of his tweets and BBBY filings. Moon Pirate shared it. I'll show you. I'll show you here. I don't know if you can see that, but so it started what, January 18th. January 19th was a filing. I think this BBY, it's talking about report of unscheduled material events of corporate event. And then January 25th. Oh, but that's also when Ryan Cohen tweeted Ryan Cohen buys all stocks. That's when media was talking about him buying what, Alibaba and Nordstrom and all that stuff was coming up, but it was just regurgitated news from nothing. There was nothing. He was making fun of him and retweeted this meme that someone put on Superstock, which was Ryan Cohen buys all stocks. So that to me was bullish that he might still be in BBY, honestly. Like, it's a joke on what they were doing, but he could subtly be saying that he is in BBBY or buying into it or whatever. Anyways, they had a filing a day after he tweeted that, and then he made it when you buy a turtleneck on January 25th. BBY had a filing on January 26th, and then someone tell the government to stop shooting down my balloons. It was on February 14th. Same day BBY had a filing, and then just March 8th, yesterday, he tweeted hello in Chinese, and BBY had another filing. So he doesn't tweet very often, so it is kind of interesting. I think BBBY maybe has more filings than he does tweet. So I think that's where they're getting their speculation from. Explain the RC significance. Significance would be if he's the investor, if he bought the warrants and he's the one, then it would be bullish for BBBY. It would cause a massive rally, most likely. Uptrend now and SPY. No, I'm not really buying this bounce, but it's still early in 30 minutes. So I've got some lines drawn. Looks like we're hitting resistances up here. I'm looking for a short entry. VWAP's so high, wow. Oh, maybe this is a good short entry, I'm not sure. I'm gonna be patient on that. Daily MACD, is it flipped? Yep. So if we close this high, we'll have a bullish MACD. And maybe a little RSI divergence here? No. Not on the daily. We have it on the 4 hour still, I think. Is this still a thing? 33.77. No, there's actually not even a divergence there anymore. So you do have this divergence on the MACD. I guess you could call it that, yeah. Higher MACD level and then lower price. So it's showing up on the MACD, not really on the RSI. Yeah, he's tweeted like a day before BY's filed, the last like 5 tweets or whatever. And then, or the last 2 he tweeted the same day they filed, and then like the 3 before that was a day before. So I don't know. Yeah, if it does come out that he bought it, I think it will definitely cause some movement. Um, when he first bought in was this move right here. So definitely potential to get something going if that news comes out. This was not from him. That's why I got back into this after he sold. Thought, well, it's still fine, but that was enough of a deterrent, him selling, that it killed the rally. Hudson Bay? I don't know. I don't know. Um, I know Hudson. I think the only thing with Hudson Bay is why people don't like it is because their track record with what they've done with other companies. I think it's been malicious at times. So thanks for your thumbs up, guys. Appreciate it. Got 24 of them in here. Well done. Buys moved down a little bit. VWAP's so high though. Might just bounce on VWAP. I'd be getting sued by everyone. MSGM's up 11%. Asana is up 26. Elba is 5%. So we hit 10 o'clock. BBY started to get a red candle at 9:55 like other days, and now 10. So potentially it's going to come down more here. I don't want to get another short on the ES. Just looks bullish though, but I guess it's just at a resistance, so we'll see. I'll be patient on it. My gas moving up a bit. Float ballooned and value dropped. What are you talking about? 25th, my king. What? Carvana, good play today? For like a day trade? Yeah, you get in it right now and then jump out in like 12 seconds. You'd probably make some profit. Um, it has been grinding on that 50. Look, that's been serious support. So this could be a good entry on Carvana, especially if we get an engulfing candle there. Oh, 20 thumbs up. Thank you. It's okay. You're forgiven. Yeah, good eye, Jason. That could be a good entry on Carvana. Options are spendy. It's just bounced off this 50 often. Engulfing today would be good. So yeah, it'll probably cool off from here though. It's overbought. It's still morning, so you still have some day traders and stuff probably in it. It's kind of rejecting that resistance up there. So see how it shakes out, I suppose. GME is flat. 12 seconds, yeah, they'll scalp. What's going on with Durka Durka? I don't know what's going on with it. Ooh, more selling. So now it's getting back down to some of these moving averages. Has one more gap to fill. Well, really two. I don't know if it'll fill these though. Look for it to hold support at like this 30 cents. Kind of this resistance back here and here. If it breaks that, probably looking at 23 cents. Breaks that, probably 21 cents. So yeah, that's what I was saying, be patient, getting back into ones that just ran and dropped. Like it runs and runs and runs and has one big candle, you want to just buy back in, but really got to be patient because oftentimes it will continue to come down or at least consolidate before it rallies. So you're gonna have plenty of entry time. You know, could be days, could be weeks. But you will get some bounces in there if you're trying to scalp or whatever, like this one. Wait, why did it say it was down 30%? What? Weird. Thing is so choppy. All these gaps. Yeah, I mean, yeah, it's. We'll see. I thought it was down 13%. It's up 15%. I mean, it might be showing some support where it's at. MACD hasn't flipped bearish yet on the daily, but it's got to settle down before it rallies, like big. Just depends on your strategy, whether you're trying to day trade it or swing trade it. Yeah, you could have bought in and sold here, but that's all hindsight. BBBY holding up all right. Holding up all right. Not bad, Jason. Come on, not bad. Up 3%. Haven't made a new low. Good signs of a bottom there. MACD is bullish at this point. Don't know if it'll stay. You pay less taxes on gains that you've held for a year, yes. So if you bought something and then didn't sell it for a whole year from when you bought it, it's to promote people buying and holding to decrease volatility in the market, more for investing. Yes, capital gains tax and short-term gains is higher. Hanging out at the high up here. Bed Bath up 2% still. Looks like it's getting into a barcode here with the 132 low and a 134 high. Below VWAP. Barr says banks expected to notify Fed before engaging with crypto. Fed would view it as unsafe for banks to directly own crypto assets. Fed creating team of experts to study crypto innovation. College graduates in 1970 had an average of $1,070 in student debt. Today that number is more than 31,000. GME is mooning. Go, Bobby. Go, Ricky Bobby. Capital gains lost in tax higher. Better announce something good. I mean, they have to start by just announcing earnings. We don't know when earnings are going to be. Thanks for your likes, guys. We're 27. We're getting there. He's flirting with VWAP here. I think I'll grab another short. Get a little bounce. Tesla's coming down a little bit, still up 0.3. I'll grab another short here. Average into it a little bit. GME's coming down. See if it breaks this support it bounced on yesterday, that like 1780 area. Yeah. Asana's still going 28%. Cosms are play. I like how this is holding up. Wicking down a little bit. Actually not that good looking anymore. This hourly candle's pretty ugly. Did flip bearish on the MACD. Daily candle still. Yeah, I might actually pull out of this one. Close those. I don't like the bearish MACD right under the 9. It's still kind of in a bull flag, but see. Whoa. Thing's illiquid, huh? They had a good catalyst even. Bounce off that support. I'll hold it. I'll hold it actually. ENS is holding up. That looks nice. Very nice. Look at that bull flag on the daily. It's glorious. Build-A-Bear 24% now. BBBY flushing down there. SPY's coming down through VWAP. Jimmy's getting the red hammer. Okay, stop. 1310 is the low on this candle on Bed Bath, which is I think where it opened. So still up 0.8%. Curious on that 127 what we get when we get there. I could have sold more covered calls. I have about half of my shares in covered calls on the long term, but some of this is on margin, so I'm getting margin calls, so I need to be a little more hedgy and make some premium. So it'll be $200 this week for the 1.5 strike, and then so far I've got about 160 for next week. Death Cross is good, right? If you're short, I think I sold it for a slight profit. It just so happened to sell that for a slight profit and somehow make money on SI, and it just went bankrupt. Let's see, I think everything got filled. Yeah. Yep, everything got filled. SPY's coming down. Maybe should have added. Psycho, sorry. Crap. I wonder if I want to short another one here. Maybe on a bounce. Today, BBY does look like it's having some pressure from the market. I do admit. Body yesterday's close for slow profit. You should start a course, Jason. Charge people loads of money for your perfect entries and exits. GE's up 7%. That's a big move for GE. They have forecast. Must have earnings, right? Yeah. Price target raise. What's this move on? There's a price target? Wait. Oh, reaffirming guidance. That must be what it is. Reaffirming guidance. Interesting. Miss GM's up 10. Now this chart looks interesting. See, they call that bullish inverted hammer. Maybe after a downtrend? I don't know. Yeah. Laser. Yeah, G makes everything. This one might be a good trade. It was a little late, but maybe not. Laser. We've traded this one recently. I traded it from here to here. I did actually get an exit on there. I didn't have enough time on my options to get this move. This one's pretty choppy. I mean, it's in an uptrend, but above that 9 moving average, nice. Depends on your time frame, what you're looking for. Might be setting up a little head and shoulders here. Kind of hit resistance up here. I mean, it's already had a pretty epic move. It's 3x from 2 months ago. But I'm not sure. It doesn't, not very clear. Avalanche warning. Buy's coming down. Should have added. Okay, I'm gonna add now. Had a little bounce there. I kind of missed. I'm up to 3 now. Buy's flushing. That's a pretty big flush there on SPY. That's true. They got all that snow. I bet there is. Bet there are a lot of avalanches. Snow, warm weather, then snow. You get that uneven snowpack with all those layers. Ice, powder, flush, heat, slide. RIP Ken Black. This is unreal. What's unreal? Big hugs. SPY back to open, actually. That basically hit. See if it fills this gap. If that gap gets filled. GME's down 1.25. Tesla's now negative. Just barely. Rivian's negative. SPY kind of bouncing there. I'm now positive on my ES, just from the two contracts averaging in. BBBY coming down, oil's coming down. That's good for a downturn. Dollar's dropping though. BBBY almost back to break even. Yep. Powell doesn't need to crush the market to fight inflation, Fundstrat has said per BI. Well, then you're stuck with like stagflation. You have high interest rates. High interest rates and high inflation, which is like worse. Classic meme stockholder behavior. Classic. Bed Bath still up 1%. Levels here don't matter a whole lot to me. I'm just curious on that 127. If it flushes through there, and if we get an intraday bounce and back out of it by end of day, or if we close below that 127. Eyes kind of bouncing a little bit here. Yeah, like the 70s. So the 70s, well, really into the 80s, it lasted so long. Yeah, we need the economy to get crushed, fortunately. Market, economy, all that. Sun up 25 still. Build a bear holding it down for the Build a Bears. A safe still rallying. Is that a reverse split? Oh my goodness. 1 for 12. I didn't know they did that. But look at that. See, this is what I'm saying. Reverse splits have been bullish lately. I didn't know PaySafe did that. But yeah, that literally turned it around. That was marking the bottom. Need I'm not even in birds anymore. Need birds to do a flip. Hellbiz could. Hellbiz might, now that that's their other whatever else they need to do for compliance they've completed. Actually, this looks this is a nice spot, I think, on Hellbiz. Got that bullish MACD, green over the 9. I think Hellbiz is ripe for some more ups. Uh, 127 on BBY that was when they were spreading all that bankruptcy. Media was blasting it about bankruptcy, about how they're gonna go Chapter 11, and that was into earnings. So then earnings came out and it rallied. So that's been the narrative ever since. I mean, they were kind of starting to say it here, but then here there was, I think BY actually said something that was pretty pretty bankrupt sounding. I think they said basically, I don't remember what all came out, but it pushed it down hard. And now we're at that same level, but bankruptcy's off the table, so it shows you the value, potential value of where it's at right now. I think 127 was from dilution. These 3 days, they diluted. I don't remember it that way. It's pretty common with penny stocks to trade like this. Penny stock algo. I don't know. I don't know how to explain it. But you look at a lot of penny stocks and they barcode or whale teeth. Here on Help is doing it here, where it just trades like even amounts. This one doesn't do it quite as much. If you can find another one that does it. Yeah, see here on birds, barcodes through here. I love you, Furs. I love you. Thanks for your likes, guys. I appreciate it. Got 29 of them. Bed Bath basically back to break even. See what happens when we get to that 127. Looks like SPY's gonna probably keep coming down. We'll wait for a little bounce to VWAP to get another short. And Matt's up 9 or 7%. They have earnings coming up. Don, I think Don got some calls in MMAT. Eisen's up. Body's still rallying. Yeah, Carvana's looking good, holding that 50 moving average. Grab another short here. Gonna set up this little bear flag. Got bearish MACD, red under the 9. It's got. Not sure if we'll get much of a bounce to VWAP. PaySafe have news? Oh, they had earnings. That gas is still flat. Disgusting. Disrespectful and disgusting. I mean, depending on who the investor is, they can't disclose of everything. That's just the way mergers and acquisitions work. You don't know everything that's going on unless you're on the inside. It's a very delicate situation. You don't want to get a bidding war. You don't want to get there's a lot of moving parts there that you don't just disclose everything. If they were open with everything, then there most likely would not be any chance of some sort of merger or acquisition. Must be Macy's store. Bed Bath down to 129.5. Red. Low of the day is 129. Bouncing a little bit here. It should be kind of a choppy day on the market, really. The bounce on SPY. HSDT. You guys still holding this? MGAM kind of bouncing off its all-time low. Oh, got natural gas numbers that just came out. Just dumped on it for a second. Might be a good long on MGAM. SPY's melting up here. I don't know if I ever traded BBIG. I followed it a little bit. Yeah, natural gas storage was negative 84B. Estimates were negative 83, so basically in line. Work on the weekend is becoming more common as layoffs mount and workers seek time to focus free from meetings. Buy back to VWAP. Might grab another short here. Oh, now there's a big dump on that gas. That was weird. Delayed. Bed Bath. Still not a new low. 129 is the low still. Buy up through VWAP. Wait for a test up here for a short. See if it breaks it or not. Like to see lower lows or a lower entry on that gas, like 2.5. I don't know if I get back down there.
This convo, let's talk DocuSign, Renita, and look at this earnings coming up. Needs to really deliver here after the market's given it a second chance.
It does, and so I think that folks may have a little bit of high expectations for this company. We'll find out just how high when the numbers come in.
It's with the market.
But analysts are expecting DocuSign to narrow its loss from the last quarter as well as post higher fourth quarter revenue. So they're looking for an adjusted earnings per share of 53 cents.
And BAT's still holding that level.
$639 million for the quarter. Now last year, revenue grew about 18%, and the company had a free cash flow of $36 million.
And
investors, they're also going to look out for more
6,000 shares
layoffs, as all these companies are trying to draw
Dolores.
down their operating expenses and drive more efficency in
you expecting a bounce on that?
Now DocuSign did announce
a bounce on that level
to reduce staff
1750-ish.
That was about 700 jobs.
60.
And in September, the company said that it was cutting staff by 9%. And investors, they're going to look for DocuSign to possibly update its outlook as well to reflect the activity that's been happening over the past 3 months or so. And this morning, though, Citigroup, it maintained a buy on the stock, raised the price target to $82 from $72. And then even yesterday, Wells Fargo raised
Why
the
buying
price
it now,
target
Javier?
65 from 55, maintaining equal weight. And on Tuesday, Jefferies maintained a buy on DocuSign and raised the price target as well. So there has been quite a bit of analyst action around this name over the past couple of days. We'll find out if any of that comes true.
I always love when there's analyst commentary so close to a report. Generally conveys conviction. And it seems like the hopes are running high here that this little bounce and up channel, because it's not just like one bounce. I mean, it's been kind of trending now, Rick.
Yeah, today's move is not the biggest thing, but it could be potentially significant because we're breaking above the 66 mark, this green dashed line. That's about where price topped out here. We had a few excursions to the upside in this area, but nothing really lasted. We mostly stayed within this upward channel. So now we're breaking across the resistance, but we're still within the channel here. So
still
it's
not wanting to go red.
In a gray zone still here. We really want to see for the bulls a break above this level here, this channel mark. So other than that, our two shorter term moving averages are trending up. We're trading above both of them. Long term, still trending downward, still far above current prices, which speaks to how far we've fallen in this name. We're down about 41, 42% from our yearly intraday highs. So RSI, not really
might grab another short
showing
here.
us much here out of the ordinary, trending upward with price, made a new relative high today, and in the bullish side of the spectrum here. So still aligned more to the upside, but really we can see that there's been these fake out moves so often above the 66 level. You got to be careful with this one. So if we do keep breaking to the upside, look for this upper trend line of our channel to provide some potential resistance, and to the downside, watch our 21-day EMA roughly near the 63 mark, this yellow line right here.
All right. Nice. Seems like there's some potential here if DocuSign can trade a lot closer to $70 than 60, and the trend may be continuing. So breakout potential maybe if it really delivers, if it shows better cash flow, if it shows the narrower loss that Renita mentioned, because it still is technically in this long-term downtrend, lower highs, right?
Yeah, lower highs, lower lows, but in the short term, we formed a double bottom kind of right around the 40 level, and we're trending upward here. One other thing to note, big support area right around the 60 level, 63-day EMA, trend line, and volume profile point of control, all converging near the same area.
Okay. All right, DocuSign with the comeback. We'll see if it can get through that 66 bucks. Good level to watch here for this afternoon. Thanks, Rick. All right, let's talk some consumer.
I think it'll probably at least come up to retest up here.
And talk Ulta Beauty.
Oh, wait, am I short?
Oh, yeah, it is. And so Sephora, when it posted, it gave a really good sign about where this stock could go. But today, we can expect more information on how the higher prices of your beauty products really did benefit
BBBY's
Ulta.
holding down. Holding it down, holding it up.
They're also
however you want to look
that
at
to
it.
translate into higher ticket growth for the receipts, right? Got to have the receipts on the receipts. And that to translate into more comp sales, higher comp sales. And so this, a couple of analysts are talking about it already. They're saying that they expect even a cautiously optimistic tone from management because obviously this is a stock tied to the consumer, which is expected to have a little bit more of constrained
Which one?
pockets
Oh,
during the end of the
that's
year.
a good
or during
divvy
the
stock.
second half of the year
Volta,
at least.
I think.
And then they also
Look at
say
that chart.
that adjusted
They don't have a
earnings per
dividend?
share is going to come in above the prior quarter at about $5.64 on revenue of around
Crazy
$3
chart.
billion. And so analysts, they recently raised the
5x
price
since the
target on
COVID
the
low.
stock, and it wasn't a surprise
Holding
because it
makeup.
did pretty well. These are things that
That
people
is
are
neat.
treating, at least in the near term, like
Thought they had a
necessities,
dividend.
like the non-discretionary items, right? More so than discretionary. But we'll find out later if people flip that, because people can, which was interesting because during the pandemic, this was treated as a non-discretionary item, a necessity, because it was
Why are their
skincare
earnings more often than
that
they were
able
before?
to do, which is really the case for broadening out your products, right? Because they don't just sell makeup, they do sell skincare products. And so that's
market
where
cap on this
a lot
thing?
of its strength is
26
coming
billion?
from as well.
Some of the best, I think, execution in basically all of consumer retail. It seems like they've found a great niche.
I might be
within their
topping out
market
here.
and,
Inverted hammer up
great
there.
Price point and quality combination. So the stock obviously has been a huge winner. Has it slowed down at all, Rick?
A little bit. We have slowed down a little bit, but overall, I'd say we're crushing it here in terms of the bullishness.
Yep, it's been
Ever
fixed,
since
man.
all the way back here, we didn't make too much progress below our 250 2-day EMA. That it was a supportive level here and here. And since this mark, we've been rising up to the tune of about 41% since mid-October. So we had some strong support around that area, and then since then, it's just been up and away. Our two shorter-term moving averages trending up, our longer-term one trending up as well. We just moved above our yellow 21-day EMA recently. But in the short term, it's a bit of a range between 531 to the upside and 512 to the downside. So we did make those all-time highs recently, but we have not
believe
really
Alta,
tested
man. That's
those
crazy.
yet. I would say 531 is about the level of our best close. Remember, the closing price is more important than the intraday fluctuations here. So that would be the level I'd be really keen on seeing price overtake for further bullishness here. RSI, though, as we mentioned earlier, things have slowed down a little bit here ever since this peak that we saw back here. Since then, it's been trending downward. But really, the price hasn't
still
faltered
coming
too
up
much
here.
here. We've still been within this range, as I said. Now we're near the top of the range. Look for a breakout beyond this trend line and a breakout above the 531 level to happen concurrently.
Chop,
to
man.
add some
Started with
credence to
the
that
crazy
bullish
Bostic
move.
pump.
Past 4 earnings have all been pretty good. Never any meaningful downside. In fact, the earnings here from the middle of last year basically put the low end of the stock. So fundamentally,
We
the
really
market has
haven't
always
continued this
been happy
downtrend
to see
for
what they report. Pressure's on to deliver now.
Really, this whole
with a
year
bit
is
of
just
a tougher game at 500.
like something flipped once the new year came in. It was like, oh no, we don't need to be in this bear market anymore. Now let's trend up.
All right, far from an exemplary retail trade right now has been Gap. Pretty mixed and quite a bit different than Ulta. What are we looking for here, Renita?
Quite a bit different. And this company had some company issues. It's changed management as well. And today we're actually looking at the fact that this company more than guided for a tough time. They gave a lot of warnings over the past few months about this stock and about the fact that investors or consumers, they may be buying less. You know, the company also cut jobs and they did other things to bring down operating costs. And so they don't, however, expect that to reflect in the fourth quarter earnings. That may be something that reflects better in the first quarter earnings. But we'll find out what kind of impact sales
34?
made
What's
on
the time frame,
quarter.
though?
Analysts expect a loss of 59
Sure, I'll
cents
check it
a
out.
share on revenue of $4.33 billion. That would be
Maybe
well
after
below
earnings.
the earnings per share for last quarter, which was 71 cents. And even last year, which was a loss of 2 cents.
I think it'll go to 34. Just not
going
gonna give you a time frame.
for this quarter. And last quarter, revenue grew. It was up about 2.4%. We saw comp sales growing 1%. That's really low for comp sales. That's not a number that you want to see. I mean, it's better than negative growth, right? But they wanted to see some growth.
Thumbnail?
Just barely getting by. And where do analysts stand on this stock? Earlier this week, Telsey Advisory Group reiterated a market perform and maintained a $15
I
price
can find
target.
it.
That analyst noted how management gave that strategic priorities list to try to strengthen this company's business model in the near term so that they could be able to take better advantage of what happens later, longer
Yeah, it's an Irish
term.
dude. I remember him.
But it's been
He's
kind of
Irish.
a mixed bag
Hustles
since
a lot,
this
doesn't he?
company had eliminated 500 jobs, existing and open jobs, it says, from its corporate positions. And we can look out for more information on whether or not it'll do that this time around, too.
All right, good stuff. Gap has got a lot going on right now. Not quite as clean of a story as Ulta. The shares reflect it. Some of the efforts being made, it seems, have put a bit into this, but the last couple quarters have
Welcome
brought some
back
really
to Trades
interesting
Pop.
price action, Rick.
Yeah,
Okay.
things started to go wrong
Yeah, we can
most
check this
recently,
out.
right about here. We stopped just short of those yearly
Type.
highs. Since then, we're down about 22% or so after failing to
I
to
saw
have
a video he
meaningful
posted. We'll
breakout
watch
above
when this
that
is over.
15 level,
That gas
which is
coming
this
down
red
some
dashed
more.
line here. Since then, some kind of bad technical stuff has been happening here. Price crossed below all three of our shorter-term moving averages. We've been
Highs still
trending
melting up above
downward since
VWAP
those
here.
highs, and the moving averages themselves, they're starting to turn downward as well. Also, you could make the argument that the faster moving averages are starting to cross below the slower moving averages. This is not the greatest trading signal. You don't necessarily want to sell when that happens and use that as your trigger, but it's an overall indication that the trend is starting to shift to the downside and worsen a little bit here. Now, the $11 mark is a point to watch here because that's where prices were bottoming out recently. So that green dashed line is a potential support point. Volume profile, not really much help with us today. Not really a lot of clear nodes until you hit about 13 to the upside and that 11 mark to the downside. So really, that's not providing us with much of a
But Bat still hasn't tested that
congestion area
127.
At this point that we're at right now. Momentum
be
still
coming,
trending
though.
downward here. No help there in terms of bullishness. We're getting close to that oversold area as well.
How about
All
Gap?
right, like
Thank
that.
you.
Some drama here in Gap as it gets a chance now to try and salvage the technical momentum, which is turning south. RSI pretty weak, and then the short-term averages kind of overwhelming.
High
the
little red
long-term
candle
one.
here.
Big sell-off would start pulling that long-term average down, which of course would be frustrating, but wouldn't be the first time for Gap. So they've got a history here that kind of precedes them in a negative way. Good stuff, guys. Great preview. Thanks, Rena. Thanks, Rick. Coming
Thanks, Rena.
up
Thanks,
for
Rick.
our panel, we'll get an update on the China reopen trade, which just
His mic was
took
still
a
on.
stumble after JD earnings.
Oh,
Got a lot still left here over the next 12 minutes. Stocks looking good. NASDAQ up. Russell having some trouble.
all right, we'll watch this trade spotting.
Button, we've got GameStop update and we've got an important little bit of information for
Yeah,
you. This is a
yeah, he
Gartley,
does.
right? This B point is 618 retracement of the X to the A. The D, that's a 786 of the X to the A. This is very close to that D, close enough that it got a reaction. Now, does it come back and
Yeah, we
get a
saw that
reversal in the
1740
PRC,
reaction.
or does it explode from here? The reversal might take it back down to $17 and change, maybe even $16.83. Where if we go to the off drawings, just amazing magic indicator fun times, you can see the Rocky Outcrop flash. We're just getting there eventually at some point. Is it now, or is it boom after a big move in price action? I suspect that the best entry on this move would be from there, this move that I'm about to detail. But it could obviously happen from here. The question is, where do you manage your risk from? Where do you not want the trade? Because then you know you're wrong. You'd be looking at that 200 period moving average, and if you break above there at $19 again, having closed at $19.50 with a huge rejection wick on some time frames, to then push back up again would be very positive. And let's go to the 30-minute time frame, 200 period moving average, 1980. You get back above there, above this formation that you were in, touching this high yesterday. It was equal with these highs before this breakdown. This itself looks like a good recovery formation if you do recover that 200 period moving average, and there's a 50 simple providing support at the minute. Very interesting. Could all move because you can see it's above the basis line of the downward sloping channel. Super positive there. If the Gartley plays out, target, like you're looking at 24, and then breaking the A, you'll be looking at going up to 28 and $30. And if you've been watching TraceBomb for a while, you know that we predicted this X move off the back of a deep crab, and think that actually it's getting up to 34 for well, we'll look at that in a minute, right? It's actually quite interesting. On the hourly time frame, there it is. Ooh, double clap, right? So a little bit of that. That's all I'll say now. But from here, that does look like it's a potential target. You can see that 200 period moving average on the early comes in at $20, and that's the result of. So you've got this candle, the
127. GME getting strong. 127 level. It just hit. Volume incoming. How about this little volume? Javier, I'm wondering why you decided to buy in at 1810. I think we might get a reversal here on SPY. Double doji. Signifying it. Yeah, I might grab another one. Very choppy though. Wait. The BY was at that 127 level in January. And then before that, I mean, that was the all-time, not all-time, but that was the low since like 1993. So after January, it hasn't been at 127 since the 90s. Sell might have potential. Earnings tonight, crazy volume last couple weeks. I mean, that 5-minute chart's very bull flag looking, but with earnings, you don't know. I don't know anything about their expectations on earnings or what the market maker's pricing in. Basically at all-time lows. Don't know much about this company. Healthcare solutions, transaction processing solutions. You want to make money on an earning play, you are looking for one that basically the market maker mispriced the options. I guess you could do it with shares, but there's no liquidity on here, so I wouldn't be touching those. Or maybe, no, there's some actually. Why is it? The bid is 0. The ask is 1. Oh, well, the strike is way too high, or 50 cents. What the heck? There's so much open interest there. I gotta look at this thing. How about barcode? This option's traded between 1 cent and 2 cents. You can double your money if you buy it for 1 cent. Used to be 98 cents. This option goes so far back. I guess because is this a quarterly? Yeah, because we're coming up. I guess this March OPEX is also a quarterly, a Quopex. Option was 98 cents. Been 1 cent since December. Hit 5 cents here. Yeah, I don't know much about it or what they're gonna do for earnings, but yeah, you want to find a options chain that the market maker is mispriced. If they haven't priced in a big enough move, that's where you can make good money on options and earnings. So you think it'll make a big move in one direction or another, bigger than the market maker says, then go for it.
Argue for more of a methodical
What's up, Christopher?
move in interest rates from here on that 25 because
I mean, it traded down at
there's
127
really no
after it
reason to
IPO'd.
push on the
Given there's been
string
splits
when-
since then,
when
so it wasn't
volatility in the
127.
data
I
is
don't know what
still
it was,
so high,
but
the Fed is getting impatient. But
that
from
price
a market
range.
perspective, the sectors that have been strongest following Powell have been technology.
Yeah, we'll finish watching that Jamie
industrials,
video.
Communication services.
The
So
trade
even
spotting.
with a little weakness, there's risk on undertones that are coming through. So I think you're getting position squaring. Ultimately, the inflection point from a technical perspective, I think is 4,100. But we're still playing a little technical ping pong between 39.25 and 40.85.
Okay, yeah, it kind of seems like
Week long,
we
low
are in
volume.
that little ping pong. And
Zombie stocks starting to pump.
we are getting a bit of a smaller.
Which zombie
size
stocks are
range,
pumping?
though. This thing's gonna have to pick a direction eventually.
Bill Bob expecting a hard pump
Everything's
today to
gonna
sell
be
off
the
on
main,
Friday.
Deciding factor on which way it does break, Nick.
So you're going for just a swing trade this week?
Well, tomorrow's certainly going to be a good insight.
Buy today
guys.
and
I mean,
sell tomorrow, or
the jobs data over the last few weeks has been.
Yeah, I mean, I see the double bottom here.
A little bit up today. When you really dig into the numbers today, it's largely driven by New York City schools. Like there's not a
Buy's coming down,
what you
broke
would
through
call a
VWAP.
great trend. We did see an uptick in California.
I haven't seen any
so
volume
you're
picking up
starting
on
to see
GME,
some
though.
of the jobless claims, percolate through the tech layoffs kind of coming in.
Yesterday, I guess, had a little bit more.
Picture numbers, but tomorrow will be an indicator. Certainly, markets aren't terrified of that. When you look at the VIX curve, we're below 19 now. In the
BBY broke the level. It's at
week, and then we go all the way up
128.5.
to 150
127 is
days,
that
the
low
longest
still.
term VIX future that's being priced right now.
Close about Gartley's and
Only
50
22.
nachos.
So remember that curve was really really flat and kind of hovering around.
Yeah, we'll watch
25
trade
for a
spotting.
long time.
It's some of the stuff similar to what I look at.
So
He
everything
looks
is
more
kind
at
of
fib
valid in
levels though
terms
than
of
me.
volatility, current state and future expectations. There's
I'm
more
curious on what
indicators now
zombie
than
stocks
ever.
been
I think
pumping.
The VIX needs a little reworking because there's so much
Chinese.
activity in these very
Spies
very
coming down here
short-term
pretty big.
options. When we look out in
Did I get
time,
the other
there's not
short?
a huge driver that we're just
I
seeing
didn't.
that's
We did.
saying,
Oh well.
hey, ball's going to really ramp back up. So pretty fascinating, to see the Fed story playing out. And I think what you're seeing priced into volatility and kind of the hedges, the fact that the story is playing out like Powell is saying right now. That the markets come in line with what he's saying. Rates are going to be higher for longer. Rates are down a little today, but in general, higher for longer. And it feels like we're sort of pricing this version of the soft landing, because what he's saying, data driven, and we need to see more activity on the jobs front and on the wage front, and we're going to keep rates higher for longer. Markets have digested that pretty well, and if that happens and the overall job market remains fairly strong comparatively, you got to think that's what he's actually hoping for. I think China's the big wild card here. You mentioned that earlier on. You see JD down 9% this morning on not terrible earnings, like Jenny told us. That's going to be a big driver. And if we see inflationary pressures pick up for whatever reason there, bigger consumption, if we see goods inflation tick back up, I don't think that's priced in right now. And that could be a driver of all, but certainly that's not the base case that markets are pricing.
Sure. Hey, Mike, real fast on the technicals. Nick took us through some of the big fundamentals. Just real quickly, 10-year, does it look like it's going to break through 4 again, Mike?
As of right now, I'd say that 4% level is expected critical resistance. It lines up with the 61.8% retracement from the high down to that recent low, right around that 200-day moving average. So from a technical standpoint, it's running into resistance at the right place, running out of momentum, and frankly, I think it's going to be that next move is predicated on these next tier 2 data releases. So expect some volatility.
All right, tomorrow's a big day. No way around it. Thanks, gentlemen. Michael McCurr, Nick Theodorakis, appreciate it. That's it for MTL. I will see you this afternoon for Market on Close.
All right, we'll finish watching this trade spotting video. If I can find it. Where'd it go? That gas keeps coming down.
Collection of 3 candles. 1, 2, 3, and thank you. You did your purpose now, arrows. And so the first of those 3 and the third put this guy in the middle as a rejection of the idea of going lower. It's either shooting star, abandoned baby. You know, it depends how strict you are with your candlestick formations. But it's one of these two, which would both be at reversal formations and suggest price actions going to the top side. One of the determining factors would be the third candle finishing, you know, positively in relation to the first, i.e. above 50% of it, or other bullish definition you might use, and this has managed to do so. You have subsequently seen a rejection wick from the try higher. We saw why that was on the smaller time frames, a perfectly reasonable area to find a resistance level, and then the rejection from that hasn't taken you back down to what you found as your most recent support. So if you're to go up again, you know, and repeatedly hit resistance without touching support, it might become brittle. If you want to learn more about technical analysis, take my course, www.technicalanalysis.school, where you get same amounts of teaching there and really good quality information on the course itself, but you also get amazing coaching for free on the Discord. And I say it's free, but it's included in the course. So check it out. And the Discord, of course, you can join the free side of that. So here's the 200 period moving average. This is www.discord.gg/Rocky Outcrop, ROCKYOUT. CROP. Now, there's a 200 period moving average at the top side of this channel at $27. That's a very tempting area to head to. It's also this previous resistance level where we find the A's and C's of this deep crab itself. With really volatile price action, you can expect those big moves. So that looks very positive. If you also then drop back down here to the 4 hour and look at the volatility signature, I mean, it looks like it's about to go crazy with the same strong topside move on the stochastics, not yet done, and the RSI recovering back above the bearish control zone. That could be very positive. We've not completely got the same signal on the daily time frame on the HVP, but we do have it across the rest of our indicators looking good. And recover your own moving average there on RSI. You've got the perfect setup on the stochastics, and you've held the basis line within this formation, having pushed below. That is strong reason then to look to a potential bullish inflection in the short term. And what does that mean? Well, we do like to see a little bit of GME explodey action. So that's what we're looking to, aspiring for. We go, wow, wouldn't that be fantastic? But at the same time, it's all about managing your risk, you know, which you're probably learned by now with your interactions with GME, that the best bang for your buck, and I know who I'm speaking to here, won't be looking to sell it at some mealy-mouthed silly price, i.e. something that's been at for any of the recent past. But, you know, the biggest difference in impacts you can have then is on execution on the entry side. And so these are the days. If you are interested in what's going on, you will be looking at SPY, because it could obviously be, you know, this is not a distinctly different formation itself. I turn off the drawings. It could easily come back down and test this gap at around 398, could easily wick lower around 395, 396. And with SPY is going to be giving us an early signal as to what's going on GameStop. And then SPY itself will probably take a heads up from Bitcoin. 15-minute time frame here, it's going sideways price action. There's not all that much to see on a 15-minute. 4 hour, you're probably aware of the fact that this looks like it could obviously break down into a potential bear flag. You might not be aware of the Rocky Outcrop flash, taking it back to 24.5. You can see obviously this thing holding the basis line of its own downward sloping channel. And if I see this thing, Bitcoin 200 period moving average in a 4 hour back at 23. That would also be this recovery in a 786 or an 886 from this breakdown here, and it start to look like it was doing little bars and being very volatile, and that would be interesting to see. On the daily time frame then, doesn't necessarily look like that bear flag is quite so powerful now when you put it in context of price action, but this isn't the Bitcoin show. Check out the rest of the shows. Sometimes people don't see nowadays because the live ones, you know, they don't show up straight on top of the show. They're down below, and the live shows are very much recommended to people who engage with the channel a lot, so they won't even get shown to most subscribers, which is why I'm doing this video update.
But that was something that investors had been very focused on, as it has been an area that has not been profitable for GE for quite some time. So really,
I'll put it back on there in a minute.
No wonder we are seeing such a strong reaction today, with shares now up.
Getting a little food in me.
Impressive than the year-to-date stories.
I don't use OBV much.
Their 31% gain over the last 12 months, which
But
is something
we can take a
we
look.
frankly can't say about very many other stocks, Nicole.
Yeah, absolutely. So we're watching that closely. Etsy now, is it a more seasonable story? Is it hot during the holidays? Double downgrade now over at Jefferies. Tell us more about Etsy today.
Yeah, Nicole, Etsy to me falls into a very niche space of retail, and I always say that there's definitely a highly discretionary element to Etsy. I've never purchased anything that I needed. It is more of a want-based, company. So for that reason, we are seeing shares fluctuate with consumers tightening right now some of their spending. Jefferies echoing that similar sentiment, double downgrading shares to underperform from buy with a price target of $85, down pretty sizably from their previous price target, which was $150. The analyst said buyers are churning faster and spending less on Etsy, forcing the company's marketing to be higher and putting pressure
for this whole
on its
decline, it held up
overall
pretty
EBITDA.
flat. So
They think that with more limited take rate upside and deteriorating buyer trends, there is downside to consensus estimates from these slowing sales and moderating margin expansion.
Not sure.
They said that Etsy's 70% valuation premium to its internet peers looks unsustainable given some of their below average EBITDA growth as well as margin concern. But
better not break support. It very well could.
Etsy, I was looking at about 18
False breakouts
analysts.
happen
10
often.
do remain bullish, 7 are neutral, and 1
And that
is
will
leaning more
indicate-
bearish. No sells in this name, and the
indicated
average price
most
target
likely
is
by
still
RSI divergence also.
$136.
Looks like it's
Well
bottoming
above
here, maybe
this $85
potentially.
price target we got today from Jefferies.
Previous
So,
support
I do
on the
wanna point out
day.
that while we are seeing shares react lower today, down over 3%, that the street does still lean more neutral to bullish on this name.
I actually close my shorts because I'm like break even on right here, which is a bad
Thank you for
entry.
all of that. Jenny Horn, thank you very much. Markets correspondent here.
Or I'll
on
leave
the
it.
TD
I don't know.
Ameritrade
I'll just
Network.
leave it. Add into it.
Now let's get some insights in the news shaping the markets in person. He
Got
is
that
here.
M pattern.
Jimmy Polcari is with us, senior market strategist at Slate Stone Wealth. Thank you for being here.
Thank you for having me. It's always a pleasure for me to come back to the New York Stock
You're
Exchange.
home. You're home.
I thought you were saying it's got
Tell me a
strong
little bit.
volume,
Look,
GME.
We got our Powell comments.
Up here.
There was a lot of other stuff.
Curious
mixed
if this-
into the soup
this
in
level
the
breaks
last couple
today.
of days,
Right.
But the takeaway is higher.
Projected
for longer.
1940.
Well, the takeaway is not only higher
then also
for
rejected
longer,
down
but then
here,
the
so
takeaway is
got
they
itself
even
into a
raised
tight
it
little
going
range.
from 25 to 50 basis points at the March meeting, the May meeting,
How to
or the
use
June
it?
meeting, right?
Right.
Any one of those we could see a 50 basis point.
I don't really
And
use
I
it
think
as one
that's
of my
what,
indicators.
gave
I
the
try not
market
to
a
use
lot
too
of
many,
its
honestly. I
nervousness
try to
over
keep it pretty
Tuesday and
be
Wednesday
plain,
for
pretty
sure,
simple.
because he clearly opened the door,
like,
and he allowed while he
you know what
tried
I mean?
to assure
Look
everyone
more
that
price
they haven't
action
made a
and
decision
candlesticks.
yet, he left the door open that if
Buys
next
coming
week's
down a little bit
CPI,
more.
tomorrow's NFP, and next week's PPI come out and they're stronger, that he's reserving the right to go reverse course and go from 25 to 50.
Here's the thing too, is that Fed funds futures popped.
Right.
And it's not until it's over 60% that are you likely to get what they're betting on, and now they're betting over 60% on 50 basis points.
Listen,
right?
on Monday it was a 30% chance. Today it's 78% that we're going to get 50 basis points on March 22nd.
There you go.
Which is interesting to me because I thought, a March move from 25 to 50 would scream of desperation and would scream of we're way behind the 8 ball. We got to catch up.
Yeah.
But I think Jay Powell, basically, he did a good job of saying, look, we might have to do this. The market responded Tuesday. It was the worst day. But look, the reaction
Price coming
wasn't
down
even
here.
as negative
Price
as
filling
I
that gap.
suspected it could have been, right? We could have seen
It's
the
low on the
market
day.
really, lose 2 or 3% on
Yeah,
news
low on the
like
day on
that,
SPY.
and it didn't. Which kind of gives me the sense that maybe investors are getting much more comfortable with the idea. They recognize inflation's out of control. All you have to do is go food shopping to recognize it's out of control. And so I think there's a sense of calm, although that doesn't mean that there's no bumps in the road ahead. I think there are.
Here's the other thing too. Part of the beige book really showed some.
Thank you, Ace. Appreciate it, man.
It wasn't all, the inflationary picture that
You're a
we've
legend.
been seeing. I mean, there were parts within the
generosity is
beige book.
unmatched.
I did some notes yesterday, but just showing that.
Gee, let me
working.
think.
It's
Sure.
slowly working, but it's working.
Right, but it's not working fast enough in the areas of the economy that affect you and I. So again, it's food, it's healthcare,
Hello.
it's utilities, it's energy.
I can't remember what he says
Those
here.
are the pieces that every day we go food shopping.
Thank you,
Every day
Jared.
we fill up our car with gas. You're not buying a
Hope you
used
made it
car.
over
You're
your-
not buying a house every day.
your bridge of doom safely
so
today.
It affects us more when it doesn't come down as fast.
Gee.
What do you think about the jobs report tomorrow? Why is it so important? I mean, obviously you'll be watching for wage growth. I always like to look at the labor force participation rate because it makes me feel better when people have jobs.
Right.
But what are we looking for? We got more claims than expected today.
Right. And the thing about tomorrow's number is going to be, are we going to get a surprise to the upside like we had last month?
517,000.
Right, that was 300 more than what the expectation
that was.
Now, I don't suspect it's going to happen because I think last month, part of that was seasonal adjustments. I get it. This month, yesterday's ADP report was stronger than what the estimate called for. So it suggests that maybe tomorrow we're going to get a slightly stronger number. But Jay Powell doesn't want to see that. He wants to see that number come in, right? Unemployment's going to.
I don't know. We'll see. I'm very curious on this 127.
Again, not what he wants to see. He wants to start to see it tick up. And if he doesn't,
this will be multi-decade lows if it breaks it.
Poetic license to go. You know what?
Buys
we need
coming
to put
down.
A little bit more pressure, and we need to go 50 basis points in March. And then that's when I think you'll see a little bit more consternation.
Ace drops
anxiousness
tips like the silent fart. Crop dusting. Kind of weasels his way in, not talking to anyone. Kind of gets next to a crowd of people talking and crop dusts, and then just walks away slowly.
We can count. But in February alone, layoffs in the U.S. stood at 77,000 plus, more
Are
than
these
5
quotes
times
I'm getting?
higher than the 15,000
You don't recognize it?
roughly announced last year.
Which is
where are these coming from? The bulk of the cuts are in technology, retail, financial. You mentioned financial.
Right, financials, right? Because you're
Edging the nut all week.
At the end of the year, early in the new year.
Javier, I still haven't. You said zombie stocks are ripping, and
but what's
Jimmy's
interesting
next.
is that number, it's 5 times higher
What
than
zombie
it typically
stocks?
is. It's yet to show up in the unemployment rate. So what's
You're
happening?
getting quotes on the brokers? I'm not
Paid
sure.
out, so they're not claiming yet, or they're not, they're not on those rolls yet, and that's what he needs to see. He needs to see unemployment start to tick up. Now, the scary part about
GME
it is
bounces on this level again.
estimates to say unemployment has to go to
Might be good for
5%
upside from here.
in order for him to come down.
If
in order
it
for
fails
inflation
that,
to come down to 2%,
yeah,
right?
I think it's
Larry
coming back
Summers
down here,
says it's gonna go
16,
to
25 or
6%
so.
greater in order for it to happen. Now, the other part of this
I'm more
is
bearish
in my
on it,
note
though.
A couple of days ago, and again this morning, I talked about maybe the Fed's
There's
going
the
to
flush.
redefine what the inflation rate target should
Well, to
be.
127
right now
at
it's
least.
2%.
Oh my
But
goodness! If they change that, the credibility issue is going to be back on.
Okay,
on the
so this
forefront.
morning in the Wall Street Journal is Janice Eberly, who was the Assistant Treasury Secretary under Obama, who's now a professor at the
Buys
Kellogg
bouncing a
School
bit
at
here.
Northwestern, who's now the front runner.
We need
for the
GME to
second
show
position,
relative
Will
strength to the
Reagan's
SPY.
position,
Once it starts
which
doing
is
that,
vice chair. And guess what?
I'm
She's
down for the
advocating
long.
for a redefinition of what the CPI should be, and it should be higher.
Thanks for
not
being here,
lower.
Tasty.
So I suspect that we're going to see.
Thanks for your likes too, guys. Appreciate it. Got 33 of them. Well done. Oh, there's the flush.
All right, let's
126. It broke the low. Broke the 127 low.
So listen, the last thing you should do is panic.
Got some
and get
stop losses
anxious, right? But
in
you
there.
can. Let's be honest. There is an
Triggered,
opportunity
certainly.
now to take some money if
Thanks
you're
for the
nervous
likes,
and put it
guys.
in short duration treasuries.
We'll
6
see.
months-
My
6
next
months,
level
you're
is
getting
1160.
5.25%, right? And so if you're nervous over the next couple of months, and there are
But
some
again, we
people
might
that
just get an
are,
intraday
you can
move
do
down
that.
here and back
Otherwise,
up,
I'm taking full
which
advantage
would set up
in
this
names that I
divergence
already
on the
own
RSI on the
that are-
daily.
that are coming under pressure just
If
due to
tomorrow
the
is
not be, well,
higher than
listen,
today,
all the big
basically.
names, 'cause look, I'm also 61.
Look at that.
so
Isn't
I'm in
that crazy?
camp
MACD
where
is still
big,
trying to flip
wonderful
bullish even with
US
this down move.
mega-cap divvy stocks are good for me. So it's Amazon, it's Apple, it's Microsoft, it's IBM, it's JP Morgan, it's Bank of America, it's Telephone, it's Verizon. Those are all names that I own. All
Big
names
ape
are not
fart.
sexy and they're not all very exciting, but they'll offer stability. Now, in addition, on the outside, if I want to
Bid support comes in at $1.50.
C3, which is
Or
symbol
solid, sorry,
AI,
$1.05.
is a name that I like. The cybersecurity names I like, right? CrowdStrike, Palo
I use
Alto, because I
Toys
think
R Us
that's not
for
going away
bellwether.
either, cybersecurity.
Yeah,
And then there's the defense names.
MySpace
because I think
ripping.
I think the defense, not defensive, defense, right?
Aerospace and defense,
right. So
right.
Raytheon, General Dynamics, they're pulling back. So on a pullback, I would be adding adding more money to those because I think defense is going to clearly become an issue as we move forward. If you're worried about
500,000
China,
bid
you're worried
at
about,
2 cents.
Russia and what's going to happen.
Yeah,
What the
good
heck?
list. A good list there, Kenny Polcari. I mean, as
but
you
it
said, the names you can count on.
Right, but it reflects who I am, right? If I were
Right.
30, my list might look different.
Yeah, you
right?
can pick more
Right,
growth
but you'd be
names or
further
things
out
like
the growth
that.
on the risk scale.
Yeah, I get it. It's nice to see you.
It's
Thank
always
you
a
for all
pleasure.
that.
Thanks for
wonderful
having me. And I love
conversation
coming
and
home.
Yeah, nice to have you
Nice
back.
hanging out
Kenny
down here at the
Polcari,
lows.
Senior market strategist, Slate Stonewell. Thanks for being here. All right, plenty more to come on Trading 360. We'll take a look at the spotlight, and we'll look at the S&P.
Asana. Yeah, let's talk about Asana.
U.S. scorecard.
I want to hear about that. Under 150 MC? What are you saying? What's that mean? if some bid support starts to come in here. 126 and 125 are starting to build up a little bit. Oh, 150 million market cap. Yep, 148 million market cap. There you go. Crazy. Let's finish watching this video.
Because this GameStop on this YouTube channel would have found me from GameStop. Whether or not they're still interested in it, I'm not able to determine, but I am, and I think this video in this format will be accessible to you guys. I hope so. Anyway, I'll also be putting it on my Patreon, and then happy to answer questions about it there. If you want to support me on Patreon, that's www.patreon.com/tradespot, and that'd be well good. Thanks. Hit the like button on this one. And now you've seen that, check out this amazing trailer.
A trailer? The heck is this?
What we are witnessing here is the return of Titans.
Or abandoned baby.
Anyways,
it depends how you strict you.
Yeah, he's seeing the bounce. I mean, he's using a lot of fib levels and stuff to give you price targets, and people always love price targets. So that's where the hype is out 35. So yeah, I mean, previous resistance you could see here pretty easily was 35, got shut down. And I like that he's using SPY also to correlate it, because he sees how similar they move. SPY's actually bouncing here a bit. So yeah, I mean, I think he's right. I think we could get a move up, and if we do start to get a move up, that just start breaking resistances. That first one would be 1940, which it rejected pretty heavily the other day. And we would need volume to come in and it to wake back up and be the old GME that we've come to know. We haven't seen that though, so whether it's still there or not, a sleeping giant, I don't know. At this point, it does still looks somewhat bearish to me. I mean, that bounce on this level, as you see here, is a good sign of potential support, but we'll just see if it holds the next day or two. And then the SPY too, like, if it's not going to have a lot of relative strength to the SPY, then I don't see it having, it's not going to have a big move up. Because even when the SPY squeezes, like, sometimes GME doesn't squeeze at all. Like these days, you know, those are huge days on the SPY when Bostic was talking. GME got nothing on that, so it really needs to show relative strength. And then that's when I'm like, all right, time to go long. And then he's not really looking at earnings and like previous chart history as much. I look more at that. So earnings run-ups, drops into earnings, that sort of thing. And even just the earnings actually last March, if we are repeating this pattern where we drop into earnings and we rally out. So I think we could potentially still be on that track. It's just stretched out in a longer time frame. SPY's found a bottom here. I could have closed my shorts, I suppose. That's true, he didn't cuss. Yeah, I mean, we got to get volume to start turning on. And he knows that too, I'm sure. Volume starts turning on and we start seeing relative strength of the SPY, then yeah, it could have turned into a big move. Yesterday the volume was a little bit better. But when we rejected that 1940, I should have known that. I'm kind of upset with myself for not, because I literally was buying calls here. It was looking good, good, good. You had the volume coming in. Like here, yeah. So I was like already buying, and I bought more here, and then just intraday I was like, oh, whatever, this is just normal. But then it broke through VWAP, and then I'm looking back, and I'm like, well, that was that was a rejection of that big level with a big engulfing red candle. And so that's kind of, we've been downtrending since then. Tesla, pretty flat. Bed Bath. 126 was the low now here. So literally broke multi-decade lows just a few minutes ago. Go back and show you when it was at 126 last. Most of you probably weren't even born. This week. The week of July. The last week of July in 1992. Tape cassette, Walkmans were popular. Little fuzzy headphones. At that point, people thought fanny packs were getting kind of lame. Jinkos, were those coming in? Grunge was getting popular. Big baggy pants. Gotta believe. Yeah, earnings should cause a move. Looking back at it though, the moves, it's funny, there's a lot of moves on GME that haven't really happened around earnings. Like earnings doesn't really cause much. But I think it could. Like normal stocks. Yeah, 15 would be a nice, especially if it starts to show support there, like it's bouncing or bottoming. I'm gonna be picking up probably more leaps at 15 or 16 in that range on GME. Brother is bearish. So this did get a lot of volume to push through that level. Now it's using 127 as resistance on this barcode. My oh my.
And didn't show an increase, even though stocks making new lows, you would think it would be making new highs of volatility. Nowhere close. That's a sign that it may be kind of a stall at that point, and at some point it's going to
have a camera mounted up on a ceiling
shorts to take profits, and that's exactly what's happened. So today, this stock, this play, is as much about the strategy. Buying an in-the-money option.
Just was born in Mordor. The first of men of Rohan.
That to buy the shares of stock, 100 shares of stock, is going to cost you $15,500. Whereas, well, $15,400.
Bring the floor is not good at all.
If
we'll see, Javier.
Option, it's going to cost you $2,000. It's still an expensive option, but you have the right.
This might be an intraday wick down here.
That's a very, very
depends on where we close.
Level, in my opinion.
Okay.
Because if you notice,
Micron, which has been a winner year to
this is a lower low than here, and this RSI is much higher. So this could be forming a divergence on the RSI. Or MACD is even still bullish.
Depending on how you look at the numbers. But your thoughts on Micron, which today is around $57.
Right. Well, I'm listening, and I don't hear Ben because we had this stock back in November, December.
I'm listening.
And it did gain 100%. So it's given us a second
turn this guy up. He's a legend.
Here. It's got a double bottom at 50. It's been between 50 and 60 for 9 months. So it's a tighter consolidation of this stock. A breakout of this range targets 70.
Doesn't always move the weekend
So
earnings.
I'm looking at the $50 call. A June $50 call has 3 months of time.
Sometimes it rallies after earnings. So. Sometimes it's in a downtrend and it just
in the money,
bounces.
And if we get to 70,
there's
this
a dump
option gains
into
100%
earnings.
for the second
There's a dump
time.
into earnings. Last two earnings dumped into earnings.
All right.
This rallied into earnings.
Now we're going to hear.
Well, not really. It rallied and then it actually dumped into earnings.
Well, this is a stock
this
that
one
did
dumped
very well
into
in the
earnings.
beginning of January, right? We ran it up. We
this
went
one dumped
sideways,
into earnings.
So we did try
much
and
more,
accept a
much more likely
area
to dump into earnings.
consolidation that was forming up around the 62 level, but
this one dumped into earnings.
Since we started to leak lower,
close historical data would show.
Identical in terms of what we saw as far as Apple, but a little bit more price decay.
This one rallied.
Starting to take
this
out
is the first time it's done it.
That
That was like 2 years
in
ago.
That month of January and on the move up.
2 years ago, we rallied all the way into
losing
earnings.
some of the momentum that we had seen to the upside. I'm not sure if we're going to see follow through. And here you can see exactly what I mean. 50, 54, 57,
Buys
61.
moving
Just
up here a
calling out
bit.
these areas of consolidation on the way up. But look what happens here now as
Just a
we
little too
start to
odd, this
roll
guy.
back over, taking out 57, right back down to this 54 level. So again, invalidating the working assumption that we're trending higher since the beginning of January. Let's take a look at the daily time.
Unless you're
frame
saying the
here,
move is
because
down,
in
but
this
I don't know why go
instance, I
long
wanted
then.
to point out a couple key things that played out here. First and foremost, we were just talking about the run up in terms of the more intraday
All right, I'm
time
gonna
frame. How
pick
it's
up a nat
losing
gas
momentum.
contract here.
That's kind of rolling over here at a key area where we saw a bit of a triple top play out now. This comes after
scaling to
forming
those.
a double top here. So again, on the way
21st
down,
of
you
March,
can
I'm
see some
seeing.
key areas of resistance. This being the most recent, up around 65, and where we're stalling out here. But let
Where
me
are you
just
seeing
show
that
what we
first? They have a
established here in
filing?
terms of these double, these triple tops, and
You're
on the
seeing
way down, how well you
speculated
can see
dates.
migration of value to the downside. This is a stock that's been in a longer term trend lower. So that's what we're talking about in terms of bigger picture ideas here. Yeah, nice run up in January up into the 65 level, but now hitting resistance, and also again just a small blip on the radar in terms of that bigger trend to the downside. So let's take a quick look in terms of what's going on as far as the 50 to 200 still struggling
SPY's
to
gonna
get
come
above
down,
the
I
50
think.
to 200 day moving average, and you can see kind of
Just
in the
toying
middle
around
of
up
that
here for a
range
bit.
now. Any weakness here
Look at
opens
this
up the
daily
door for a
candle. That's
retest
not
of
good
lower
looking
extreme
either.
48,
Bearish.
but yeah, just kind of failed, it seems like, at that key area around 65. So a nice run up, but struggling to add to those gains that we've seen this year.
I got 2 contracts on that gas.
And when you talked about the 100% there, Alan, what did you mean exactly? I mean, at what point were you seeing? I saw the low of 48 in December. What were you looking at?
GME's at 1796.
We did this stock in
Oh.
in November on this show, and we had the right option gained 100%. So a modest move in underlying stock was still a pretty healthy move. You know, it
Guys,
moved up.
pumped.
The
I love
option
it.
Gained 100%. That's what this is
Option
about.
gain of
This is
100%.
in this stock to be long from 50. I've got no problems with that level. That's a solid level considering this stock was at 100 not long ago. So the risk reward is there. The macro picture is there. There's a lot of positives here.
MSN.
We've got plenty of
Yeah, they're
time.
just
a
speculating
modest
on
move to
the
70.
date.
This
It's not
option
been
would gain
announced yet, so
100% for a second time. Now, I'm not going to put words in his mouth, but I'm going to say here, Ben, you know that a bull flag, is a continuation pattern.
you know, Ben.
Oh boy, I gotta get to Snap. Ben, give me 10 seconds, Ben.
Well, what I look at is a little bit more of a longer-term picture, I think, than Alan does. So again, what I'm seeing is more a trend environment to the downside, bigger picture, a failed retest of that key area. So yeah, I mean, if we build momentum to the upside here, that could reverse the trend. But at this point, I think it's still intact.
Okay, let's get to Snap, Snapchat, Snap Inc.
This
Snap
guy.
year to date up 20.
You know that bull flag.
Is that
You
right?
know. What were they even
Year
looking
to
at?
date up
Micron?
23%. Alan Nuckman tells
Ben,
us
you know about bull flags.
Well, again, it's the same setup we talked about here. Notice started with a very expensive stock, then there was a medium-sized stock. Now, this is a cheaper stock as far as the price goes. So you
Eyes
can
coming
do
down.
more things with the option strategy. I'm going out to September because it's a cheaper option, so I can buy myself more time, 6 months of time. But the same thing we see here, bullish divergence was happened on those October lows. It made new lows, but not new highs in implied volatility. So it's been coiling between 750 and 15, a very tight coil here for 9 months. A breakout target is 22.50, and most importantly, is there's a gap up at $20. So I'm looking at the $7 call.
New low?
And the
No.
low is 733.
No
or
new
something.
low, Jim.
A $7
Oh
call,
yeah, I guess if you've been around.
is
Yep, we
$4
broke
in
through
the
that
money. It's trading for
127.
about 5 right now. 6 months of time.
Got some volume
And
picking
if
up
this
though
stock
here,
does
a
fill
little
that
bit.
gap, this option's getting
SPY's coming down.
150%.
I've bought BBY.
And if, we're also seeing this volatility.
Got a ton of
each
exposure
time
to
we get
BBY.
Headlines from legislation or regulation against
SPY's
TikTok.
moving down here
That's
more,
good for
starting to fill this
Snap.
gap.
Ben, I know you've watched this.
I've got 4
volatility on
contracts
this
this
name.
short. I'm
Take us
content
through
with
the
that for now.
technicals.
Yeah, there has been a significant amount of volatility as of recent. Not so much the case, though, throughout that rally that we saw end of December, January, it really came into play. You can see in the end of
I've exposed
January.
myself.
And then, well, since it hasn't really
I think
yet, but we're still in a wide range. Alan
we'll see. This might be an intraday dip, though.
A $9 level.
If we close above this
$7.50, I thought it was
127 level, that
$9,
would
but
be
again,
pretty good.
You can
that
see
being the low.
migration of value to the upside. You can see well-defined high conviction, and then it just kind of lost that
Short
momentum.
interest
Right?
come out today? I'm not sure when it comes out.
11, taking a step back, you'll see.
I feel like we pretty recently had it, so
well-defined
maybe
upper,
not.
Pretty well-defined lower extreme, but as long as we hold above 850, 840, there's some momentum to the upside here. That's for sure. Let's step away from this intraday look, the hourly, and just show you that it's just a snapshot, a small little blip on the radar in terms of what we've seen as far as the bigger picture, because Snap has been crackling and popping along the way down here from 83 to, well, as it's hanging out around 11, but I went ahead and identified some areas of consolidation. In this instance, you can see
we'll be at
two, well-defined trend,
the 2 range, I don't think, before
in fact, of consolidation, this wide range that we're forming right now since July.
It's going to be a bigger move the further we come down, of course.
So around, again, this $11 level. Let's just show you where things stand in terms of the 50 to 200-day moving average, because you can see that, well, some of that recent volatility has us back above those.
The TD news crew is always doing, they're always doing something. Those TD crews always up to something.
Showing a lot of enthusiasm to the upside relative to what we saw.
100 million shares out of 115 million.
In my kind of bigger picture view here, I see this longer term trend that continues to play out. Recent failed the test of the upper extreme.
148 million market cap right now.
We retest the lower extreme here around the $7.
Yeah, I mean, and that's some chart. I mean, when you look at that long-term chart, Ben, you really tell the picture of Snap. Alan, final thoughts, maybe big picture ahead of the Fed?
Well, the Fed, and I listened to your last guest, you know, the destination hasn't changed. How we get there, do we do 25 here, 50 there? You know, that's going to be the bump in the road. And the destination has always been the same, and that's what the markets are telling us. We've top out at 5 3/4 in short-term rates. You know, we know that.
5
it's just
3/4
when is
now?
that going to happen? Maybe that's been shifted forward from May to, you know, June or whatever. But we know the destination, and then rates decline as we go out into the future, 24, 25. That's what the market's telling us. So we're almost finished with this nonsense, and the
Still
Fed
green on
has done
mine.
an amazing job getting the results we wanted. So I want to mention that, but I also want to mention the strategy that we talked about today. We had Weight Watchers back here in, what was it, January?
Did he say that?
The January 12th, we mentioned it. And that's a stock that did the same thing we talked about. It coiled.
Who cares? Snap,
it had
crackle,
bullish
pop.
divergence. It had leverage buying, and it had a breakout. So those options on Tuesday gained 100%. So that's the strategy.
This dude's doing all these
That's
100% option
for
gainers.
success with these limited risk in the money options on stocks that had been, you know, beaten down, gives you much
Flip green on a red day. That's
reward
crazy.
and great payoff with these options.
Right.
Right.
Alan Nuckman, great to see you. Thank you so much. And of course, our own Ben Lichtenstein with the charts. Alan Nuckman, Chief
That
Market
is
Strategist,
the legend.
BullseyeOption.com, and Ben Lichtenstein.
Tune into him more.
Gentlemen. Okay.
Get me fired up.
We're going to spotlight the market's performance in 2022.
All these 100% options everywhere.
At S&P Dow Jones U.S. scorecard. What groups outperformed, underperformed? Why does it matter? Much more coming up.
More coming up. Yeah. BlackRock investment chief Rick Ryder, is his name really Rick Ryder, has said central bankers were willing to push the economy into recession after being too lax on inflation last year. Saudi Arabia seeks U.S. security pledges. Right, Saudis seeking security guarantees from U.S. in normalization talks with Israel. Saudis want written assurances U.S. will come to kingdom's aid if attacked. Riyadh seeking American help with civilian nuclear program. Citigroup's chief financial officer has said that the bank is starting to see signs of weakness in consumer debt servicing. Credit Suisse regulatory compliance head Julian Gooding is leaving as part of wider bank overhaul. Gooding's departure unrelated to Credit Suisse's annual report postponement. Gooding declines to comment when contacted by Reuters. The number of unprofitable firms is elevated in the U.S. Almost a third of Russell 3000 firms struggle to make money. Profitable firms. Hmm. Tesla's hanging out. Still pretty much flat from open. SPY really hasn't done much either. Hasn't even had the balls to fill the gap. SPY. GME down 1%. $8,000 shares at 131. You just picked up 8,000 shares, Christopher? No, you've had 8,000 shares. Oh, you must have picked those up today. 131 we just hit. Yeah, good thing you sold Silvergate. I think we're in a recession, Tenzin. A couple days ago. Nice. Now, with the IV being so high, you could sell calls on that. And it's a bit of a hedge to if it stays flat or goes down. But if it starts to rally, you're going to limit your upside. Yeah, we're in a recession. Soon we'll be in depression. That gas looks like it's building a bear flag, but it is on that support. So, would I get 2 contracts or just 1? I got 2. I'll get more if it keeps coming down. I'd like to get 5. Please be bottom BBBY. Look at that. Bounced up above 127. Just like that. Bounced 1 point. That's all you need. That's all you need. And now we're getting that intraday move. I figured it'd come down a little more, but that's all it takes. Made a new low here, and our RSI is higher. Now, if it'll be confirmed if tomorrow we're a little bit higher. So that this will be signifying some sort of inverted peak there. Who would sell here? Who would do that? There's no sellers, you guys. You're thinking that supply and demand dictate the price. Don't be so naive. $1,000 in options expiring tomorrow at the money. I probably sold them to him. Are they 1.5s or 2? Because I probably sold them to him. Here's Silvergate.
It's actually very crucial for a lot of big investors.
150,
They
yeah.
want to shake
I
up
sold some of
the
those.
crypto exchanges as well. So we are continuing to see this fallout from FTX. We are seeing the broader financials down. It's not only just because of this news, but there's some other financial news that is out there that is impacting the broader marketplace in itself. But a very interesting development. We have seen this kind of slow train moving over time. It seems like it's starting to come into the station here, Nicole.
Station. All right, thank you for that, Kevin Green. A good, important look there. Senior markets correspondent here.
I'm actually surprised this thing isn't down way more.
It is time to spotlight the 2022.
They announced they're going bankrupt, right? Like that's pretty much what they said.
Now, our friends over at S&P
went down 27%. It had a bigger drop the other day when it.
Anu Ganti is with us, Senior Director
I
of
don't remember
Index
what it
Investment
said.
Strategy. Thank you for being with us. So, as we look at this, I see that
This thing might start to rally now that they announced bankruptcy.
there was a positive side,
Probably
the
a good
lowest
buy.
underperformance
Get the gap
rate
fill.
since 2009. I'd love to
Just
hear
kidding, just
what
kidding,
is the
but
takeaway from 2022.
seriously though, it might.
'Cause, I mean, a lot of folks felt pretty crummy.
Sure, you're right. You know,
20
we
and
saw
5
that 51% of large cap equity managers underperformed in 2022.
What leveraged?
This was the best
What you talking about, Furs?
that we saw since 2009.
Thanks for your thumbs up,
like
guys.
you said. It was the 4th best
Appreciate
across
it.
more than 2 decades.
BBY did just wick down so far to a new low.
Say that
Got 36 of them.
was a very
Done.
unusual year for a couple of reasons. One is we saw declining
Plus, someone arguing that
markets
GME has
across
no
the
price
board.
discovery claim
We
doesn't
saw
have it.
losses in equities. We saw losses in
Yeah, we
fixed
watched that
income.
video
There
yesterday
weren't
actually
really
on stream.
places to hide,
Days.
but there may have been a couple of silver linings, and one
For
them
sure,
is
I
the
don't think it's
potential,
price discovery
potentially
from supply and
beneficial
demand and
volatility environment. So if you think about dispersion or the spread of
change will
returns
push
in
it
an
higher.
index, The greater that spread is, the greater
That's
the
what I'm saying.
opportunity
Bankruptcy's
that
priced in on
values
SI.
and
It's
stocks
time to buy
and
it.
that's exactly what we saw play out in 2022. Another trend for you is just all the performance
I don't remember
reversals that we
anything.
saw. So think about
Banks
the
can't go
outperformance
bankrupt.
of smaller caps, the
Bankrupt.
outperformance of
Can't happen.
value, also the underperformance of mega caps in particular may have
They're
aided
just
as well
closing
as it was
businesses.
tougher to
They're
overweight those
liquidating,
mega cap names.
right?
So
Bankruptcy
all
might be
these
better.
things
Chapter
came
11.
together in 2022, which makes it a very interesting year.
Tell me about those that were actively
What are you investing
managed.
in?
Was the point
Spurs?
that if it was actively managed, it did better?
Yeah, no, it's a good question. And like I said, if you look within the large cap space, we saw that 51%
There's a little bounce on
of
Bed
large
Bath.
cap active equity managers underperformed. But I would
Spies
like
at
to
a new
caveat
low
that
here.
as you extend the time horizon,
Is
so
this
we
girl
look
in a
at this
stairwell?
on a 1-year basis, 5 years, 10 years, all the way out to 20 years. As you extend it over a 20-year horizon, typically underperformance rates tend to get worse. So yes, 51% underperformed
Yeah,
over a
liquidation.
1-year period,
It's almost
relatively better
worse.
than what we last saw. But if you look over a 20-year period,
Yeah,
now
bankruptcy news would probably be
95%
bullish.
of them underperformed, which I think indicates the ability or the lack of ability
You can't
to
trade
maintain
SI?
persistence. So if I
Not even
outperform
delisted.
this year, can I do it
Still
next
here, still
year?
trading.
Can I do it the following year?
It's
and
at
so
a
forth.
higher
So
market
that's
cap
why
than
we
BBY
regularly
probably.
track this every year.
No, it's close. 113 million market
Tell me
cap.
about the world of fixed income. What did we learn there?
BBBY is at 150.
Interesting because it was generally
And
a
they just
mixed
got
set of
125
results.
million yesterday.
We saw some bright spots within the core plus space, within general investment grade. We saw
How
more
would BBY
pain
bankruptcy be
points
bullish?
within the
I was saying
government
SI.
bond space. So it was a
But
mixed
it could
bag,
be. They're
essentially. And then if you look
restructuring,
at within the equity
restructuring their
space,
debt,
we saw some pockets of
renegotiating,
opportunity within small cap core,
rebuilding. I mean, look at
small
like
cap
Hertz
value. So
coming back
that,
from
was
bankruptcy,
not
way
surprising
better.
given
Now you
the
can
outperformance
rent a
of
Tesla from
small
Hertz.
caps and the outperformance of value that we saw.
As you look over time, I mean, you mentioned 20 years. There's a sentence here over a 15-year horizon. What's the takeaway?
Contacted support
other than
with
noting what won, what lost, is there anything that we can use from what we've seen in the last year or two or three to sort of guide our thoughts for an investment strategy?
BBBY kind of gapping up here a little bit. Now it's at 129.
I think the key takeaway is that outperforming the benchmark is tough. And there are periods when you tend to see
Setting up a bear
greater
flag here at the
outperformance,
lows.
like we saw in 2022 with the declining
girl-
market that we saw, with the rising dispersion that
She's
we
totally
got,
sitting on
with
a
the
stairwell.
underperformance of the mega
Look at
caps.
this.
So there were definitely fewer excuses, I would say, last year. But over the long term, as I point out, if you take it out to say 15 years, 20 years, over the period that we look at in our SPIVA scorecard, that's where it really gets tough in terms of sustaining that outperformance. And we
They
see
should
this
have me
within
on this
equities,
show.
we see this within fixed income. By
You
the
sit on
way,
a
we
beach with a
also
pina
produced
colada.
scorecard across regions globally to get that global focus. And the themes, the results are remarkably consistent over the long term. That beating the benchmark is tough.
Right. Anu Gandhi, thank you
She's
so
pretty
much.
articulate for being
Senior Director,
ESL.
Index Investment Strategy, S&P Dow Jones Indices. Thank you. Coming up next,
She's
the
in her
December
apartment stairwell.
on the move after
gotta
its
be.
earnings. We'll have all the details. George Sillis is standing by and find out what the street is bullish on.
Sarah? Ooh, that's some loud yes. Alright. BY's getting its bounce. GME's down 1%. Market's pretty mellow today. Slowly edging down, maybe. I thought eToro was international. eToro is like a crypto exchange or brokerage, right? That's kind of where it started. Send her on our way. Yeah, it is kind of bouncing. SPY's bouncing up here too. Still bullish? What do you mean? What time frame? I mean, today, yeah, it's playing out like I was saying so far with the RSI divergence. We won't know until tomorrow if it actually happens. The close, it'll have to be close of tomorrow. But so far it looks good. Looks like a support's in. But it's too soon to really tell. Still at these prices. Yeah, broke multi-decade low. My next pair. We broke the 127, which was set in January, which hadn't been seen since 1992. We broke that today. Nat gas flushed through there. Bear flag did end up being legitimate. So I'll look for some more contracts here. Next level. Way down here. Pretty bearish short term, actually. GME volume spiking? What are you talking about, Javier? You're not the only one, Furs. You're not the only one. If you look on Webull, it shows bullish. Oh, yeah. It's showing that engulfing candle. Is that what you're talking about? That bullish indicator? That engulfing daily candle that we were hyped on, this one. Oh, now it's showing moving average. What? What happened to the engulfing candle? Why did they disappear that? Yeah, it's just showing that it's crossing. Eyes bouncing up here. He's trying to keep me on my toes, man. Trying to hype something that's not happening.
Also did the same thing
Sana,
in
I want to hear about
24
this.
from 13. Also maintains a neutral rating because of the fact that you have to consider the market environment we're in. It's still tenuous at best, especially with growth companies, and that's what this company is.
Dropping way too slow?
And we know that
Not drop,
there's
it's
a lot of
going up.
competition out there from the risk-free rate of return. In other words,
Sarah?
one-year treasury rates right now are printing about 5%, and that's risk-free. So it's improving from an internal standpoint in terms of its business and its optimization of equity capital, but it's still earning a negative earnings yield. So that's why effectively you're seeing these analysts raise their targets but not their ratings. But the stock, which has a high short interest of about 18% of the free float, is that's quite large, and that's why I think we're seeing this this additional push up today, higher over 20%.
Yeah, they're saying that the path of profitability is improving, which you're noting there.
Yes.
The stock has been jumping, but now I think, as you noted,
I don't even know what they do.
are adjusting their price targets just to go with where it's currently trading and not necessarily saying
Correct.
buy or outperform. That being said, for this mid-cap name, what would you do when it comes to a trade?
Yeah, so looking at this, Nicole,
Sell calls from the
we have to
pumped IV.
consider that the long-term trend is still relatively weak, even though the year-to-date trend is higher. But with things that are going on with
$4 billion
volatility
market
and
cap.
interest rates and
Wow.
Fed policy, there could be some volatility
Make it make
heightened
sense.
into the marketplace moving into the next 3 to 6 weeks or so. But with that said, we can still
I'm not
harvest some yield here
realistic.
because the premiums for put options are still rich or relatively robust. So what we can do is play
We're
a
not being
neutral
a fly.
bullish trade by selling basically an April $20 cash secured put. Because the stock is trading at a low price, spreads are relatively difficult to structure. So we're going to sell a put outright. And if you sell that put of the $20 strike, you can earn about $1.50 a share, or $150 of credit in credit per contract. And that's effectively about a 7.5% yield to the strike price of $20. And what's nice about this trade is that you're not at risk of losing money because your break-even price is down to $18.50. That's if you're assigned the shares at $20. And of course, you would put this trade on if you're willing and able to buy the shares at $20. But at the same time, you know,
Like
the
a similar
stock can move at
margins, people still buying.
$3.50 to the downside, and that's about 16%
Cost
of
me
the
an
current
ETF, I don't
price,
know.
and you're still not at risk of loss.
That's
So
me,
your break
Kevin.
even again is about 16% of the downside. So the whole sweet spot here is if the stock trades at or above $20, and if that's the case
Thoughts on
between now
BBY
and
gaps to
53
the downside,
days,
upside? There are
it'll
no
earn
gaps
you
to the downside. They've all been
0.27%
filled.
yield.
Upside
All right,
gaps.
thank you for that.
I
Good luck
don't
at Asana
think they'll
today.
all get filled.
George Sillis, thank you. Always with our disruptors each day.
I think they could all get filled if you don't have a time frame.
JD.com. Chinese tech names slipping about 10%
You know,
today.
if this company's
after
here in
its earnings.
5 or
In fact,
10
over
years,
the
like,
last
yeah, I
3
think they
months,
could
it's
fill to
down
the
about
upside.
30%.
All of them.
All the details next on Trading 360.
If you're like looking at just this year, I think we could fill. I think we could fill this 1152 gap, and I mean, I think we could fill all of them this year, but without a crazy catalyst. I think we could maybe fill this gap. But yeah, no more gaps at downside. Not that I know of, at least. I have Webull turned on so it shows gaps, as you just saw. So if you look on a really short time frame, there might be like tiny ones. But we just hit multi-decade lows. So we just hit lows from 1992. So if there was any gaps in 1992, we've probably filled most of them. Yeah, I've been back here and looked for gaps and I haven't seen any. On the daily time frame. If you shorten the time frame up, maybe there's little ones, but we're almost all-time low, so it's not even. Yeah, it's like not even. We're right here. This is IPO, 1982. Right here. So this is why buy and hold works, but there's sometimes a reason to sell. Or get into something that hopefully will pay dividends eventually. Selling soap for cyborg humans. Gap just filled. Yep. Exactly. No time frame. We're filling all those gaps, baby. Burrs, you might want to get that checked out. That gas had a little bounce there.
A double beat. The takeaways were just not good enough here. What stood out to you in the report?
Yeah, I agree. You know, it's interesting. I mean, revenue missed ever so slightly, though the company beat on adjusted net income as well as adjusted EPS. I think the main concern for investors, why we're seeing the stock off in a very, very dramatic fashion, despite a great, very strong Q4, despite the challenges after zero COVID in China, is due to the real lack of clarity on the 2023 outlook, as well as the company has announced a discount, a subsidy program, which is leading to concerns about a price war amongst e-commerce players such as Alibaba and Pinduoduo.
And so when you look at this, Leopold, what stands out to you?
Yeah, I agree. I agree with that because I think the story is also their margins, right? I mean, we have this 10 billion won worth of subsidies, and they're even offering double compensation to customers if they can find something cheaper on other sites. Now, is this
Double
a change
compensation?
in strategy? Usually, JD.com has competed more on reliability, quality of service, trustworthiness, but now are they getting, like your other guest said, into more of a price war, which they haven't usually competed on price? Also,
Yeah, BY's traded at $80.
Their growth. Remember, they 7% revenue growth or something, but last year it was 23%. So we're also seeing a deceleration in their rate of growth. So we'll have to see how that all impacts their margins going forward. Now, on the positive side, they are getting out of some businesses, like their Southeast Asian businesses. They're pulling back on that. And of course, they did start a dividend, which is something new, but I think there is a lot of, there's no clarity about how they're going to compete going forward. I think that's the issue, exactly.
Yeah, and both of you have noted that the outlook for 2023 seems somewhat unclear in a tough competitive environment. Brendan, within your notes,
Yeah, it might be good as we be.
Things such as cash flow, very healthy
Probably take some time
generated by the business.
for this to shake out, though.
And my question to you is, while they didn't provide this clear outlook, do you think that
probably get down here to the support 127
that has some, has a beat, has some positive aspects? Could it surprise us now going forward?
Yeah, that's crazy. It's 7x
since
2020.
You're gonna wait to see the surprise
that year.
Yeah, I think to Lee's point, it's very surprising that the company didn't pound the table about the China reopening, the opportunity they have, the consumer coming back. That's something we've heard from some of their competitors on their calls. So I think in general, 2023 will be the year of the consumer for China's economy. And it's just very surprising that JD didn't do a better job in articulating the opportunity.
His volume is off. Where are you, Javier?
Over the course of this
Stuff
year.
Your stupid volume spikes in a
It
sack.
certainly seems that the negatives are piling on in a way that those
things about to flush through this support too.
Didn't anticipate, because this was a $68
Buy
stock
some puts.
not that long ago. Today at 41 bucks. You mentioned exiting South Asian e-commerce for now. That was one thing. The lingering regulatory environment, that always seems to be a question for some of these Chinese stocks. And I've had guests who come on and invest in everything but China, and others who love it. Lee, what is, you look at these negatives, you were looking also at the major moving averages, and the technicals don't look good.
No, the technicals are quite poor. Actually, right now we are kind of testing support around 42. Actually, the number I'm looking at here is
all right. I got some puts on GME.
There at 41.63. We're at 41.66 right now. That gets taken out.
March.
The next
just
major area of support is way down at 32. That's another drop.
Yeah.
So I think we need some signs of improvement on a technical basis before you might step in here.
Yeah, I mean, the low was 33 back in October, so I see what you're talking about. You break down below these levels of 41.40, then you have this sort of cliff. Quick thought, Brendan, just on the big picture of investing in Chinese stocks.
Yeah, last one was it's good.
You like better at this
free
point, or do you
cash
stay
flow,
away from the
cash flow positive. Free cash flow positive.
I think consumption is a trend for China this year, and U.S.
Positive
investors
cash
will
flow.
benefit from great U.S. multinationals.
So we had a little
China,
pop, but it was in a downtrend already.
Apples,
So
Nikes and Starbucks.
This was a good sign that it was broken.
At the same time, we do
or
like
not broken.
the
It was fixed.
E-commerce space, Alibaba.
SPY's coming down. That's part of my bearishness on GME.
Believe that
hasn't shown relative strength. Hasn't had volume.
I
think we'll get a dump into earnings
for 2023, and I think ultimately. If they could do that earnings call over again, I just think they could have pounded the table about the opportunity set in front of them and allayed some of the worries about the potential discounting, and unfortunately they didn't.
Next lot better than Berkshire? I don't know. This covers a lot more than just Berkshire, though, doesn't it?
Very much. A good look at the Chinese stocks and JD in particular. That's going to do it for us here on Trading 360. I'm Nicole Petalides. Glad you're with me every single weekday, 11 a.m.
This is taking a dump, man.
Eastern time. Keep it right here. Fast Market is next.
Dude. Yeah, cash flow positive is very bullish. So they don't have any debt. They've got almost $1 billion in the cash. They've got over $1 billion in inventory, and now they're free cash flow positive. So it's a good long-term play. You know, they're well equipped for the recession here. SPY is coming down here a bit. That gas is now bouncing. Yeah, it has weird flushes like that. Very sporadic natural gas. No dry powder not till next month. Missed the dip on GME. I mean, a rumor is a possibility. Sure, anything's possible. It's a possibility. I don't know how likely, but when Lambo BBBY, you have to put the ticker in. Nat gas with pretty big bounce here. That's low of the day there. GME's kind of right at that level. If it breaks here, I think we'll probably see a bigger move down today. Maybe even like 17. Make it make sense. Why so low? I can't make it make sense. Can't do it. 17 isn't far from 15. How true that is. Tesla's about to give it up too. It's 180. Once that's broken, that's a big level actually on Tesla. Even back here? No. Next stop 160, 170? Yeah, around 170. By tens. Buy low of the day, filled the gap. Shoulda, woulda, coulda got more contracts. Oh well. Oil starting to fall off. Dollar hasn't started rallying yet though. We'll see if this starts to pick up. Buy's pretty weak here though. Definitely room to the downside. Be my next level, 398.18. It broke that 400. Got these levels from over here. Excuse me. Whoa, big flush. Big sell off there. Done. Yeah, I'll average into Tesla at like 68. Provide tax plan proposal. 25% minimum tax on rich. Thank you. Tesla's about to break that 180. SPY bounced right on that 398 level. Oh, look at that flush on Tesla. See that? Oof. That's a big move on the SPY. GME will catch up. Let me see. Biden budget projects annual deficits over 1 trillion each year through 2033. Biden budget projects Oh, his whole budget thing just came out. That's right. Budget projects annual deficits between 4.6% and 6.8% of GDP. Yeah, maybe. This could be from that. White House rows. Inflation remains too high, but seeing some signs it is gradually easing. Joe Biden, new budget proposes raises taxes on Americans earning more than $400,000 a year. Proposal could potentially affect 1.8% of taxpayers, nearly 2.5 million people per week, or per news week. 30-year fixed rate mortgages 6.73% March 9 week versus 6.65% prior week. So 30-year fixed is going up. Biden budget projects U.S. debt rising from 97% of GDP in 2022 to 109.8% in 2033. Budget forecasts annual GDP growth of 1.5%. Unemployment at 4.6% and CPI inflation falling to 2.4%. U.S. Federal Reserve U.S. household net worth rose to $141 trillion in Q4. In a non-religious way. Yeah, that might have been the catalyst for this sell-off. Tesla's giving it up here. Rivian's holding on. Dollar's starting to rally a little bit now. GME hasn't flushed through that support yet. Bed Bath holding on up here at 128.5. Almost back to break even.
Not things that I ever actually need, but you know,
oh,
it
this
does
isn't
have
their
a
studio.
good purpose. Like I feel like I've used it a lot for personalized items. It's great for gifts. So there is that seasonality element, though, to also consider here. We are past the holidays. There's no major holiday now in sight, so that's another concern. This is a name that really surged during, I believe it was the 2022 fourth quarter when everyone was home, everyone was buying around Christmas time, and it saw huge growth. We've never been able to see that growth really compare.
The Biden budget
so this
had that effect on the market.
Adjusting for that. This name now seeing that adjustment also.
They're just looking for any catalyst, honestly.
Price is matching a lot of the sentiment we're seeing from analysts, but the analysts do still lean more bullish on this name.
No holidays. What about St. Patrick's Day, Jenny?
You're Patrick's
Day
is a big one.
St. Patrick's Day.
No, I'm Irish.
Happy St. Patrick's Day.
Well, you forgot it already. That's not surprising, though. All
You've got a green light behind you, girl.
Markets correspondent here on the network, breaking down the downturn here in Etsy on the double downgrade. But now let's bring in Joe Mazzola, Director of Trading and Education at Charles Schwab. Joe, I wanted to get your take here.
Oh, Joe.
Are you surprised that we're starting to see some weakness here after that jobless claims number came out? That we saw a little bump in equities?
I mean, I think we're in a holding pattern until we get tomorrow, the non-farm payrolls number. And then, hey, just as important, I think, is Tuesday's CPI. Those are the last two real big data points, guys, before the Fed meeting on the 21st and 22nd. And remember, next week, all the Fed governors are kind of in silence mode. You're not going to hear anybody talking in advance of their decision the following week. So the markets are going to have to interpret the data. And I just think right now, just like we've seen for a while now, the markets are range bound and they're waiting for that next big data point.
Yeah, and the CME FedWatch tool has got the probability of a 50 basis point hike up to about 76% at this point, Kevin.
Whoa.
Maybe it's locked in.
That's higher than I thought it would be, frankly.
I don't think they priced that in.
Makes a great point here. We're waiting for non-farm payrolls. Goldman Sachs came out with something. If it's above 500,000, S&P is going to fall over 3%. If it's between 250 and 500,000 added, which would be above expectations, market's going to go down 2%. I mean, these forecasts are crazy at this point, but it's all about the data moving forward.
Well, if you look at some of the consensus numbers, there are some alarms there. Like, how about this? The year-over-year wages data is expected to go from 4.4 to 4.7%. So that would be alarming if that happens. So far this week, other than jobless claims, the data has come out stronger than expected on the labor market. So some of these numbers, if it hits higher than this, like private payrolls, they're expected about 213,000. Well, ADP was 242.
I guess the budget was today.
So if some of these numbers come in a little warmer, you could get, a kind of, basically a confirmation that Jerome Powell may have to go 50 basis points. If it's 75%,
Nat gas, green now, almost back up to VWAP. Crazy.
I agree with him. Joe mentioned there's still data points, CPI and PPI on the 14th and 15th. That's important. Retail sales will come out then as well.
On Tuesday.
But then you go into the quiet period, and then it's pure speculation. Things are going to get interesting here.
Yeah, Joe, we talked about the consumer earlier. It's been supporting the economy, right? We expected a bigger slowdown than we saw as far as GDP numbers. And we just talked about Etsy getting double downgraded. Is that one of the caveats here, is that the service industry and the inflationary pressures in that sector are still robust at this point? Is that going to be the next leg to crack that they, the Fed can basically pull back and say, okay, maybe we do need to kind of stop
I'll watch them.
And look at the lag effects?
I'll cut out.
Yeah, but it's going to take
If
time.
it bounces here, then I'll cut out.
We're talking about this is that
I think it's going to flush through here. Actually, it already kind of started.
Sector, we've seen them for a while now, right? It's just, it takes time before that data makes its way. And owner-occupied rents, all that housing data that is so critical in that services number that you're mentioning, that it's not something you're going to see within the next couple months. It's probably at least another 6 to 9 months before their data really hits.
Oh, okay.
And if the Fed truly is data dependent, my assumption is that they anticipate that would happen. But as we're seeing just in the last couple months here, anticipation is a bit of a fool's errand, because some of the disinflation that we saw in the summer leading into the end of 22
bouncing a little bit here.
I mean, look at used car
pops. I think I'm up on my puts.
They're starting to pick up again, and so
not
that's
up on
kind of
them.
feeding back in. We've got that move down. But here's
Rivian
the thing.
and Tessa I'm up on.
The data that we
That
had
is
in
neat.
the end of 22 was going up against, you could see that disinflation data because of what it was going up against in 21. Now we're starting with a lower bar. So it's going to take even more and more to kind of continue to push those numbers down, because we are starting to see
This thing looks like it wants to just
disinflation. If it levels off and starts to pick back up, it makes the Fed's job that much tougher.
Yeah, and we heard some commentary, from some of the airlines this week. Kev, airline prices are high. People are still buying them.
Yeah.
American Express buying back, $120 million worth of stock at this point. Raise their dividend 15%. So the credit card companies are still doing well, even though goods have slowed down as far as sales goes to consumers. How long can the consumer last, and how long can the consumer continue to support this economy, because unemployment is still low at this point?
Yeah, I mean, the consumer is showing small bits of cracking, but it's still strong. And like I said, I think that retail sales number is still an important number that we get on the 15th. But let's look at the week so far, right? Jerome Powell spoke Tuesday and Wednesday. You've got the dollar significantly higher
down
from when he started speaking.
That's kind of back where it was.
The market down a little over 1%, between 1 and 1.4%. The terminal rate is now up to 5.65, 5.7, right in that range there. The chances of the 50 basis point move is spiked. So the market hasn't fared that well this week with what Jerome Powell said. And his normal dovish tone really didn't show up as dovish this week, because an honest assessment of the overall economy is stronger than we'd like it to be.
Yeah, and Joe, to Kevin's point, some sectors aren't doing well. Russell 2000 down nearly 2% so far this week, down 1% today. We're seeing the financials in there crack. 10-year yield, hovering just below 4%. What is this a warning sign for the overall market that small caps are taking a hit here?
Yeah, small caps
People buy more, they said.
So, yeah, I would absolutely look at that as a signal. Here's my biggest takeaway, and I think we mentioned this a little bit last week. But just
be patient on BBY.
A 5% two-year
not move
yield
up
and a 6% CPI
for a
doesn't
month
really
or two.
support a current market multiple of around 19.5, 20 times earnings. I mean, it comes back to that for me when I look at where we're at right now versus where we could go. Now, earnings season's over basically for the most part. I guess except for the Oracle example we're going to give here at the end of our segment here, but. Earnings weren't as bad as people expected, but they were still down 2 or 3% year over year, right? So it goes to show that multiples are starting to expand back up to that 19.5, 20 level. But we're also looking at a 2-year 5% yield, and then also a 6% CPI. Those are really high numbers. So something's got to give at some point. Small caps might be that signal that the market is starting to kind of
break even on Tesla's right here.
Pressure.
Yeah, and if you look at the Russell, Kevin's got a chart up here for us, but
of the Russell and the financials of the Russell in particular, and it is red across the board.
And it's pretty surprising. Maybe that's that canary in the coal mine that we talk about when these financials, even though the economy is pretty robust, unemployment's low at this point, the economy's doing fine at this point, that they're looking maybe ahead to see some of those lag effects take
commercial credit, Tom. I think that's a big part of it. Look at some of the regional banks. Look at the commercial credit market. Look what's happening with commercial real estate. That market is completely dry right now.
Yeah, it is.
Moving up a little bit.
Great point there, Joe.
This is
higher
maybe a good
interest
level to
rates
pick up some
also
Mullen.
putting a crimp into loan generation at this point by the consumer also, along with that commercial side. All right, guys, let's take a quick break here. When we come back, we're going to take a look at Oracle, which reports earnings after the close and is just below 52-week highs. Fast Market's coming right back.
There is an RSI divergence there on the daily. This one to here. Almost today closes high enough to keep that RSI up. Iron condor in the coal mine. I'm moving up here a little bit. That gas hit view up and came back down. Household debt increased at 2.3% annualized rate in Q4. Fed says the stock market value is up by 2.7 trillion in Q4. Biden proposes 5.5 trillion in tax increases over a decade. Buys coming down more here. Tesla broke the floor. Now it's 179. Oh my gosh, Bullions, did you just... Bullion says, interesting, RC tweeted yesterday at 2:37 p.m. $2, 3... $2.37.5 is also the conversion price of the stock warrant. Perhaps RC said hello to Icon in Chinese, who paid the additional proceeds yesterday in the 8K filing. Nice little gem there, bullions. Bullion sounds right. A little bounce here, still kind of a bear flag of sorts. If it stays below that level. Absolutely no. That's not as crazy far-fetched. Bed Bath & Beyond's public equity. This new? No, I don't think so. There's a Barron's article here. It said it received an additional 135 million. It was entered into an updated agreement with creditors. That's old.
$85 strike put, selling the March 17th monthly 85 puts, paying roughly $1 debit. There's your risk, $100 per spread. But you've got a nice wide range, basically just above 91 and down just below $80 a share on this one to remain profitable on it. You're buying about a 31% implied volatility on an aggregate basis in April, selling about a 48%. So you're catching that divergence in the March 17th. Your take here.
Oracle, historically not a big premium name, so Joe can do almost a 5-week calendar spread here for under $1. It's trading right around about 97 cents right now. So the fact that you can get in a spread like this isn't sexy. It's not a home run play, but it's a play that if you get that move towards 85, you get the double kicker, Tom, right? You get direction, and you might get a bump in implied volatility that gives you, remember, you've got 6.5 Vega on this trade as well. So short about 5 deltas, long about 6.5 Vega. So obviously you're looking for that move towards the 85 strike.
Yeah, Joe, and basically the anticipated market maker move priced on the options
what are they talking about?
Pricing in about a $4 move either way. So this sets up
Oracle
nicely if we do get, and I don't look at this, Joe, as an example trade where you're trying to pick that direction. It's almost like they can.
Yeah, Jamie's getting to move up. Look at the SPY. See,
has
the screen. I don't even need to look at Jamie.
Too fast.
I know what Jamie's doing based on this.
Level going to hold to the upside above 91.
Slowly melt up with the SPY.
Is that when you look at strategies like this and also playing that divergence in implied volatility?
That's exactly right. I'm looking at it like this. The stock has had a nice move. It's been range bound basically since the beginning of the year. It got a couple price target upgrades recently.
This is a good sign though if it's bouncing on this support again.
I believe is the other one. 87,
I might close my
82.50.
puts.
I mean, it's basically right there, kind of with those two. It's a little slightly above those two. So, you know, even with the price target upgrades, just kind of trading at the valuation that it is, looking like it's potentially a little bit top heavy. The good thing, Tom, is you don't need a big move, right? Even if it kind of sits still in this range, if that front month volatility starts to collapse a little bit after the earnings announcement, which it typically tends to do, and as long as the back month doesn't come in too much, this can be kind of a steady as she goes and still
Sana's holding up really nice.
Yeah, and Kevin, I think Joe brings up a good point. On strategies like this, when you look at the risk profile, you know, those break-evens, basically 91 and down to $80, but it might be a little bit tighter than that. Maybe it's 81, maybe it's $90 to the upside, where you can still remain profitable because volatility is going to fall in the options that you buy also, which will hurt this. And the profitability on this shows just above $200 if it's at or near that 85 strike. But we all know that's fluctuates based on a lot of the Greeks that go into these strategies, right?
Yeah, remember, when you look on the risk profile, these are theoretical numbers up on the board there. Everything has to stay the same for those numbers to hold. When we look at theta, when we look at the overall direction, that assumes it's a snapshot. So if implied volatility stays up, it may do a little better. As you go right to the strike, if implied vol doesn't come down, but it probably will, so you'll do a little bit less. So it doesn't make assumptions like the movement in implied volatility. It just gives you the price. But this is still, the risk profile is a great world-class guide on how to judge risk.
Yep, and low-cost entry point to a slightly directionally bearish type of position here, trying to take advantage of those divergences in the implied volatilities with maybe an expected 1 standard deviation move to the downside if that takes place. All right, thanks to Joe Mazzola, Director of Trading and Education at Charles Schwab, for joining us, helping us break down markets and an example trade there in Oracle. But coming up after the break, Kevin and I are going to be joined by Megan Brantley from Likefolio for a discussion on DocuSign, which is up nearly 20% this year ahead of their earnings after the close. Stick around, coming right back.
Docu? What? 20%? $300 shares for shorting? What? Thought you went long, not short. Oh, short swing trade. Okay. Short swing trade. Sell tomorrow. Yeah. All term. No, sure, I get it. Short term. All right, covered calls. The covered call I sold this morning on BBBY. The $2 strike are up 10%. 1.5 strike is only up 5%. They're both for next week, so they'll move a little slower than weeklies. Buys kind of grinding back up here. That's the bouncing a little bit. A choppy day on the market. All about me. If you had to go short long on TSM, take a little look see. It depends on time frame, it's not just short or long. Like what time frame? You know, how long are we talking for a position? See how it's holding that 50 moving average on the daily? See how it did the same thing back here for May? So you entered now, and you had until May to exit, basically. See what it did back here? It looks like it's maybe repeating. Rallied up, consolidated, came down to the 50 moving average, this green line, and kept going. Rallied up, consolidated, came down to this 50 moving average. Now it's doing it again. So I would probably go long. Yesterday you had an engulfing candle on it. MACD is still bearish, but doesn't really matter, that price action. I don't know how this moves with the market though. This is kind of a resistance from back here. Yeah, just the way it's sitting on that 50 moving average. I would probably close it out if it broke below that 50. Yeah, I mean, I don't like to force trades. It's not like, oh, this is such a great setup, I'm going to get into it. But if you had to trade DSM long or short, yeah, I'd probably go long. Again, as long as it stays above that 50, just like it did back here. Also have to look for yeah, sorry, you have to look back here for see if it rejects this kind of 90-98 again. Yeah, Atomic, sure thing.
Once you try this product, you don't leave. Everyone is pretty happy with it. And think about this, the dollar-based net retention, that's one of the indicators of slowing growth, but it's slowing from 125% to 108%, so still over 100% of these of theirs. So the stickiness of this product, I think so much got pulled forward, and including the price of the stock and the demand for this company. But this is a company that eventually is probably going to be profitable. It seems to be on a path there. It just, if you take some of the volatility out of this product from when it was brand new and popular during COVID, it's actually growing at a nice pace, isn't it?
Yeah, I think that, it's still posting revenue growth, right? This is still a company and it's taking steps, at least in terms of profitability. I think it's reducing its headcount, it's restructuring a bit, trying to be more efficient. And then overall, its value proposition to consumers hasn't changed. When we look at some of the different business trends that
yeah, I see that kind of trading range you're talking about.
Improved business efficiency is one of the top growing trends that we see, as
no, I mean, yeah,
businesses are trying to be more efficient. This is just
trying to trade it in that range.
Practice, and this is something that DocuSign offers, and it's making moves to try to help its businesses be more efficient. I know that one thing that it's touted is this elastic signing, so it's just more intuitive from a business perspective, a user perspective. It uses more advanced logic, and
you wait long enough, right?
So have some impacts on that overall level of consumer happiness. That consumers
it does rally up.
Better experience when they're using on the business side and then also on the consumer side to conduct business.
I don't know if I'd go short.
Another important integration
just because it's holding that 50 moving average so well. The same thing did back here.
That could be another avenue for future growth and just that stickiness when you kind of integrate it into that Microsoft workflow. So I think it does have avenues for growth, and I think for us from a long-term perspective, it's positive to see those happiness.
Oh yeah, so you're talking shorter term. Then yeah, it could come down.
From a short-term perspective and near-term perspective,
sure, yeah, double topped here.
This is the quarter that the company is really going to turn the corner and gain a lot of trust from
on that shorter
from
time
the
frame,
market,
probably
perhaps,
come down
at least
before it moves back
whenever
up.
we look at those
Right?
overall
'Cause even on
levels
the
of
50,
demand and those, the
you're
web
kind of at the
visits,
top
like I
of
said,
it.
whenever
So
we look
very
at
well
our
could come down and
metrics
retest
from
this 50.
a correlation perspective to
I don't
revenue,
know if we'll
those
come all the way
tend
to
to be
80
more
or 85,
correlated,
but
and we do see a bit of a slowdown.
because each low has
So
been higher.
it's a little bit of a mixed bag when you look at our data, because we do like
But yeah,
the
shorter time
decisions
frame.
that the company is making internally, and we do see it having some improvements, at
Yeah,
least
kind of
in
a head and
consumer
shoulders here, the
sentiment.
5-minute.
But we are still seeing a bit of a slowdown in that growth that
Yeah, you're
can
looking
still
shorter
trickle
time frame.
through this quarter as well.
Yeah, you make a great point there, Megan, because the economy is still doing pretty well at this point, but the transactions that DocuSign's used in a lot of endeavors is, whether it's commercially with property, right? It's residential, it's lawyers,
confirmation bias to keep you in it.
And that's slowed down quite a bit. But it seems like the stock price, according to your charts here, on purchase intent, as far as first-time
red
users,
candle in
we all know that
15
happiness
minutes.
is good. I've used it; it's amazing product. But at the same time, the stock price seems to really be under.
It's engulfing. I might grab another short.
Estimating, maybe what data that you
Thanks for your
guys
thumbs
are
up.
showing. And do you have an earnings score on this one?
Yeah, so heading into earnings, our earnings score for DocuSign is a -16, which, in our world, that falls into the neutral camp. It's leaning a little bit bearish, but, you acknowledge this, that whenever we see this a little bit divergence between purchase intent and the stock price, like you mentioned, the expectations might be low. So we think the bar is set a bit lower, even though it has rallied just recently. We think the bar is still low, that, maybe investors are expecting a slowdown in growth. However, we're not necessarily seeing strong enough data to take a
Projecting
stab
that 50
at upside yet. So for us, we're
on the
neutral
upside
into earnings, but on a long-term perspective, we do like how we're seeing things change in terms of sentiment for this, and we think that this could be, a nice longer-term bet if you are
nice
looking
trend
for
up.
an upside bet.
Yeah, guidance from companies has been
Our
key.
side divergence
Maybe
there.
looking forward
Buys
to
coming
some
down
guidance
now.
from this company to profitability. All right, great stuff as always, Megan. Appreciate it.
Thanks, guys.
All right, that's Megan Brantley, Vice President of Research.
Kind of right at that level.
Breaking down the data here on DocuSign.
Might be a
All
nice
seems
trade
pretty
up to
positive.
that
Kevin,
gap
I mentioned,
fill.
I've used it. I don't know how you go back after using
Anything
it.
having to do with a contract, Tom, right? I mean,
Yeah, it's got a nice
fill
little
in the
bull flag
blanks
it's kind
on
of
where
breaking out of.
medical, legal,
yeah.
I mean, everything.
Yeah.
It's
running a bit hot though, and
I've
it's at
used
that
it too.
resistance.
It's incredible how
back
easy
here,
it is
so.
to use. And their gross
Don't know if
profit
it'll
margins are going
go
up.
now
Their
or
free cash flow is
chill out
going
for a
up.
minute
All
first.
the numbers are getting better. They're moving on a path so far towards profitability.
Volume
They're
supports
not
it
there
too.
yet, though.
They've cut over 10% of their staff, so
Nice.
they were kind of ahead of the game in that mix of, hey, we're starting to trim the fat here a little bit. That
Yeah, no, this
should
one looks
probably
nice.
help in the long term also.
Buys
based
coming
on
down a
what
bit.
Like Folio saying also.
Remember something, this is still a young company.
You're just
early
trading
in
shares
its
on these, I
life.
guess?
So, it's moving towards its growth. Now,
This is another reverse
unprofitable
merger
growth
one.
has been punished.
Yeah.
Reverse
lately,
split.
So
I see
the
M, I always
effects
say
on
merger.
the stock, like you mentioned, from 314 to 39, that's catastrophic, right? Let's face it. But that doesn't mean this company's not still a good quality company.
All right, option markets
was this
pricing
drop
plus or
from?
minus $7 move in the shares according to implied volatility levels at this
flushing
point. That's
there.
pretty big on a percentage
Good
basis.
old
So what do you
Jimmer is
Hope
doing.
for the best, Tom, but prepare in case it
Holding
isn't the
up.
best, right?
Okay.
And so
Not bad so
when
far.
something like this, where we
Projecting
don't
VWAP.
know, right? Their data, like Folio's data, is pretty neutral to, worrisome about some weakness. So what I did, Tom, I did the 1 week calendar spread. In terms of the call side, I lined it up almost to the penny with the expected move, $73. If you look at the expected move and where it is now, it almost lines up to the penny. So the March 10th, March 17th call calendar, trading right around $0.50. I've got it right now about 47 cents, right in that range there. And then the 60 put calendar, Tom, and that's trading right around 60 cents. That's a little bit inside the expected move, but all things considered, where these are trading because of the divergence in the implied volatility, Tom, they're trading relatively inexpensive. Doesn't mean you're going to be profitable, but that divergence between the implied volatility is pretty substantial. I had it over 100 points. Yeah, from 240 to 111 on the implied volatility. So a big divergence there.
Yeah, so let's break this down. And we've got these individualized, but then Kevin will show us the double calendar here at the end. What we have up there now is a 73 call calendar on this. Buying the March 17th
this is a good trade today.
Expire in 8 days. Selling the March 10th weekly
Look at that.
options that expire
40%
tomorrow's close.
up today.
You're paying roughly about a 50-cent debit for that. There's your
bounce.
risk, $50 per spread. Your break-evens.
I'm actually surprised how bullish this thing
They're
is.
probably closer to about 88 and maybe about 62 on the downside. So you can still remain profitable because
like
of
the penny
implied
stocks.
volatilities. You've got some assignment risk on all the short options here.
So
On
far,
these
looks
two
like it's
example
rejecting
trades. But now
a
let's go
breakout.
over to the put calendar. Buying the same option series, the March 17th, selling the March 10th weekly. This is on the 60 strike put. It's trading about 60, 65 cents here on that. That's going to be your risk on that one. Your break evens closer to probably 55 and about 68 to 70 on that one. But if you combine them like Kevin's got up here, you get a nice wide range. So you're basically picking no direction. You want it to go towards either strike to potentially remain profitable on this type of example, Kev. But you don't want it to sell.
Yeah, it's rejecting that.
And you don't want it to go too
resistance
far
there, so
above maybe 76
see if it bounces on
the
VWAP
upside,
or
and maybe too far below
back down
55
here.
on the downside, because then you'll start losing max loss.
If it starts
on
to
this
break
one
out
would be
here,
about
then yeah, maybe it gets me.
$115 if you did
Gap
both of
fills
the
or
calendars.
something.
Kev, your
Oh, you're looking at a gap fill?
Remember, today's Thursday, so that March
It's up
10th
to
goes
2.
off tomorrow.
Right.
So now,
Maybe.
what do you do? If it goes towards one
Yeah, I mean,
you could
longer
close
time
out,
frame
it
looks
could
pretty
max
good.
out pretty easily, or in
For a
that
bounce.
range. You could also turn them into a. Remember, you've got a 73 call and a 60 put for another week after that. So you obviously
it's kind of
the first
rejecting
choice is to
those
close
the
them
breakout
out.
so
But you
far.
can turn them into a vertical spread. There's a lot of things you can do
Yeah.
once you get through that. But you are collecting a
Yeah,
fair
if you have
amount
conviction,
of
jump in on
theoretical theta here.
supports.
I have it on a
or
one lot of
VWAP
each,
or
about
both.
$190 in theoretical theta there. So you're at the peak for decay on expiration
Buy
day.
back down near the lows now.
But this one, you prefer to move towards the strikes, as you mentioned.
Right, and as we mentioned, you got some assignment risk on those short options into expiration tomorrow. But then also, Kevin mentioned the potential to close this if the market's open, liquidity is provided. So keep that in mind. But a really short-term earnings play example that we looked at there in DocuSign. All right, coming up after the break, we're going to take a look at General Electric, which hit over 3 years
there's some online
today amid its investors.
Let's look
day.
at them. I want to look at them.
Fast Markets coming right back.
Bye Baby's website is back online. He's coming down, rejecting VWAP there. You want new or pre-owned? Good old look-see here. Let's see, is this the right one? No thoughts on Shopify, Spotify, Peloton, and Duolingo? I like those long term, except for Peloton. Duolingo I don't know enough about, but Shopify and Spotify I think are good long term plays. Good investments. Peloton I think is probably, it's not gonna go bankrupt, but I think the valuation's still crazy high. Duolingo, I like the concept. I don't know anything about their financials or their chart. I haven't looked at. What's your budget, Ace? You actually want it for gaming or just as a fast computer? Ryzen 9. RTX. Beyond Meat. 2500 Sky Chronos. Oh, you're looking at one specifically in here? Skytech? Oh, is this one? Skytech? VBAs. Yeah, that's kind of cool. The white one. The one you're thinking about. I haven't kept up on graphics cards. It's been a few years since I've looked at them, like benchmarks and stuff. I feel like most gaming PCs, like any of these, will be more enough adequate for basically any game you're gonna play, or even overpowered. Next PC I'm gonna build, I'm gonna do a small form factor, like the small case, not micro, but just a small one. I've got a massive one right now. It's just massive. Oh, they love AMD. People love the AMD. Use Windows 97. Nice, legit operating software. Yeah, that's the thing. Any of these on here, you could just it'd just be crazy fast for you. Windows 97, yeah. It's got an Intel processor. I'm actually on Intel. I know people don't like Intel anymore, but I don't have a problem with mine. They're maybe overpriced compared to AMD. That gas is coming down a bit. Dinosaur monitors. Got NVIDIA RTX 3070. Terabyte of solid state. That's nice. Wireless 802.11 AC. Power supply 600 watts. This thing looks sick. You'll probably get more value with an AMD. Oh yeah, this one isn't liquid cooled, it's just air cooled. Talk about coolers on here. You might want one that's liquid cooled. I know when my water pump is off, my computer goes into like limp mode. And I'm not even running it hot. One's even cheaper. After writing by zip tie. This one looks like a better deal. Maybe isn't as nice of a graphics card, I don't know. But again, like for what you're doing on it, these are all gonna be probably way overkill. So getting a chipset with Windows 11 maybe is a good priority. Kind of to future-proof it some. And then just pick if you want Intel or AMD, or if it doesn't matter. Then I probably would get something water-cooled. You can always add it, but better just to have it. A lot of these aren't water cooled though. They're AMD. That was not bad. Oh, if you do video, that's right. You're all into After Effects. So there's some differences. You'll have to look those up. Is After Effects, does it process everything on the graphics card? Can you like load that thing up? Spy's flushing there. Whoa. Norfolk Southern train derails in Alabama. What the heck? Another one? I don't know if this is happening more often or if we're just hearing about it because of Palestine. You know how that is? Like, once you hear about something, then once it's hot media, it doesn't really matter. It seems like it's always happening, but it's just because that's what you're being fed. Salesforce cuts hundreds of jobs. White House Budget Director Biden does not want expiration of Trump tax cuts that would result in higher rates for those making less than $400,000 per year. Jeffrey Gundlach has said that this week that it's very unlikely the Fed will raise rates by 50 basis points this month. We shall see, Mr. Jeffrey. Yo, my NVIDIA puts, dog. Be pumped. Pump it up. Jeez, this thing is held up way too well. Yeah, I like that. Got a lot of RSI divergences here. Holy smokes. This thing doesn't care though, just builds them one after the other. Then has a little dump and then just rips again. I guess that's earnings. Jeez, NVIDIA. Yeah, there's a couple differences you're going to want with video editing compared to gaming, but it'll basically cover it. That's kind of what I did mine. Like, my most intense stuff was video editing, and I guess I do some gaming, but what I've noticed with video and photo editing, you're more reliant, it seems like, on the processor as opposed to gaming, where it'll be more graphics card intensive. So even if you can offload your workflow to, you know, render and stuff off the graphics card, the actual editing part, I think it's more heavy on the CPU. So I would hold your CPU higher standard, I guess. Multiple cores, yeah. It's the breaks and regulations that were removed. They want us to hate trains. How could they? I love trains.
Going to do pretty well over
How
a long
could they
period
do that
of
to
time.
my trains?
Healthcare, going to do well over
Southern,
a long
yeah.
period of time. Energy, that's interesting. Wind is struggling right
Oh,
now.
seriously?
but
I didn't know that was a
you
real
have to
thing. That's
judge-
crazy.
Soon this will be 3 companies,
Yeah.
and you have to judge each one of them individually.
Caveat there, if the airline
How
and
could
the
you?
aerospace industry continues to do well, because that has outperformed, and maybe that's why you're seeing the optimism in the stock here. But Kevin, I looked at something, when I look at technicals like that, maybe ways that we can look at an example trade here. If maybe you don't believe in it, or maybe you think there might be some semblance of a pullback due in a name like this that's rallied so significantly. So I looked at a bearish put vertical here.
Yeah, you
Kevin,
can hit trains if
that's going to lower my cost.
you live near them, I
input on
guess.
Taking that bearish outlook.
They're required to
the
honk their
trade.
horn so many
went out to
times.
the April 6th
Big hugs going through
weekly
certain
series here. So
densely
giving myself
populated
about
areas.
28 days till
Puts
expiration.
on trains.
Where I'm going to buy a
Is Southern
slightly
Public?
in the money put, and I looked at the 93 strike
Norfolk
put.
Southern, yeah,
And then
NSC.
against it because I want to offset some of my costs. So because maybe I don't think it's going to go, down to $80 or $75.
Well, that news so far
Maybe
hasn't
I think it's going to
seemed
have
to affect it.
that outlook that it goes down a few percent. And this might be the way to offset some costs by selling the 88 put against it. It's $5 wide, bearish, put vertical to the downside. You're paying roughly about $1.70 debit.
Did
on this
the train
one, Kev.
stocks
So
rally
there's
when
$170,
from the low
but the
water
spread
levels?
can expand to $5 if it gets
Like the
below
Mississippi
88.
was so low.
If you think about it from a realistic perspective,
That rail
you're spending
and
just under
truck,
$1.70, right
I
at
guess
$1.70.
the rates on rail and truck went
what
up
you
like
can
5
make
times
if
or
it
something.
goes to full value at $5.
They couldn't move stuff by barge on the Mississippi.
The risk reward there, a chance to turn
don't know when that was. I
$1.70
can't
into
remember. Maybe it's
$5.
this.
But obviously, the risk on this trade is what you spend for it. It's a debit on a vertical
Doesn't
spread.
seem like a
You
huge
do
volatility
need
move
movement on
whenever
the
it was.
downside. The break even here, let's call it 91.30, right around that level there. So anything below there is where this would be profitable.
Now, on
Records
directional trades like this,
54,000
Kevin,
trade
I
rounds
always look
between
at them
18
like
and 20.
implied volatility at or near
1,700
52-week
per year.
lows. So that means
It's quite a lot.
Yeah,
I think we just don't hear about them,
vertical,
or at least I
cheaper
don't.
in price, but then you've got some flexibility as far as managing this, because if the stock does go down, maybe for a day or two, expands in price, maybe you close a portion of it or all of it if the market's open, or you adjust this. Liquidity is provided. I mean, there's
We're just
ways to
hearing about it
manage
because
this
that one
a
with
little bit more aggressively
the
than,
chlorine
say,
or chemical or
selling
whatever.
it out of the money call
So-
vertical to take that bearish stance.
You're hearing about them now because
if
media
you
makes
sell
money
out of the
from
money call
eyes
vertical,
and clicks.
that credit
So
you
any
get
sort of
is your
train
profit.
news
That's
now,
your
you're going to hear
max
about.
profit. It's
So
even
everyone
less
thinks that
where you buy
all
it
these
in
crazy
this.
derailments are happening
Obviously, you need
all of a sudden,
movement,
but really you're just being fed
the
it. So
exponential gains can come if you're right.
then you have someone like
So
Moon
then
Pirate who
what we're saying is basically there's
tells you
28
the stats,
days
so
in
you
this
know what's up.
position, but if the
Trade-offs.
stock goes down, right, you have that. You may have that ability to either adjust or close this trade early. If the market's open and it allows you to do that.
Because they're close to houses?
If it expands in price. Now, the ideal on something
I don't
like
know.
this, it goes below 88 and expands to $5.
I mean, that one in
and
Ohio,
you
I
get
think,
that
because of
max
what it
profit, but
what it
sometimes
released.
doesn't happen. All right, Kev, that's going to do it for you and I
And,
today here on
yeah,
Fast
potentially
Market.
'cause
But
of
stick
where it
around right
happened,
here
but
on the TD Ameritrade Network.
I think you're
Next
just
Gen
going to hear about
Investing's
them more
coming
right
up.
now, anyways, because of that one in Palestine. Yeah, you could just look on deals for PCs on GameStop. I think some of those are discounted. They say deal. I don't know what does that even mean. Kind of deal. Yeah, I would probably look for one that has a chipset for Windows 11. Whatever that is. That's the thing. I was gonna upgrade my yeah. The chipset's changing is what sucks, where you can't really get like a future-proof computer. You always have to upgrade for that thing. Chains are terrorizing our streets. Laziness. Oh, that's right. Yeah, they burned it instead of cleaning it up. I mean, I think it was news before they burned it. I think when I remember hearing about the news of it, and then later hearing how they disposed of it. That was the second news story. GME gonna render Newegg useless? No, Newegg makes a lot of money. Market cap's 500 million. Maybe GME will buy it. MS-13 gangster train. MS-13. I haven't heard that in so long. Yeah, you want to get one with the newer chipset. I'd say that should be a requirement. And then, yeah, other than that, probably just good deal. Maybe water cooled. I prioritize chip performance or CPU performance over graphics card performance for what you're doing. RAM and all that stuff you can always add. Even a water cooler, but depends on what they bought it for, right? I don't think Newegg could buy GME. That'd be crazy. A huge loan. But yeah, they would buy it for a certain price, a certain market cap, and then it would more or less go to that price. Twitter was a good example. Can we still see it? I don't know if you can see it still. Yeah, you can still see it. But I think this was bought, I can't remember, but somewhere around here. So it just basically went to that price and kind of stayed there. Cool mild Gatorade. Gatorade. The LED screen is definitely necessary. It goes so fast. Yeah, the more RGB lights, the better it is, basically. Looks like it wants to come down some more. Jackass back down the lows of brown. GME's max pain is $19. Seems awful high. Huh. Looks like 10-minute MACD will stay flipped into the end of day. Yeah, GME, this is showing some relative strength. Nothing crazy yet, but that is good relative strength. Volume still sucks. Could average into my puts, but this is showing a bounce, another test and bounce here, little triple bottom. Such small choppy price action last week. We'll go to prom again. That would be fun. We got 5 people stocks that act more like a real stock. Oh, penny stocks. Frisky, 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 frisky. Buy maybe at a bottom. Max pain on BBBY is $1.50. I don't think that's gonna happen. Moon never went. I don't know if I ever went to my own. No, I didn't. I went to one with another girl at hers after I was already out of high school. She wasn't gonna go. I'm like, dude, you have to go to prom. Like, I'll friggin' take you. I was that old creepy guy at prom with the flask in my jacket, hitting on all the little girls. Just kidding. Kind of. I got everyone to dance though. Day Blink 182. Someone deleting comments. I want to grab another natural gas here. Oh wait. Wow, looks like it wants to kind of go up now. Bounce right on this line we have drawn down here even. Crazy how consistent support and resistances are. Need Sarah. Sarah will take you to prom.
Sometimes present interesting conversations, potential opportunity, and you can even see on a technical basis maybe an interesting chart to talk about as well.
Yeah, I completely agree. And now our next name today is GM with a completely different story. Like you said, none of these movers today have anything to do with each other. GM is announcing starting a voluntary separation program for its eligible employees per a security filing we got with the SEC. They said they will be offering lump sum payments and compensation based on years of service to the eligible employee beneath this program. They didn't specify how many employees will be eligible for the buyouts, but they do employ about 81,000 salaried workers around the world. They expect to incur about $1.5 billion of pre-tax separation charges, but this follows really other recent moves they've taken in months to shave off some of their expenses and strengthen their balance sheet in the advancement of this softening U.S. auto market. We actually got a report from the Wall Street Journal yesterday that highlighted weakness we are seeing in their Hummer EV as well as their Cadillac Lyriq that are already behind production targets for the year. So hasn't necessarily been the
feel
same
like
year we
90s
saw
songs are
last
coming
year
back.
for a lot of these legacy auto
They're not coming
players like
back,
a
but
GM
like
or even a Ford. Now,
classics
part
now.
of this buyout program, they have said they plan to reduce their vehicle complexity
Late
to help
even like
them
early
speed up
2000s.
some of those inefficiencies within their production line. But like we're
the
seeing
good ones
shares
from
lower
the
today, down about
2000s.
3% in reaction to this news. And
It's weird to think of it as like
further
classic
woes
now,
for the
but
auto space, Alex, I feel like every single day
what is
there's
it?
more
Cranberries comes
negative
up on one of
news.
my
If it's
playlists,
not GM,
and
it's
I'm like,
Ford.
this song is
Yeah,
so
this
sick.
Is, different than what
Still
we've
love
seen
the
in
Cranberries.
the software and technology space, where the successes
And I feel like
over
it's
the last
gonna be-
decade of those companies, names like Meta,
Some of those
really
songs are gonna be
highlight
just, like,
this,
timeless.
had led to bloating of the organizations, a little bit tougher times, some stock price depreciation, led to a little bit of the trimming of the fat or the tightening of the belt, whatever
be happy
analogy you want to
uptrend
use
Keurig Yummy stock?
to sort of
What?
describe the downsizing of the workforces. GM, Ford, and a lot of these legacy automakers, they've struggled for the better part of the last decade. They've been trying
Keurig Dr. Pepper?
to ultimately remain competitive. And of course, this kind of announcement, obviously this is primarily targeting more corporate jobs, not the manufacturing front, which of course is going to be key. If they're going to sell a bunch of vehicles, they got to keep making them.
Did they buy Dr.
But
Pepper?
It's not necessarily seen, I guess, as a positive for the company that is positioning itself to be a key player going forward. Going to say downvote though. We'll find out
Wait,
how
is
it all impacts.
Keurig
It's
is
not a
owned by
huge
Dr.
move
Pepper,
lower.
or-
I think the struggles, as you talked about, have been widely reported.
Didn't know about this.
Mostly kind of a boring name.
Come on
Doesn't
here.
really move that much. It's got about a $40 price tag and kind of just seems like it chops around that.
You know, the only
Dr.
time I find
Pepper
GM really
owns
fascinating
Keurig.
is the fact that it's still outperforming
Wait a
actually
minute.
Ford on the year. So for that reason, it is outperforming of the two legacy
Keurig
auto
owns Dr.
players.
Pepper.
Impossible to compare to some of the other names like Rivian or Li Auto or Tesla, of course,
Classics,
which
man.
they don't even look similar on a chart basis. Our next name today, though, is all things PayPal.
Dividends
Now, PayPal
also on
did
this thing?
announce a leadership shakeup earlier this week, but we are sensing shares now
I had no
recover
idea that
slightly, up just shy about
Keurig and Dr.
3.8%
Pepper.
0.8% on the day. So actually, our lone name in the green today of these
Yeah, there was a lot.
The CFO will be
Dr.
stepping down
Pepper
immediately. It was
has a
following
lot under
a
its
medical
name.
leave, and the company made it very clear per the
I knew
press
that, I guess. I
release
just
that
didn't
it
know they
was
were involved
not
with
due to a
Keurig, or
disagreement.
Keurig is
It was
the
not
owner.
out of any
Yeah, you have
malintent.
Canada Dry,
This
Schweppes,
figure will
Crush,
remain as an
Sunkist,
advisor through September
A&W,
15th
7-Up,
of this
Sundrop,
year.
Squirt,
But
Big
shares
Red, Hawaiian
began
Punch,
their move
RC
yesterday
Cola,
after the close, when they also began
Snapple,
presenting at the Morgan Stanley Tech
Yoo-hoo.
Conference. Now we are seeing PayPal shares just hanging out slightly
Yoo-hoo.
above their 50 and
Vita
200-day
Coco,
moving
Evian
average.
Water, Mr. and Mrs.
Still
Tea
underperforming
Mixers,
actually block on a year-to-date basis, but only down about, this point,
Pepsi.
36% from its high.
Yeah,
Unless you can
Pepsi
charge
owns
the
what,
move
like,
once seen
they own like
in
Frito-Lay, they
PayPal.
own a lot of
Still
stuff.
on a yearly basis, you can see that collective weakness. Shares are down about, or up
They own-
about 10% for this year, so not necessarily the strongest
Maybe
performer in our
Taco
coverage
Bell,
of,
is that-
but at least it seems like
Or is it Taco
sentiment
Bell
has
that owns, like,
steadily improved in this name
Pizza
after
Hut
being
and
pummeled in
KFC,
2022.
all
I
those.
didn't have a chance to follow along on that conference the Morgan Stanley put on to see what PayPal had to say, but I did see that they were one of the presenters.
Dr. Pepper
and clearly
owns
they must have
Keurig
something
then,
nice to
but
say,
why would
because the
they?
market itself
Why would their
has
ticker
lost
be
some
Keurig
strength,
Dr.
and
Pepper
PayPal's
and their
holding
website
on to a
Keurig
pretty
Dr.
decent
Pepper?
gain that started, as you said,
Really pushing
yesterday,
that Keurig name.
last afternoon. What I will say too, if you recall, we talked about Occidental Petroleum this week, and we talked about how it's the inverse of a lot of the charts you'd seen. It's sold off during the pandemic period, and it's had this meteoric comeback.
Yum Foods, that's right.
PayPal's the perfect example of just the
Yeah,
exact chart that we've seen in so many of these tech names post-pandemic now. Huge, meteoric rises, and then just catastrophic downfalls and slides over the last
Yeah,
year and a
I've
half.
seen the ones. Is it
PayPal's,
Pepsi that owns all those?
Got to figure it out for investors here. The stock was at one point over
Taco Bell's Yum Foods, though.
$310 a share, and it's now down below 80. And 80 is $12 off the low. So it's still pretty just incredible to see that. That is. Again, we're talking about times on the
remember that
calendar
song,
in our
not the
lives
name.
that are just unique. I mean, the dot-com comes to mind. Obviously, great financial crisis is going to come to mind. We were a little bit too young probably for both of those events, but this COVID era of just fervor for tech stocks is just almost unrivaled, with the exception of dot-com. And
Spies coming down here.
Giveth and it taketh away, and certainly
You can make a new
PayPal.
low.
I'm going to say downvote. Last one on the list is, in a way, another one of these names that falls on this.
I have
this,
4 of the
sort
micro
of a chart,
contracts, so
and
not
that's
bad.
Etsy.
I was just going to say, speaking of giveth and taketh, that is the story also of Etsy. That was a pandemic darling and actually did see some strength kick off this year. That strength has not been able to hold in line. It looks exactly
That cold water
the
got
same,
me coughing.
really that is PayPal, but
Tesla's
Etsy's chart
coming
looks honestly
down.
very much the same. The only
Modestly better.
Modestly better, but we've since given up some of those gains this year, which is why I find today's news pretty interesting. Jefferies double downgrading shares to underperform from buy with a price target of $85, which is sizably down from $150. Clearly, this analyst hiding the fact that they are churning faster and spending less on Etsy.
Buy new low on the
from
day.
a consumer
Broke through
standpoint,
that
and
support.
forcing the company's marketing higher and putting pressure
Kind of a big level
on
there,
its
I think.
overall EBITDA. They think that with more unlimited take rate upside
396
and
maybe
deteriorating
next.
buyer
Yeah, that's a
trends,
big
there is
level if
downside to
it actually
consensus
holds below
estimates
there.
from slowing sales and these
Down
moderating margins. They do think
0.35,
that Etsy's 70%
0.35%.
valuation premium to its internet peers at this point remains unsustainable given the company's churn as well as its average EBITDA growth. But like we said,
Moon,
from a
were you here when
perspective, you do see that rise
when
and
that guy
fall.
vaped?
But Etsy was at one point this year actually
The
seeing
guy in
some
here.
relative strength.
I think
and
half the
completely
time
erasing that now. Shares are down
when they have the green screen, they might be.
for the
I
year,
don't know,
down
maybe not.
10% this
It
week
seems like he
alone,
might be in his
and
house
now down
though.
about 28%
It's
from
like
their
green
high,
screening.
although still up about 63% from their
But
low.
maybe not.
So
It's just crazy.
all
I think he had a
things
vape.
considered, this name has
He's
been
in the
more
studio. They
shocking
just
in
let
the
him
last
vape,
12
like,
months,
between
and
cuts.
PayPal has been more steadily declining. But it's interesting to compare really the rise and fall in a lot of these names. Of the analysts covering Etsy, there is still a few leaning more neutral.
Yeah, J-Powell, what does he
There
make,
are no
like
sells
200,000
in
a
this
year or
name.
something?
Only one analyst of the 18 covering this name does lean more
Start
bearish
on
in nature. So
KFC.
Street does still feel pretty positively, but shares are down 5% today.
Well,
Yeah, the guy with glasses. He comes on like Power Hour.
Quick, going from buy to
He always seems high too.
Basically completely flipping their perspective. Obviously a
I actually no, I don't
substantial
smoke
target
weed.
cut from 150 to 85 as you
I'm a straight
mentioned.
edge.
But one can't understate the importance that this company filled during the pandemic, giving opportunity to smaller businesses, many times sole proprietors, a marketplace to continue operating during the pandemic. But we're not in that time anymore. A lot of the stuff that they're selling on Etsy in many ways is arts and crafts or trinket-like items. It's very discretionary centric, and in a time of rising costs and cutting back on the budget towards things primarily more on the staples front, we've seen grocery stores been where
looking on the longer time frame, it's just setting up a nice inverted head and shoulders here.
Places like Etsy. So if Amazon's struggling, if JD.com is kind of struggling, meandering here,
coming down
it's
more.
no surprise to see even something further out on the discretionary spectrum like Etsy.
Oil's coming down
as well potentially, but Jeffrey is really
dollar's dropping too. That's weird.
On this one, double downgrade. We don't see those often, but I'm going to say upvote because pretty interesting move. And as you said, it's still a company that I think
huge percent of BY
has
and go
shown
up
its ability to come back at times.
And it tends to surprise us. I will
yeah,
say.
it's totally sneaking in vape pits. You can hear it.
Nature, and I've been talking about
it's
that all
hilarious.
day. How there is never a want or a need to purchase something on Etsy. It's always a want, and I can speak to my own experiences with that.
A massive bong rip? No way.
Being JD.com, as well as
you could hear it.
Of course, we'll be looking at the technicals as
you
well
could
as
see it.
Example trades, and both of these names coming up next.
Like pulled it into frame. Silent uncreative algos. I'm not sure. They're exhausted. I hope that's the case. We're exhausted. Just type in the boring algo barcoding. You can't keep up anymore. Wheat stocks, yeah. Find a good one that's like good. Fundamentally, there were so many hyped ones that there's probably a bunch of trash weed stocks floating around. Or just go buy Scott's. Something that just gets exposure to gardening. I don't think I saw that video. You'd see it here. Tubin. Jeffrey Tubin. Yeah, just yesterday, man. It was funny. It's hitting the vape. Spies getting pretty fleshy here. Let's see, it's 115. Go to Euro close. We've basically been selling off since Euro close. We have Zoom in the new Mercedes now, along with TikTok. GME below VWAP, moving with the SPY. Tesla just melting down a bit. Build-A-Bear is still up 24% though. Holding up well. Sana 21%. Net gas a little bounce. I know those cameras in the mirrors or whatever that point at your face. Like, dude. That's gonna be standard on all cars. I have no idea how to fix. I like the laptops that have the screen, the little thing that you can flip to go over the camera. It's internal into the monitor. Have you guys seen that? Press a button, it's like a mechanical little slide. Pretty sick. They have it in what cars they have it in already? I think even Teslas have them. Maybe not Teslas, I can't remember. But yeah, they have it there for the autopilot. So BY broke the low of the barcode. Now it's 127. See if that holds again. So basically if your eyes come off the road So it's watching your eyes and your face. So if you're not paying attention, it'll like turn the autopilot off, I think. Not a feature for buyers. Yeah, no, it's for their autopilot system. Put it on hold. SPY new low there, flushing down. 396.97 will be the next level I've got on here. Yeah, don't get a new car. I just saw Carmen Gia, slammed Carmen Gia. I was like, oh man, I kind of want to get a carbureted car now. I'm trying to think if I've had. Yeah, I've had I think maybe one car in my life that was carbureted. I've lived at high altitude a lot of my life, so it didn't make much sense. But I'm at sea level now, so like I could run a carburetor. Easy to tune, fun old mechanical stuff to tinker with. My carbureted car was a 76, I think. 76 Toyota SR5, like a little tiny old pickup. Convertible, though, by the previous owner. Cut the roof off. Put some latches on there. It was pretty sick. And then I had a constant injection system, which was like a mechanical fuel injection. It's like between fuel injection and carburation. That was just a mess, though. A Lada? Yeah, Ladas are sick. Russian cars. I mean, they're not sick in Russia. That's like freaking everything there. But yeah, they're cool to me. They're cool little European looking cars. Colorado? Yeah. Yeah, mostly. Eyeball glass on Amazon. That would be just a huge like floating one that like fall out of that glass. It's that would be funny. Florida does have a lot of bugs and alligators. If you look at where it is, like longitudinally, I always get it wrong. I think longitudinally, it's so far south, basically lined up with Mexico. You're basically in the tropics in Florida, like Caribbean. Flagstaff's nice, but yeah, you have to like the snow. Gas because they're 350. What was your baby? Teeming with alligators and insects. US is 1 degree over 23.5 north. I mean, yeah, the state's long, like it's tall. So Key West to Jacksonville's a long ways. But I mean, a majority, like a lot of Florida is just so much further south, or just like south of the rest of the country. Flagstaff's nice, June to September. Yeah. MACD's get tested on the 10-minute. It's moving with the SPY. SPY's coming down. Expect GME to follow. South Texas. I'll be okay if I never do. You mean you don't have alligator boots that you wrestled yourself, Ace?
That because there are risks with this, as there is with any investment, but they might just be different and they might be harder to understand with some of these Chinese names. So
yeah, it's strange. I had no idea there were bears in Florida. Someone told me there were bears in Florida. I'm like, what? Yeah, apparently there's a lot of like black bear.
Or anything, but at least a number
kind of weird.
You can put your finger on.
Yeah, and it just goes to show that a lot of this hype around the opening trade has been a little bit misguided for a lot of these Chinese names. So I think risk defined is so important here. Our next name, it's also important to be risk defined because our next name is Etsy, tends to make volatile swings, moving today after a double downgrade from Jefferies and Rick. The chart not looking too promising either as of late. We have seen some
buys coming down more there.
Kick off in the last several sessions, last several weeks even in Etsy. I would even say weakness has stretched out longer than that, but a duration of
where are you talking about, big hugs?
More recent weakness has been as of late.
Yeah, definitely taking a beating today with this price target change all the way down to 85.
Oh yeah,
that's this blue
broke
dash
that level
line here.
there.
That's about 21% to the downside here. So
or something.
There could be quite a bit more pain in store if this
396,
analyst prediction plays out here.
It's kind of the final drop here.
I thought was especially cruel because we had this level of support here, this red dash line near the 112 level. It looked like we were potentially forming a hammer candle there, which is a price pattern that suggests things were bottoming out, perhaps.
Yeah, we're getting to some
the price dipped very low on the intraday level, then it resurged all the way back up, and the bulls were in control by the end of the day in terms of the candle shape.
What a big turnaround day, huh?
That didn't play out, obviously.
Ended up being exciting.
Significantly off today. Once
range
again,
bound. I like it. Big engulfing candle here.
So, pretty rough.
I like it a lot.
Once again, like our last chart, we're in a steep downward channel, kind of narrow, suggesting the intensity of this downward move here. Our three moving averages, they're all kind of clustered together right up here near the 124, 125 area.
Look at the flush on GME.
They're all starting to trend downward as well. So that's another sign that the broader trend is still
Diamondback Rattler.
The bears here. It's not
6 feet long. What the heck?
Whatsoever in terms of bullish price action. So RSI
that's
as well.
Insane.
Plunging downward, and the only maybe bright spot here in terms of momentum is that we haven't quite crossed into that oversold area just yet. If we break even lower outside of the channel and cross into the oversold area, that could be a pretty bad situation once again for anyone who's bullish on this name.
I've got Build-A-Bear up, Asana,
and resistance here. The 103 level might be a point
where
broke
that level
we could see some buyers willing to step in. That's our volume profile point of control, the area of heaviest trading on our chart during the given time period. In terms of resistance, this 112 level.
A bigger snake like that, though, it's
old support
less poisonous,
now
isn't it?
Become new resistance here. So
not to say it wouldn't kill you, but
103 and 112, those are some price points to watch.
Like the smaller ones that have more
Rick, I
potent
think that's
venom.
really well put. And I think also important to be, it could be risk defined here.
Yeah, that's a big level there on SPY.
The volatility and, like you said, the lack of trend we've seen as of late. So we'll leave it there. Rick Ducat, our chart master, appreciate
Time
your
no snake charmer
as always. And Alex, when looking at this name, while it's not seeing nearly the degree of selling that JD is, we are seeing a obviously lower day, pretty substantially in Etsy shares. So leaning now more neutral to bullish, perhaps.
I think we'll get a nice engulfing candle here.
There's still a marketplace for some of these
on the
highly
downside.
discretionary items.
Pretty oversold.
Maybe I should actually stay off
a
Etsy
5 minute.
because I think I'm like their target demographic.
Yeah, I've never been on it, so I can't speak to, I guess, in specifics what's being sold on there, but I got a hunch. I have an idea of the things that are being
came
sold.
out at 1.
Looking at this, though, I think that this could be
maybe what started it.
Sure, the tip of the iceberg when it comes to analyst moves.
29-year 11-month bonds, 3.87%.
Adjust their ratings and price targets in sympathy.
2.23 trillion reverse repo. 101 counterparties.
But say you're
Biden's new budget proposing eliminating the carried interest tax break, which allows private equity managers and venture capitalists to pay lower rates on their earnings from their investments they make.
Pin at 100 in this case for the trading.
Chinese oil consumption expected to peak around 2030.
But it's a neutral bullish strategy. We're looking at a skewed put butterfly with those short strikes at 100. All out in the April monthly expiration, so a little bit over a month and a half till that date. Buying the 105 and then defining the risk below by buying the 90 put. So this really consists of two vertical spreads smashed together.
Okay, has no
105, 100 put vertical spread.
I don't know the next level
here
on SPYs is
being the 190 put vertical spread being sold.
Pretty
Together,
far down
they create
here.
a butterfly, but because that $10
they might
wide
end up
spread
being a
on the
big
credit
day.
side is bigger than the $5 wide debit spread, it's done for a net credit. And that net credit of 50 cents allows for this to be a neutral to bullish trade. That theoretically does not have upside risk, as if these options expired worthless, aka they were out of the money, you would simply keep the credit. And so
see, I got 4 of those contracts.
Best case scenario, as you can see, theoretically, is a move towards 100. The reason being is that's where both these spreads go towards their best case scenario. In the case of a credit spread that's expiring worthless for the trader or investor that has that, and for a debit spread that'd be fully in the
still
money,
flushing down
where
here.
they would go towards max value, and that assignment or exercise process would work towards the best case scenario. In that
7 hours from a city.
But it also brings the break even down to 94.50, so it allows for this
Cracked
to
a
be
whip.
more high probability, almost
Crazy.
a 10% cushion, or a little bit more than
Aces
10%
memoirs.
cushion from the current share price of
No, because the snake is probably
again 94.
it probably goes after that whip,
takes place below
90
right? On this one, so it needs a big
because as
move,
it's coming
Jenny,
down,
I think that's the long
I
story
mean, it happens so quick, but snakes
for
will
this one to be completely cracked to the
try and
downside.
Yeah, I think that's
attack
really
it or hit
said.
it or
And also
whatever.
pretty straightforward
Fight
trade,
it.
one that we look at pretty frequently on the show.
But if he's
also
cracking
important
and
to keep
hits
in mind
it,
for both of our example trades today, they
you don't even have to
contain
like
multiple legs that can
be
lead
that
to higher
accurate. It'll go after it.
fees. Short options can't be assigned at any time.
Right?
And
I've heard
term option into expiration can add
when you
additional
when you
risk
kill
of unanticipated exercise
kill a
or
rattlesnake,
assignment. Now coming up next, it's
you just
time to look at Asana.
you don't even have to look. You just point your gun in its direction. It'll look right at it.
Over 20% on the back of better fourth quarter results from Asana, as well as a path to profitability.
You can close your eyes and pull the trigger. You'll get the snake. Maybe the same concept with a whip. Massage partners. You're so wise. I'm not cracking whips. That's Ace's story. I'm just talking about how you don't have to aim with snakes. They'll look right at whatever you're pointing at them. Are there lots of Asians in Florida? Not really. You been to Pacific Northwest? Maybe more than I don't know. Montana. More than Mexico, I'd say that. Just hanging out at these lows. That's good. That's good. Tesla, I think I'm at my break-even spot now. Nice, I'm up 23% on those Tesla puts. Rivian, I'm up 25. A sell-off into OPEX, I think that's kind of common. Especially quarterly. We've got what, SLD starts Wednesday of next week? Tuesday, Wednesday. The market usually sells off then too. Yeah, Pacific Northwest, Northern California. I don't know if snakes can see bulls. No, they see the end of the barrel. Can't just shoot it from any direction, like any range. You like put your gun in the direction. You have to be close to it, like get real close. Not like with a sniper. What? Snakes? Yeah. Alright, new low there on SPY. 39,608. 396 even. Crypto's dumping also. Yeah.
Highlights. They continue to say that the demand for
Snakes are
jet
fast.
engines continues to
They don't travel
just
fast, but
increase
they strike so
every single
fast.
day. And at the end of the day, they're actually having a
insanely
hard time
fast.
actually trying to meet some of that demand. It is
What's
really
on
becoming
fast
a little bit of a
snakes?
challenge, but the opportunity is still there for growth. So that was also another item that was pretty good. And they also affirmed GE Vernova, which is their renewable energy business. That one has been the one that's really been struggling here as of late.
I mean,
they did say that they have lower
they don't travel quick or fast.
Adjusted organic revenue growth for that particular segment,
But they can
and they're
strike
looking at an operating loss
quick.
between 600 million and 200 million. So that's
And
actually
fast
a pretty positive
for a short period of
sign
time.
for them. It's been a business segment that has been dragging down
39,
their earnings here for the last almost
395,
2.5,
90.
almost 3 years now. So Alex, overall, it was a pretty decent.
And look how
investor
BY
day
just
as
holds.
They are trying
Sort of,
to get ready
maybe.
to spin off some of these companies, as you mentioned, and we are seeing the stock move to the upside, even though the broader market is currently negative.
1780
yeah,
down
I think
2%.
It's interesting. Obviously, the last, let's call it 6 months, I think it's a little bit less
Tesla's
than
down
that, just kinda
2.6 at 177.
have been really, really impressive for GE.
Yes,
but
let the
for
sell-off
long-term
begin.
investors in GE,
Do it.
it's almost like a little too late because this stock at one point was the top dog. This was the biggest company in the world. Could do no wrong. It was the Apple of its time in many ways.
Yeah, you
and
you
has
point
really
your,
had
I mean,
a
shotgun.
very public fall
but
from grace. Jenny oftentimes talks about IBM as a name that's sort of in that same camp. But taking
cat tests positive for cocaine.
Combine that with some positive news and the fact that things are just not worse
This
than they said they were
inputs,
going
is
to
it
be.
working?
And in a market
Yes,
where
I don't know how this moves with the
companies
market.
are downsizing
That's why it was hard for me to
staffs,
give you some analysis.
adjusting those metrics lower.
But yeah,
just saying,
back
hey,
to
we
maybe that 50 moving average.
Apparently is
If that drops, if it fails that, then
6% with the rest of the market in the red.
yeah,
Have any
you might
final
have
thoughts?
pretty big downside like back here.
I completely agree with you. This might be a situation here, Alex, over the long term where the company really got aggressive when it came to returning value to shareholders in the form of a dividend. It started being really just a dividend generator, even though the stock wouldn't move that much. We see the same type of movement in AT&T. So obviously the business itself started to slow down in various segments, and they had to adjust their overall strategy here. And so now we are seeing a different method of their business, trying to.
If you're already up on it, then you haven't risked it because it hasn't broken.
Areas, aerospace, they are going to be spinning off the healthcare. They have, and then they are looking at potentially the renewable business as well, and just trying to have a very core focus at this point in time. So
that's all excuses. I mean,
if you have a dividend yield that is very attractive, it's great.
It's like earnings. Stocks move up or down. It doesn't matter if it was good or bad, or beat or not.
When you slash it, you also
the time you get to sell or buy.
Investors that were interested in that dividend yield. So I think that's actually what occurred, and now they're trying to just readjust.
Good stuff.
Yeah, if the rest of the week is
let it be a cautionary tale.
Neutral to hawkish, we're going to see some pretty big move to the down.
If you're an investor, know that things can change. Just because you're the top dog now doesn't mean you're always going to be the top dog. But
Elvis claims tomorrow morning.
Leave it there. Senior markets correspondent for the TD
I should probably close out of my shorts just in case.
Always with great insights. Bring back in Jenny, and this is a name that I don't believe we've ever talked about on the show. Asana, workflow management, project management software. I would say it primarily targets small and medium-sized businesses. But they do have enterprise plans. They do have some pretty darn big companies working with them like Deloitte and Salesforce. So I don't want to pigeonhole them to only small companies and startups, but I think that's their bread and butter.
I completely agree with you. And the only thing I really ever known about this company for fact is that their CEO is one of the co-founders of Facebook. So that was how they were always on my radar. But more to be excited about today. This is a project management software provider like Alex laid out. They did report quarterly losses that were better than expected. And also right now really provided outlook. They gave the street a lot to be hopeful for here, really citing the fact that they will expect to return to a path to profitability quicker than what had been previously guided for from management. And as a result, we saw shares absolutely skyrocket. Now, on an adjusted basis, they did lose 15 cents per share. This was more than double.
I didn't close my shorts.
Improvement what the
I almost
street
closed
had been
them here
and
and then
also
here.
was an improvement of about 10 cents from losses reported a year ago. Revenue rose 34% year over year to $150 million roughly, compared to $112 million reported last year. Now, for the first quarter, they do see
NVIDIA has
sales
lots of
coming
room for the
in
downside.
around
Depends on your time frame.
151 million. A sequential growth, not really at all on that fact, but also then for that reason, that is coming in ahead of what the street had been expecting. So not able to really grow quarter over quarter here significantly, Alex, which is one concern I had when looking at these numbers, but still able to at least beat their prior expectations.
Got multiple RSI
They are
divergences.
also forecasting now for the full year
MACD's already bearish.
638 to 648 million, with an adjusted net loss between 55 and
already
59
had the dividend,
cents per share.
so
Also,
no
both
reason to hold it
figures
now.
did
It
exceed
should sell
street
off.
forecasts. They did report earnings as other,
No, I didn't close
that are
Tesla.
related to this space, like
I said that,
Salesforce
like,
and
oh, I'll close it
Workday,
break even,
have
but
had to scale
I knew I
back
wouldn't.
layoff workers. They have highlighted
Once
the
I
fact
start
that
getting
this
profitable,
earnings
I just
call,
want to
they
keep
have
holding
not
it.
yet fallen victim to
And
a lot
this
of
is
the
kind
same
of what
woes
I've
that
been
some
waiting
of
for,
their
I guess,
larger
anyways.
scale peers have had to. For that reason, shares are outperforming on a year-to-date basis, at least up about 55%.
No, my Tesla
A lot of
puts
this
are-
can be attributed to the fact that they're
They
up
were,
nearly
let's see,
30% this
they've been
week,
negative basically
and
since I opened
up
them.
about 90% from their
The
low.
things just held up
But
so
you look at
well.
a longer-term chart,
But
you
they're
see
finally
a
up
much different
20%.
picture here, as this
They were even
stock
negative
once traded
today.
over $140 a share.
This is a
now
pretty
we're
big
trading
one.
at
That's why I was going to
just
sell it
over $21.
quicker because
So
I
it
got
has been
1100
a
in this
slow climb lower,
this play,
but
and it
still
expires next
painful
Friday.
for the ones
So,
holding at around 140.
Yeah,
but the strikes aren't very
honestly, I don't know
risky
if there's a better
because it's
example. I
a
thought PayPal was
145,
great,
180
this
put debit
is
spread.
the
So
chart of the
my break
pandemic
even's
winners,
174,
now the
which
post-pandemic
Tesla
losers.
is
And even greater
almost
than
at.
that
It's
is
at
that it doesn't really
176.
have much time as a public company beyond that. This company
So
became
max profit would
public
be sick though.
basically
144.
in the pandemic, and so you can see the run-up in the early parts.
SPY is really
21,
flushing now.
22,
This is
and then,
getting pretty
the
big, down
subsequent
0.83%.
fall, through the duration of last year.
Not much left until
This is a name that
394.
has laid out now the important message
GME,
that, hey, we're
oh,
going
it's
to
Tesla.
turn that
Oh, Tesla's starting to
final,
dump.
that final turn to go from just growth to actually returning
GME's
earnings
not
potentially
really
to
started
shareholders
flushing
down the
yet.
line because they're having earnings. And so I've said it a couple
Yes,
times
Rivian
this
started
week
giving
in
it
these
up too.
conversations. It's one thing to say it, it's another thing to actually do it consistently. So the message is now out there. The question is, do they deliver
Ketchup
on that
spraying
message?
everywhere,
It's
except for
certainly a
BBBY.
company,
This is why
others in this
one of the reasons I
space
love
have
this
given
stock.
the roadmap. You mentioned Salesforce, although they're not exactly the same.
Doesn't
There's
care what the
certainly
market's
different
doing.
types of software. It can be done.
Yeah,
in
Tesla's
terms
got
of ultimately doing this at a
some
profitable,
downside still.
pace, and we'll see if they're able to do it. But
For sure.
from a
I
trading
mean, it just really
standpoint
started
here,
this.
I wanted to look at.
It's been slow, but it started
something
like 4
on
days
the
ago.
hyper-bullish side. This stock obviously is.
But it's held up when the SPY sold off.
And
Like,
if it does,
all of this,
you know,
this
make
was
that
all,
final turn, if
I
it
think,
does
just
spur
investor
back
day
that
hype.
optimism,
Because the
is
SPY
there
was going
room
here.
for a little bit of escape velocity
So I think
here
it's got a
back
lot
up
of room.
towards 30.
Got that gap
if
fill.
you think that there is, and this is a trade
I
illustration
need that gap fill
fits
though
that
by
outlook. Going
here.
out to May for the long end
Oh.
of this call
But
calendar.
it could happen. I mean,
selling the April all
once
at the
Tesla starts
30
going one
call
direction, it
strike
picks up
for
speed.
30 cents. So a lot of 30s here.
Go
Total risk
fast.
would be $30. This is bullish, Jenny. This would need almost a 50% rally
But just a couple,
to get to
1 or 2
30
days of a
bucks.
bounce
We
and
know
the
what
whole
calendar
place
spreads.
just
It doesn't
wrecked.
have
So
to perfectly
that's the
get
sketchy
there.
part.
But it needs to get on its
And
way.
you've
It needs
got
to get close.
jobs data, you got
especially when the
CPI
stock's
next
trading at
week.
like 20. So it's certainly one that is optimistic, and it isn't even necessarily, my particular outlook on this. But I think today, when you have an overall market that has just faded and faded hard, almost down 1% across the board now, to still be at 20% is saying that there's real excitement in this stock. And you think that's going to continue, and you want to bet on this name, or believe in this name,
hold
want
these
to invest in it, want to
shorts
trade
or
it, want
not.
to look for upside, this would be
Probably shouldn't.
potentially
Not
one way to
pretty
do
big
that.
on them.
Really looking for a big move. Again, to go from 20 to 30, maybe not the highest probability event, Jenny, but because of that, 30 cents, $30 in risk, it's a little bit smaller trade than the other ones.
Yeah, and I think that
Could
the
scale
analyst
out, same way
community
scale
agrees,
in.
basically every analyst I saw
Yes.
today that upped their coverage on this name had a buy rating, buy equal rating, and was raising their price target. So there
Scale
was
out.
street enthusiasm to back this
I'll
really
hold one,
sizable move higher
so it
today in
looks
Asana,
green.
which I don't believe we've talked about either.
easier to
Alex,
average
today is a
into.
great day to talk about this as a FOMO candidate. But
Jenny
that
is-
does it for this segment today. Now coming
Yeah,
up
I sold
next,
one of them.
we'll
I'm up like
switch gears
780
here a
bucks
little
on
bit.
them.
I sat down
On
with
the 4. before.
Schwab Pomeranz to discuss the
So
best
if I had
ways
done
to
a
set
full
aside
size ES,
additional
not a micro, it would have
cash
been
and what to do in terms of investing. We'll dive more into that conversation
would have been like
coming up next.
1,600. But it's easier to manage when they're micros. And I want margin for nat gas. Gas longs. CEO of Exxon says Woods has the... Oh, his name's Woods. Wait, Woods? Woods has that Europe's punitive measures against fossil fuels are prompting majors to reconsider and relocate their investments. It's still pretty early though. It's not even 2 o'clock yet. Got a green candle there on SPY. First one in like 40 minutes. 30 minutes. The 5-minute candles at least. I close out of one of my shorts here. A reversal? No. But, I mean, once it sells off this much, it's possible it'll bounce. Like I said, I closed out of one of them, 1 of 4. So, could make new lows. I don't really see this as even a support. A weird spot, it stopped here. Yeah, kind of a strange spot. So it could make new lows. But the momentum definitely slowed there.
Your time frame to determine when you should or where you should actually put your money.
So what really are the best options in your opinion for storing everyday or this emergency cash?
So the whole object of putting cash away for an emergency or something that you can need right away, you're not expecting to have high returns. So you want
store
to
it in
put them
BBBY.
in
It only makes sense.
like maybe a savings account or a interest bearing checking account or a short-term CD. Again, it depends on how quickly you need the money.
No, it is a good idea.
So we've talked
Interest rates are so high right now, you get like 4.5%.
About where to put the
It's a
money
good spot
that
to
you
park
won't
cash.
need for a longer
Oh,
period,
show.
ideally say several months or even longer.
Yeah, Fidelity's offering, I think,
my own example,
4.5%.
because I've been thinking a lot this for our own finances. So we have an interest-bearing checking account for our day-to-day transactions. We need the money, those are for things that we need the money right away. And then we owe we knew we owed some taxes in April, and so a couple of months ago,
This girl's rich. She owes taxes.
money away in a certificate of deposit
Making
for
that
3
money.
months. So we've got a
400 in
little
a
bit
day.
higher interest rate. And then we're actually doing some construction that won't start up for another 6 months. So we have our cash
That'd
and
be a pretty big
T-bills.
reversal.
So we're getting a little bit more interest on those. But so you have lots of different options. Again, interest-bearing checking account, a savings account, CDs, again, certificate of deposits. You can invest in those anywhere from 3 months to even 24 months. And again, the longer you hold on to them, the more interest you're likely to get. And then treasury bills, you have to put that money away or plan to put that money away for 3 to 12 months. And then there's also I bonds, which adjust for inflation, but those have some limitations.
Yeah, and I think understanding the characteristics of all these different types of accounts is so important right now, especially when I think savings, or at least being aware of your savings, is top of mind for so many Americans. But great conversation. We'll leave it there. Carrie Schwab-Pomerantz, Managing Director at
more
Charles
flush,
Schwab,
new
and
low
the
on SPY.
President
Look
of
at
the
that thing
Charles
go.
Schwab Foundation. Thanks so much for all of your insight today.
Thanks for having me.
That's why it's good to scale out. Woo.
As always, coming up next, we got Under 30. We're looking at Build-A-Bear Workshop with George Tillis. We'll be right back.
Finally, they're talking about stuff that's on my watch list. Sana and Build-A-Bear. 394.29. BBY broke through that 127 again. Flirting with 126. There's 126. Eyes flushing here. Red equals green, so it's good. $395. Yeah, this support didn't make much sense here, so it was just a pause. Pizza place? Pizza. Alright, mate. Brings happy babies? Oh, baby money. Thought that was my saying? Happy money brings happy babies? Big. You'll have to wait till end of stream or the video. You hear that little jingle? 176 on Tesla. At 174.30 for break even. We'll just need the rest of the week's data to not be overly bullish, and we'll probably continue to sell off. I mean, even look at like today. So, give a little picture into the rest of the week. Today, the jobs data was actually bullish. More people lost their jobs, which is bullish on the market. And it had a little rally, but look where we are now. You know, 3 hours later, and we're selling off the little pop that was from bullishness. So, you can see the direction the market wants to go. I do a day.
That they'll be reporting in the next few months or so, but the earnings projections, or the numbers that were reported, $1.30 a share beat the estimates by 18 cents. versus a 97 cents last year. So you got 30% earnings growth with sales growth, nearly 12% beating the estimates of 145 million. The other thing is the company's guidance is rather conservative, and I consider this a good thing. Now, if you look at the quarterly breakdown in sales at around 11.5%, the guidance for the full year is between 5 and 7% range, and that's modest. But the kicker is the earnings growth for the year is somewhere in the range between 10 and 15%. So effectively, you've got a double expected earnings growth compared to sales growth. Both these numbers are actually more conservative on a forward basis. I think that's a good thing, considering we have got situational concerns, interest rates, lower consumer spending, and all the macro conditions. But the company is also very confident in its ability to grow its gross margins, which actually grew about 150 basis points to 55% of sales. They're paying a special dividend, and it's $1.50 a share for those who purchased the shares before the 23rd of March and hold it through April 6th. And considering the stock price at around 25.5, that's about a 7% dividend yield for investors who want to participate. So really good report, a really good year for the company. And I will say this, I did notice there's a lot of short interest in the stock, 19%. And this is a situation where you'd have to ask your questions, why are you short this stock, especially with margin expansion, more conservative guidance, but still you got double EBITDA growth compared to sales growth. And that in and of itself speaks to trends that should go from bottom left to top right. And so again, this might be a little bit of a short squeeze as well for those who are short of the shares.
You know, I was looking at this, and I think they've sort of figured out something like we were talking about yesterday with Lifetime and certainly other brands that fit more of a luxury role, be it fashion, be it automobiles, whatever is. You build up this brand perception, maybe build an experience around your product, and people will spend way more than these things cost. And you get some pretty robust margins on something you can buy at Walmart, quite honestly, that you probably couldn't distinguish between the two. My question, George, is why isn't there pets toys? Or if there is, I couldn't figure it out online. It seems like an easy way nowadays to just quickly double your target demographic. I know my dog would just tear it to shreds, so maybe I would stay away. But it seems like in the modern world, we kind of treat our pets like children, especially if you don't have kids yet.
Well, that's a good question. I don't know if they actually sell the pets. I didn't look at the company's product lineup on their website.
You're talking a shorter time frame, I bet.
I think that's another potential market that they could capitalize on. Total addressable market for pet spending is quite large in this country. We know that. So yeah, I think that's a good point to bring up. I will say this. People don't necessarily want plain vanilla stuff. They want something that's special. And I think that's one of the things you have to consider when you look at specialty retailers like Build-A-Bear. People are willing to pay a premium price for both an experience as well as a product. And that's where Build-A-Bear seems to shine. I mean, if you just consider gross margins at 55%, that's close to some of the luxury retailers, like Coach Brands or the other luxury retailers out there. So they give you an idea that the products are very expensive. Their cost of goods sold and labor is a lot cheaper than that. And the company's profitable. And if you consider the forward earnings that the company's expecting, about $2.88 a share, it's only trading around 7.5 times 2023 earnings, but it's expecting to grow.
Might close another short here. I don't know.
15%. So it's trading at half of its EBITDA growth and even half of its net income margin, which is around effectively 14%.
That flush was pretty fast.
I can't say whether
that little move was
but I can see why the stock is higher because they're executing. And there seems to be still a lot of demand. And of course, when it's a unique product, you have pricing power, and that's also good for margins.
Yeah, George, I completely agree. I know that there is some rationale to the fact that they are expensive and you could essentially get the same product out of Walmart, but I think that, at least from my own experiences, there is something unique and special. And you can get like someone's voice implanted in your teddy bear or what have you. See, I understand paying a premium for that. My only concern is the fact that they're in malls, and malls are essentially, at some point going away, at least they say. So that's only my issue with the stock, but we'll leave it there. And a nice move higher today. Appreciate all of your insight, George Tilla, senior markets correspondent for the network. That also does it for Alex and myself for this Thursday. Coming up next, we have the watch list with Nicole Petalides.
See this inverse head and shoulders building on here? Mm-hmm. I'm liking it down here at these levels. I'll pick up some more. I gave away a $6,000 profit right here on that. They've been scaling in all these days. Buy just kind of consolidating down here at the lows. Down almost a whole %. Drop off one more short here. It maybe could come a little lower. Looks like it's wanting to bear flag. Whoa, big flush on that gas. Yeah, I'm getting to want to pick up another contract already on here. See if I can get this low. 485. Got it. All right, I'm up to four nat gas contracts. Wait, what? What does that say? It's broken. Let's seriously just do that? My gosh. Just got screwed by the market maker. Or this dumb chart. I'm the cause for that big green candle right there, I think. With one contract. $470. Did I put 2480? Put 2485. That's what it was showing me on the chart. Okay. Rough day? It's a good day. Good day, Gilead. Broke that low. I might be able to set up a divergence. SPY is coming down. That gas is getting cheap again. Oh, now you say short all tops, huh, Mr. Invest?
It's a very interesting one and tells the bigger picture. Tell me a little bit about your thoughts on these two names.
You're absolutely right. That is pressuring both stocks and other automotive stocks as well. So first off, they both did get bullish notes from two separate analysts, and that's why they could be higher. However, GM is announcing that it'll have voluntary layoffs or voluntary severances for its employees. It didn't announce how many employees will be affected, but it noted that this company is trying to scale down its costs just like every other one, right? And the company as well says that it's going to charge them or cost them about $1.4 billion of pre-tax separation charges, and that's along with up to about $300 million in pre-tax non-cash pension curtailment charges. It costs a lot of money to save a lot of money, essentially. And so we'll find out more about that and whether or not GM is actually going to release how many people go for these.
You're bearish. You're telling all of us it's going to go to 400.
Right, understood.
That would be quite the move. 392, yeah.
Names today. Appreciate it. Now let's take a look at the
on that last level here.
With us, head of investment management at OPTO Investments. Thank you for being here. So we've had somewhat of a back and forth action type
down
of
over
market
1% now.
More to the downside, right? The path of least resistance seems to be to the downside of late because we've been somewhat range bound. And as we moved up against some of the higher parts of this, we started to pull back.
Still have a couple contracts left to sell.
What are you watching now?
Two.
Yeah, that's exactly right. And thank you so much, Nicole, for having me on today. It's really great to see you.
Getting fleshy.
I mean, the things we're focused on is what everybody else is focused on, which is everyone's listening to Fed speak and what the markets are reacting quickly to data. And that's exactly what Powell said. You know, he came out and said earlier this week that there was a path to higher rates more quickly. And then he came out the next day and said that they were going to have a data-driven approach. And then today, the markets initially reacted positively when unemployment numbers went up, signaling that maybe there was weakening. But then I think started to tumble as people realized even though it was up, those were historically low numbers. Maybe there was a little overhang from the Biden budget coming out and showing higher taxes in the future. But I doubt everyone really believes that's going to happen, you know, in its current form. So I think, you know, markets are very sensitive to anything that's coming out these days. And you know, but I think the important thing is for us here at Opto, and I think for investors, is to zoom out and really focus on the long term. So that's what we think
BBBY,
about big long-term
big punch of volume there, 2.9 million
on Fed speak from a day-to-day basis.
Right, because the inflationary pressures remain at this point. There is obviously the concern about recession and higher
they can gap over stop losses.
That being said, you're trying to take a bigger picture. How are you able to do that? And what are you planning on as the economic backdrop for the next
paper account
few months?
For them.
Yeah, no, I think what's really been interesting is what we've seen since the global financial crisis is that the Fed has reacted very quickly to drop rates in the face of any sort of rising unemployment. And what we have to remember is the Fed has a dual mandate. It's price stability and employment. And right now the focus is on
large
price
orders.
Stability, which
it's
means
a big volume right there.
Under control. So I think when you're
our daily volume, we're almost to yesterday's.
Keep that in mind. I think when we talk to people in the markets behind the scenes, I think there's a lot of people have the view that, you know, even though there's a lot of rhetoric around
big buys,
rates
but
and keeping
they're not sitting on the
longer,
L2.
The Fed will pivot if there is
1,800 buy there at 127.
When it comes to unemployment,
1,000 buy at 126. 127, 1,000.
Inflation and not employment right now.
4,500 at 127.
So, the question becomes:
1,500
are they
at
really
126.
Try to push the economy down to a 2% inflation rate?
4,800 at 126. 6,700 at 127.
Has to be inflicted, I think, on labor
2.9 million. That's that one at 129.
2% long term.
That's the one
so
hit right there.
About this market, we want to look at businesses, companies, and investment strategies that are poised to be successful in this higher for longer interest rate environment and a higher inflation environment.
Right. Understood. I mean, you were noting some things like real estate, venture capitalists, IPOs. What's some of the backdrop that you're watching behind the scenes, the private markets? Because we can see what's happening in the equity markets here, but
that gas is bouncing.
You're seeing more
I think I started that bounce.
Absolutely. You know, another one of the big themes that we follow, and that I think a lot of folks are following, is that the traded equity markets, public companies are a much smaller percentage of the total U.S. market than they used to be, and so activity in the private markets, although it's harder to parse out what's going on, is important to follow as well as a driver. And the transmission mechanism from the Fed to private markets takes a little longer. We have to remember that all Fed action happens on a lag, and so a lot of the interest rate movement that's happened and that we've seen public markets react to has not been transmitted through private markets. Now, one thing you could definitely see, I mean, people talk about the IPO market shutting down. A lot of big tech companies benefited from the IPO market. That's no longer an option, so companies are staying private for longer. I think we've seen the big traded tech companies have a lot of layoffs. They were poised. They looked at the growth numbers during COVID. That growth was sort of pulled forward because of the increased adoption of technology during COVID times. Well, now what's happening to all those folks that got laid off from these big tech companies that have fantastic backgrounds and expertise? They're looking for new jobs. They're looking to start new companies. And the venture market, while there's been some negative noise around venture, there's a lot of dry powder in the venture market. That is the innovation engine of this economy. And you have highly skilled, highly talented workers that are ready to start new companies, and those companies will be the ones that are changing our economy 5-10 years from now.
And so as head of investment management, what do you suggest to folks on ways to protect money, protect your principal, get money to work, maybe do something like a barbell approach where you have something more risky and more safe? What are you telling folks?
Absolutely. Well, I mean, the first thing folks need to do is focus on their individual situation. Right, there's not a one-size-fits-all approach.
I kind of fit right at this level I've drawn here.
If you need income,
see if it flushes through there or not.
Focus on what your own needs are and build your plan around that.
Seems like it might though. It's kind of bear flagging.
If you're a long-term investor, if you have the ability,
so kind of the last level from this range is 392.34 is the low.
Participating in the public equity markets, you definitely can get a good yield on cash and sort of low-risk instruments right now. But I do think it makes a lot of sense for people to participate to the extent they can.
No, I've never heard any of those people Mr. Invest.
To get more people access to the private markets is to participate in the innovation economy, to participate in real estate generally, which is an inflation-protected asset in certain sectors. There's a lot of really interesting dynamics in private markets that people should be looking at and thinking about long-term how that can impact their goals.
Yeah, so we'll have to wait and see what the Fed actually does and what kind of jobs report we get on Friday and so on and so forth. Our first Fed meeting, March 22nd, and then we'll have May and June. Thank you so much. It's great to see you, Matt Malone of Opto Investments. Thank you. Later this hour, I'm joined by Wedbush's Dan Ives. He'll discuss the very latest news on Apple and Tesla. He has bullet.
BBBY right at that 127. GME down 2.7%. Tesla still melting down 3.3%. Rivian down 4.5% now. Wow. Yeah, Tesla puts are up 41%, Rivian's up 36%. We get a big bounce on the market from the jobs report, those could get squashed pretty quick. I wonder if I should close something. I could close one of the Teslas. There we go, scaling out, what do you know? Take some risk off. I close one of both actually. Cosmo Kramer's down 6%. Yeah, I didn't like that. Like the momentum there. Thought it might still be bull flagging though. That's engulfing on that candle. SPY new low on the day. GNS down 5%. Yeah, I like GNS. GNS looks better than Cosmo Kramer, but I close Cosmo. Take a little loss in my Cosmo. Hold my GNS. SPY might have found a bottom here. See if we get a hammer candle. This is right at that line I drew. Literally to the penny. 394.29. Look at that. The door slammer. You can hear that door slam, Christopher? Oh boy. Better be more careful. I'm gonna drop one of my oof, I don't know. Yeah, I'm gonna drop one of my shorts here. Okay. For that. So if we break here, yeah, we're kind of this last level. I suppose I could stop at 395 or 393.63. 392.68 is the body on that hourly candle low from March 2nd. Looking weak though. Might keep coming down. Be here all. Now the question is, do I keep this last one to just have it? So I'll add into it. I think so. I think I'll hold the last one.
Great calls that you guys make, but what's the big picture?
I think you know the Fed is really the biggest picture right now. When you can't really fight the Fed. I mean that's like the number one item in the markets. And right now the Fed is telling you that the economy is going to be tougher, or at least rates are going to be.
Well, that might be the floor there. I'm down to one contract,
and
so
the market is just reacting
to that.
So for now, I think we're just looking at this, and we can't say this time is different because it's not.
When we think about what the Fed is planning to do, right? So we're all prepared for 25, 50 basis points, whatever it's going to be, for the next few meetings.
Ooh, maybe close my Tesla here.
In the meantime, it's very hard.
Sounds like they're at a sports bar, always.
Portfolio, trying to pick the winners.
Right. Yeah, I'm gonna close one of my Teslas.
We had the 2000 boom tech stocks. We had.
Do you guys like watching me close?
I
imagine you would. Watch me open and close trades.
More easily, and you could pick the low-hanging fruit.
Sure.
Now it's more difficult to be a stock picker, right?
100%. So if you think about it, there is a new asset class now, which is basically
cost.
Cash. We haven't seen this in the last.
I don't know. I think I just made that.
But I can get 5%
close to free. It's up almost 100%. Wow.
So the hurdle for taking risk, the hurdle of
Rivian,
owning an asset right now
might leave both
is much
those.
higher. You have to have a higher return. And you couple that with the fact that the economy may get tougher, and and as a result, companies have to be a lot more stringent with their capital.
But yeah, I guess I just realized like 750.
The stocks that you want to own going forward have
not
to
Tesla trade,
provide
so
you that,
yeah, just made it free basically. So now I have one put debit spread
10,
left.
15, 20% return over the
And
you have to be excited about what
max
it is
profit on
that
this
you're
one is
investing in. I mean, we've
$3
had so many
grand, so
conversations about so many different
it does
things.
come down to
In
like
fact,
140.
You and I talked ahead of the Tesla Investor Day, and you were saying Elon Musk is going to come out and that the succession plan was something that would be of interest. I didn't necessarily think that was going to be the number one topic, but it turned out you were right on. You know, I admit, you know, I was looking for a lot of things from Investor Day, and I think people got enough from Investor Day. What was your takeaway?
I mean, I think he showcased the depth of the team, right? I think we saw, I don't know, 35 executives that came out, all very capable. And that's what you want from a bigger company. You know, he showed a Tesla that is more growing up, that is building some things for the future. It has a huge moat.
Once GME breaks this,
very, very tough
we could see
to
6, 7, 8%
I mean, if I'm an
days.
executive for another car company, I'm scared. I see what they're building, what they're doing. I think I'm really trying to figure out what I do.
Where do you think Tesla heads? I mean, when you look at the possibilities, I'm sure you have a bull case, but basically a base case. It's at 176 now.
Right.
Where do you think Tesla's headed?
I mean, it's I think if you go back, it's
double
kind of
digits.
a secular growth story where Tesla is a company that is in the right sector, which is the electrification of the fleet.
Right.
So they are, you know, the leader in that space, and that space is growing. So for us, when we look at Tesla, we think there's really no better company to be able to accomplish the, you know,
that's
the
crazy how quick that Tesla put went up.
You know, 85
It made that
million
100%
cars
today.
to be electrified for the next 10 years. And I don't know, maybe Tesla will get to the 20 million cars. So it's a really huge upside for us.
From 0 to 100.
Understood. And you know, people say Tesla's not just a car company, right? It's a battery company, and they're doing all their manufacturing all over the world, which brought them some ease during COVID. They were able to move things around and sort of battle some of the
up a little bit
hurdles
here.
of the supply chain that some of the other companies had to deal with. Let's turn your attention over to streaming, because you have top picks of Netflix and Disney. What's going on in the world of streaming? What is it that you're watching, and what are people talking about? Why are these names that stand out to you?
I mean, it's super interesting, right? When the pandemic hit, basically all these streamers have gone out, Netflix especially, gone up quite a bit because everyone thought we're going to stay home, we're never going to get out, right? And they've accomplished some amazing growth numbers, almost 240 million subscribers, and there's been so much money spent.
Get one last little push down here, honestly.
Was flush with new cash going for content.
At least a retest for a little double bottom.
And you have Disney Plus that came in, but also you have Paramount and Comcast and all these companies that came in and really
that
spent
gas
a
has
lot
moved
of money.
up.
But now that things are getting a little bit softer,
Getting close to green on those contracts, which is crazy.
Saying, okay, is this model going to work out for me long term, right? So you're seeing some pullback right now, and especially with the Discovery purchase. With Hollywood right now, I think Netflix is the winner. That's an obvious one. And Disney had some issues, but I think having Iger back is really changing the rhetoric around what's going to happen with Hulu, what's going to happen with their streaming business, how much money they're going to spend on content, and so forth.
And, you know, ESPN is another part of Disney, too. And there was a lot of criticism of Bob Chapek and how he was running Disney. And so a lot of excitement when Bob Iger came back on. And even Nelson Peltz, who was trying to get on the board, he said, look, based on the reorganization and what they are planning to do, I'm not going to push to do that anymore because I like what they're doing. When you think about Netflix, what is the growth for Netflix going to be more abroad? Is the penetration here in the States pretty much fulfilled?
Yeah.
You know, they'd have different price points around the world, right?
Yeah. The global story for sure for Netflix is bigger, but also there is a lot of households in the U.S. that are not paying for Netflix. So the password crackdown is going to create some additional revenue. They think as much as 50 million households have Netflix without paying for it. So there's a huge upside there.
Right.
Think
the sharing of the passwords,
correct.
right?
Yeah. For Disney, I think nobody liked Chapek. You know, he was not he was a parks guy. He really kind of vexed or hurt a lot of the creatives in Hollywood, and then I think eventually that just did not work out, and everyone's excited with Iger coming back right now. So.
And where does Apple fit into all this picture? You know, there's so many parts of Apple. You have Apple TV, of course.
Yeah.
And then Apple, the big picture of Apple.
Yeah. I mean, listen, Apple is spending some real money in Hollywood. I think it's still a passion project for them right now, streaming, but it's really about part of that service bucket that they bring in.
Yeah, as AMC Head and Shoulders thing is playing out.
Apple, if Hulu is going to be in the market in
Gap's about to get filled.
2024,
right?
And if Apple can come in and buy it, and it's going to
I'm
be
gonna start paper trading these.
If they do, that may
some
be an
of these
interesting
scanner
play. Not a lot of people
short
think it's going to
put
happen,
plays.
but I think that they may be looking at that.
That's very interesting. We'll quote you here in case it does.
We'll
We'll remember that you said that. I mean,
see.
we also have YouTube, which has done very well for Google, and having those shorts, that has been very good. And if TikTok goes away, that also helps these streamers, basically. I mean,
I might even just do like top 4.
Well, I'm so thankful that you were here today.
A short put on SI seems stupid, but it did rally good today.
On some of these things. That's MDF.
So one strike for 421 on BBY.
Kawasaki Wealth and Investment Management. Coming up next, Dan Ives is standing by over at Wedbush. He's going to tell us why he raised his price target recently on Apple, and he'll also check in on Tesla, a name he has liked for a long time. Of course, we've seen some volatility there. That and much more. The watch list continues.
Here's my short on oil. Just close all this stuff out. Short on Apple. Here's the AMC short. I think this would have worked if I just timed the exit. Oh yeah, that could still work actually. I'll close it though. And what's this? Covered call. 10,000 BBY and 100 covered calls. Oh, that's just that buy right trade. I opened them up at the same time. Why can't you find it? What is this? Close them. Buys still kind of melting up here. Let's get into this resistance though. This might not be the bottom still. See what happens on a retest down here. Not convinced yet. Bed Bath back to 127. Hours and 30 minutes. Get ahead of yourself, Mr. Invest.
But I believe it's the opposite.
Right, and I know you made the note that over the holiday season
super
it wasn't
smogged.
a demand issue. In fact, it was a supply chain issue. There was a lot of talk about whether or not the demand was waning, whether or not people really had an interest in the iPhone 14 Pro.
You get a PO box in Nevada or something.
Tell me where we stand on products and launches in the next 12
Delete
months.
the cats on
what
that
are you
thing.
going to expect out of Apple?
Blow some fireballs.
Well, first off, I mean, even when you take a step back, they've added about 120 million new iPhones over the last year. That's significant in terms of services attach rates. I think that dynamics may be underestimated in terms of by the street. But I think the big launch is going to be coming up in the spring WWDC, where
This
I
is
think they
the
announce
way.
the AR/VR headset Apple Glass. I think that's going to be significant in terms of ultimately laying the groundwork to what's going to be the AI functionality at Apple. And I think you put that with the anniversary release of iPhone 15. I mean, I believe we're sitting here at the end of this year, and this yet again is a $3 trillion market cap. Even though right now, I mean, I'm in LA, the Uber driver is bearish on Apple and tech.
What?
That's funny. In the meantime, when you take a look at this, aren't other companies like Meta?
Didn't find it funny. He was serious.
I mean, what's the landscape going to be, the competitive landscape?
I mean, it's a Game of Thrones when it comes to this AI arms race. Now, I don't believe, as opposed to maybe some others, that this is a hype cycle. I think it's real. I think right now, top of the mountain is Nadella and Microsoft because of ChatGPT. But clearly, you look at what Google's doing, that Code Red, and even after the black eye with Bard, they're aggressively going after it, along with others, including Meta, including Apple. And I think that's what I view as probably one of the most important sort of overall technology drivers that we've seen in the last decade.
Yeah, you mentioned Satya Nadella of Microsoft, and you like that they're a leader with ChatGPT. You also had over at Google, they were trying to come up with the competition using Bard, and that didn't really work well for them. And then I saw Alphabet took another leg down. What's not happening there? What are they missing?
I mean, their big issue, they were in the right lane going 45 miles an hour, and Nadella was in the left lane going 85. And ultimately, they got caught. I mean, Emperor has no clothes situation. I mean, they basically got caught, I think really off guard. They tried to spin up that ultimately launched. That was an epic disaster. And now they're chasing Microsoft, even though from DeepMind to everything else, Google's actually had the technology within their sort of ecosystem for the last 4 or 5 years.
Right. I mean, Sundar Pichai certainly was trying to corral the folks and put them in, in the hot seat to try and have a competitive edge there. Not necessarily working. What's your bullish case on some of these names here that we are talking about? Before I get to the Tesla and the EV world,
flushing down.
I would like to know where you think these names could be headed. Names like Apple and Microsoft and such.
Dog.
Yeah, I mean, Apple, I think sort of 225.
Retesting this level
is where I view sort of bull case, base case.
There's a flush, new low on it.
To $200. I think Microsoft here. I sort of think base case is about 25%.
All right, if we get to move all the way down to here, I might close my last short.
Potentially 35%, just because I could argue Microsoft that the ChatGPT actually could add about $20 per share on the sum of the parts as this all plays out with Azure.
How worried are you about just things getting in the way of these goals and these more bullish cases? I mean, whether it is an economic downturn, unemployment, higher rates, or even just a lot of scrutiny on something like ChatGPT, because there's been a lot of concerns about what's being pumped out from AI, whether or not it's actually true, where is their sources, etc. Are you expecting some hurdles in some of these things?
I mean, there are hurdles, but when I do, I mean, this week even talking to private companies,
I'm paper trading this.
And what we've seen over the last month, I mean, this is real in terms of a cycle. Now, there are security issues. Beltway could get involved.
Cash could put screener plays. The first one's BBBY, which is great. It's 421 expiration for a dollar strike.
Market opportunity over the next 8 to 10 years.
So potential returns 22% on it. Annualized, it's 186%.
Everyone's using their
so I did it with 1,000 contracts.
for 2023.
It was short of
CPI,
1,000
PPI,
contracts on the one strike,
rate goes to 6, 7.
which is 50 grand in buying power. It's 69,
that creates the opportunities because ultimately, once the Fed stops, S&P's at 4,600, and I think that's sort
received
of
19 grand though for those contracts. So do that one and then
sort of believe those that are yelling fire into a crowded theater.
I'll do this AMC one, I guess.
I see. Okay. And
Let's
look,
get
I mean, you've made a lot of calls, and they worked out. They've really worked out. I know that we've had a little bit of a pullback.
Thank you, big hugs. I appreciate it, man. Very thoughtful and generous of you. Glad I can make you happy.
Which has been under pressure over the last week or so.
Just want to give you a big hug now.
But the big picture has still been a
Thank you so much.
great performer.
Legend.
What are you focused on after that
Let's get
investor meeting?
Look, I think the investor meeting basically laid out that Musk is going to be able to really reduce.
What hobbies got, man? Talk to me,
30
Playboy.
to 50% in terms of the production costs, and that's significant.
Surfing,
that's going to lay out
skating, fishing.
What's a sub $30,000 vehicle? It was a flex
Building
the
stuff,
muscles moment.
mechanical
and you
stuff.
look at Ford, look at Rivian, look at Lucid. I think it just shows from a scale and scope perspective.
Family life, family man.
Price cuts has driven
all that stuff
significant
with the
demand
family.
out of the gates.
Buys
China's
new low here.
key variable. But I still believe bogey for the year 1.8 million is probably conservative. I think they could beat that. And I think Tesla's just going sort of, a buy on the rumor, selling the news situation post investor day. But we be buyers here.
When you talked about some of the other names, Ford and Rivian and Lucid, and I think about a lot of the competitors in China.
Are you playing puts on this, Big Hugs?
And Li Auto and BYD. The competitive landscape is becoming
SPY down 1.2%.
But Tesla certainly has that leap forward, that early leap, and Elon Musk and the vision that it's not just a car company, that they're manufacturing, they have batteries, and so on and so forth. What's going to keep Tesla ahead of all the competition in the next several years?
Well, I mean, I think it's still Tesla's world. Everyone else is paying rent in terms of just scale,
Might do the
scope,
Carvana
battery capacity, battery technology. But it's not. I don't view it as a zero-sum game. I think there's other ways to
Carvana
play.
holding up this
Some
50
of the
would be
China
pretty
plays,
good.
Neo, BYD. I think GM's going to be a re-rating name in terms of everything that Mary and the team are doing. And this is a green tidal wave. I mean, this is the biggest transformation to the auto industry since 1950s. And I think it ultimately is going to be Tesla that leads it. But I think huge investment opportunities the way we see it.
Little green candle
and
there.
Tesla, what's your target there?
Yeah, it's 225. And again, I think bull case could be closer to 250.
Right, understood. Dan, it's great to see you. Thank you so much. I'm so glad
Thanks
you were able to come
me.
on. An important time. Thank you, Dan, always.
1054.
Dan Ives, Managing Director, Equity Research, Wedbush Securities. All right, second half of the show. We are ready. We're going one-on-one with the CEO of CarParts.com. So we'll talk about how inflation is hitting the auto parts industry overall. We'll get some insight there. Also, the world of used cars, electric vehicles. We'll have all that for you. And as we had to break, take a look at winners and losers in the S&P 500, which is down 1.2%.
Okay, did the Carvana cash secured put. So I did 100 of these for, let's see, 100 of these for same expiration, April 7.5 strike. So this one's a bit more risky to me because the price pretty close to the money and not sure on Carvana right now. It could be good if it holds that 50 moving average, but yeah, we'll just have to wait and see. SPY's bouncing up here a bit. Yeah, I mean, the fact that it broke this, I'm thinking it probably is going to, well, we'll see. This is really, oh yeah, that is kind of a level. That could be the bottom. I got that level from this day over here. Bed Bath just barcoding here, 126, 127. A close above here would be nice. We'd get that wick. That divergence maybe. Let's get nuts.
All four of the majors, as mentioned, in negative territory, and it's still small caps leading the way, down almost 2%, but there you can see the NASDAQ also losing 1%. Nicole, this intraday volatility, the moves we've seen this week, reminiscent of a market that's coming to grips with higher for longer, the narrative that we heard from Fed Chair Jerome Powell, a little bit of uncertainty in terms of what's going to come from the March meeting, a week where we saw 10-year yields back to 4%, and today's jobs report, which eased some of the concerns a little bit, but now that we've heard from Fed Chair Jerome Powell and that's behind us, I think the focus is squarely on the jobs report and the wages component.
Look for bounces to short.
Yeah, and that's the whole thing. Is that report?
See what happens in a
tomorrow,
day.
I think everybody's
I'll pick a short up then, but
higher for longer and such. But
we have data in the morning, so we're kind of susceptible to that.
PPI next week that you've been talking about. Ben,
Jobless
thank
claims.
you so much. Great to see you, Ben Lichtenstein. Thanks. All right, turning our world over to the world of autos. Let's welcome into our show David Manian, CEO of CarParts.com. Thank you for being with us. Well, I mean, I'll just start with the obvious. Inflation, what is the business like these days?
Hi, Nicole. Thanks for having me.
Whoa.
Listen, inflation is top of mind, and you guys talk about it every day, pretty much with every speaker. You know, I think what's interesting for us and for most companies is that the consumer is still spending, but they're being a lot more disciplined as to where they spend and when they spend and how much they spend. So there's an opportunities for companies, not just like us, to just double down and focus on what value can we deliver to the customer, what experience can we deliver to the customer to give them a reason to shop with us.
And when you talk about shopping with you, I mean, are we looking at the world of parts, used cars? We know that people are keeping their cars longer. The longest in 20 years. I think it's at 12 years plus to keep a car. They have to replace those parts because they're also concerned. As you said,
a good website for car parts is car-part.com.
On how they spend their money.
Yeah, you're absolutely right. The average age of a car
that'll go through all the
12.2 years.
like junkyards
and ever been, with 300 million cars on the road. And especially in this environment, we're seeing those cars last longer because of quality, but also because the customers and the drivers are a lot more careful as to how they maintain their car and what parts they put on their car, because they don't want to have to go buy a brand new car or even uptrade in this environment.
Just bounce on GME, that's pretty aggressive.
Increasing, the loss widened. You did have in line on the earnings per share, a beat on the sales. What's going right? And
Not bad.
You know, how are the margins? Because that's where you get squeezed, not just you, but companies in general. What are your thoughts here in the outlook?
Yeah, a lot of things are going right. You know, we've been around for 25 years, and 2022 was a record year for us. Both top line and adjusted EBITDA, $660 million in top line, and that's up from under 300 3 years ago. So we've done a lot of things right. We've opened 4 buildings. We've invested in supply chain, in logistics, in data science. I'm super happy with the performance of the company, but I'm also looking towards the future. In this macro environment, how do we focus even more on the customer?
Back there.
How do we deliver even more value?
BBBY moving up there.
The #1 player in the space.
Moved up to 127, 128's the high on that candle now.
The used car market is expected to continue to grow, right, at this point. And is carparts.com in the right place at the right time? How so?
100%, especially when used cars stay on the road longer. The more used cars, the more opportunities we have to sell. What's great about our business is that we sell a need and not a want. And for us, our sweet spot are cars that are between 8 and 15 years old.
Got great lighting.
We're in a great position, made a ton of investments in the business. We have a ton of inventory. We have a vertically integrated supply chain. We have our own technology platform. We have a proprietary catalog. We have our private label. So I think we have a lot of things going for us. And I think it's going to be an opportunity.
You know, my concern here is the transition to the world of electric vehicles, because while we understand some of it, we don't necessarily know all of it just yet. You have had 12 consecutive quarters of double-digit year-over-year sales growth, and that's very exciting, and congratulations to you and the team. How is that expected to change, or how will you have to adjust things as we moved into the world of EVs? What kind of parts are we going to need? I mean, it's my understanding the computers in there are only, or the batteries need to be changed. Or, I mean, I think we knew what our grandparents drove and what our parents drove, but now we have a whole new thing. I mean,
listen, every time I see transition, I see opportunity. Today, it's about 3% of the car park. What's interesting is, yes, there are computers. Yes, there are batteries, but a car is still a car. And what you'll see is you still have headlights and mirrors and bumpers and brakes and suspension, and all these parts we carry. And today, our assortment, 90% of that will go into an electric vehicle or a hybrid. So for me, I see opportunity, opportunity, and opportunity.
So just having the parts that people need in the right place at the right time.
Makes me want to invest.
Tell me about the landscape, the competitive landscape on these automakers. What are your projections when you have your team that's doing a ton of research, I'm sure, to see, you know, because you have to order the parts and things too, right? What's working in the world of car sales? I mean, we have General Motors now offering voluntary buyouts for folks. You have Tesla surging. Ford is trying to make it in the world of EVs. I mean, all these automakers are doing a lot. What automakers do you work closely with? What can you tell us about some of these names and companies?
So what's working are a couple of things. Number one is the population shift. What we've seen is that customers are moving
12,000 shares
from
sell
California into states like Texas and Florida.
Flip that candle.
And so that's been kind of the guardrails for us and the guidelines to invest in inventory in those places. The other thing is pickup trucks are accelerating. Korean nameplates are accelerating. So we see a lot of opportunities in cars like F-150, Chevy Silverado, Dodge Ram, but also Hyundai and Kia. And so we've been making investments into those parts for those specific vehicles. Ultimately, our business is very fit specific, and what we do is we try to align the parts that we carry with the cars on the road.
And, you know, as we may have a recession, are you concerned about a recession, a big recession, a small recession, unemployment? And what if oil goes higher? I mean, there was a time when oil was surging and everybody quickly downsized. They got rid of their pickup trucks and they were getting all these little small vehicles to save a buck, understandably.
Yeah, I think everyone is worried about a recession. We're getting a lot of mixed signals these days between the Fed, between inflation, between the jobs report. I think for us, what we have to do is keep focusing on the customer and try to figure out a way to focus on productivity and efficiency and pass on the savings to the customers to allow them to survive this environment. So recession means double down on the customer and deliver value. I think the last couple of years was about availability. Today, it's about value. And
we could say a recession, more people are going to be fixing their cars and needing car parts than people buying new cars.
Initiatives you're working on as a team,
people are trying to save money.
To retain
They're going to work on their own cars.
To chase your passion for getting this.
Didn't quite nail that one like you should have.
Now, David, final thoughts?
David.
Yeah, a couple of things we're working on. Number one is doubling down on efficiencies, meaning trying to figure out a way to ship the parts faster and get the customer to get the parts sooner. We don't want the customers to wait. Number two, what we're doing is we're trying to refocus our efforts around moving from a parts company to a customer-centric company and trying to find a way to allow the customer to book an appointment. So we have this initiative called carparts.com, get it installed, where the customer has the ability to buy the part, but also we connect them with a shop that will do the repair for them, remove the friction, and remove the stress from auto repair.
All right. Good luck. Continued success, David. Thank you so much for being on with us. David Menyan.
Bye.
CEO of CarParts.com. Very interesting conversation. Moving everything down south for pickup trucks. All right, still ahead. We're bringing in our panel to talk all about Ulta Beauty, the stock near all-time highs ahead of the earnings. So is there more room to the upside? What do we need to be listening for specifically in the company's report? Our panel will get us ready for that next.
You wonder what the market maker's pricing in for this? Might be a good short. Check. Here's Alta. So the market makers basically cleaned up on almost every earnings except for this one and this one. Our implied move is 5%. Average implied move is 7. What? Oh, because of these crazy ones that brought the average way up. Oh, SPY's flushing down here more. You determine a good short. Oh, you get new low on BBBY. It happened for all this time. 125. Either technical analysis or fundamental analysis. Same way after a good long. Just after every pump. All right. We just made multi-decade lows on BBBY. 125. Big buy wall at $1.05. Yeah, SPY's looking weak. Seems like it'll probably make a new low here. Watching for that 392 range. You said 392 in a day? Oh, see, I thought you said 400. My bad. Yeah, we'll get a bounce before end of day. 400 seemed crazy even back here. I know you said 400. It might. It's gonna take time though. It's gotta shake out all that volatility it's been messed with. Gotta let it find a range, find a support, and then find momentum to the upside and grab the momentum. There's a new low on SPY. Here in Broward County. 2 meet for traders in South Florida. I'm not nearly big enough to need that. 124 on BBY. It'd be cool, but yeah. Maybe once we have like 100,000 or something subs. What do I do with GME? Think we break the 4 tomorrow? I think GME will probably get back into the 16s, maybe even 15s. We'll just see what happens down there. 124. God, BBBY. Can I get back over 150? I think it will, yeah. I don't want gem. Is that a ticker, gem? Coming up 7 minutes to power hour.
Tell us
What did it say about Alta?
Well, in a collaboration with Centric Pricing, Refinitiv discovered that the discount, the average discount that the beauty and Ulta
Tempted to close this last short.
is significantly below
Wait to re-enter.
what other U.S. small stores are doing. In fact, currently the discount penetration, the amount of merchandise on sale, is only 2% overall online compared to 36% of overall.
When would I buy it? At a retest.
How much room they have in order, like exactly what to your point.
It gets down here.
Margins. They don't have
16.
to much because the demand there is
high 15s.
Strong.
It starts to show support.
There's
show some strength. I'd
that
start buying it there.
From home, they're still in the hybrid mode. As the reopening continues and people return to office, there's still room for that market to continue to grow.
RC buying at $12 premium to BBBY share.
Within the retail space, consumers are still gravitating towards experiences. They're eating out, they're traveling, and as a result, they want to look good. So that's also continue to benefit the beauty sector. Because of these factors,
Chop till 3:30.
When we look at the current quarter, Q1, we already see that analysts pulled by Refinitiv are raising those estimates for Ulta already for
seems like we're going to flush first
and in Q1. And as a result, for the year, it's still poised to see strong demand. So
BBY is waking up though.
We're
pretty good volume in here.
On Ulta for 2023.
Yeah, understood. Alexis, what other names are you watching closely when you follow consumer trends, consumer behavior that you think could also be winners?
That's a really interesting question. Honestly, we see the most important thing in this stock market being the fact to recognize that the consumer is holding up and we are entering a new bull market. And so pullbacks are an opportunity to potentially add some exposure to strong names. In terms of the consumer in particular, we've taken a broader approach to investing in general, and Ulta was an opportunity to go into the retailer in a steadier pace. As there's more opportunity in some other sectors, such as emerging markets, Europe, and some foreign strength that we've been seeing.
Yeah. And to that point, I mean, Jerome, you were noting that consumer confidence has been good. I mean, at the same time, you also have told us.
Why is this girl filming with a flashlight on her
retail
face?
Sales, some of the strength came from things that were discounted. So you have a very picky consumer. Final thoughts here, as we may have a recession looming, but they are shopping in person. I know groceries have done well. Are your favorites still those names like Target and Walmart and such?
Absolutely.
You're low on SPY there.
2 retailers reported, BJ Wholesale and Our House. Our House knocked it out of the park with same-store sales of 47%, telling us that the consumer is still investing in the stay-at-home experience, so they still want their houses to look good. And also, BJ Wholesale saw 8% rise in membership. The reason I'm underlining this number is because BJ Wholesale's knocked it out of the park during the pandemic, the discounters in general did. And on top of getting all those new shoppers during the pandemic, they're still growing at this rate, which is very impressive, telling us the consumer is significantly trading down and really looking for value.
We've got jobless claims in the morning.
Report is really going to be telling of whether the consumer is willing to open up their wallets or keep their hands in their pockets.
Neutral to hawkish, we're going to keep coming down. Even if it's bullish. Like today's news was bullish, and look, we're still selling off. We just had a pump this morning, that's it. So even if we do get a pump from it, I think the market's pretty clear on which direction it wants to go.
I'm Nicole Petalides, and
even if it's, unless it's super like crazy beat expectations or whatever. Way outside of expectations. If it's close, might get a little pump from it, but just nice short. Pre-market, yeah, 8 o'clock. Let's see, 8:30. Yeah, jobless claims tomorrow at 8:30. So then Fed Bar speaks at 10. He could move the market too, honestly, him talking. But yeah, that jobless claims will be market will kind of wait on that. So the forecast for it is 195,000. Last time was 190. Wait. I'm sorry, that was this morning. Wait, what is today? I'm confused. Oh, never mind. Yeah, jobless claims this morning. We did get the pump. I was like, I thought it was jobs. We got the pump from the jobless claims. More jobs lost. So we had that. Tomorrow is the employment report. It's at 8:30. So I don't know if that'll move the market as much as jobless claims potentially could. Unless if it's way outside of expectations. So yeah, you might not see a whole lot from that in the morning. White the dump. I'm not planning on cutting. No, I mean, as long as they keep coming out with bullish fundamental news, the lower the price gets, the better. You can just buy more. Because right now that there's this price for bankruptcy, and as it gets lower, it's just more attractive. If the narrative changes on the fundamental side, then yeah, I would have to consider cutting losses. No, I don't pay for any news service. I think bullshit was a stock to the upside. I mean, the news this morning was not like that big of news. You need like the holder of those warrants. We have to know who that is. Finding that out will most likely move the stock significantly. Control pump till FOMC. Yeah, we could bounce around a bit. I mean, that said, this is a big sell-off, 1.3% after we were up, I think, almost 0.5%. And this is on good data, bullish data, so it's possible we don't just bounce around till then. I don't know if this was all budget flush. But Justin, to your point, I mean, if you're aggressive about selling covered calls, eventually you can get all your money back. And it's possible it trades in this you know, $1 range for a long time. And selling covered calls won't hurt. Eyes flushing down lower there. Whew. When did the budget come out? 12:30? So we'd already come back down to the lows of the day. We'd already broken the daily lows before the budget came out. I think it came out right here at 12:30. So we had a bullish jobs data and a little pump from that. We were already below the price of where that was from. So even if this was all from the budget, we still sold off some. Yeah, this is looking like it's wanting to retest this low. We're almost there. 392.34 is the wick, but got it a little above that, 392.68. Noise. Yeah, I could have held my shorts a little longer. Build a Bear hasn't carried at all. Sauna's held up nice. UVXY is on the high. We haven't seen that in a while. This guy
have been trading banks and financials on the assumption that they will do better in a rising interest rate environment, but that doesn't look to be the case if the economy is going
jobs
to
data this morning, jobless claims.
That's the message I think the market's giving us. That's why the 10-year yield is
came out at
actually
8:30, so
today,
you can see it right here.
Why we're having trouble getting through 4%, despite a higher expectation.
Let's see, we could come all the way back down to that
interest rate hike.
That level before
so
any
short-term yields are moving higher.
The budget.
As we have those hikes getting priced in more, maybe a 50 basis point, but the long end can't go anywhere because there's too much concern about the strength of the economy as a whole. And guess what? Our yield curve just keeps making lows. People have been mocking this yield curve chart. People are literally scoffing at it, saying it no longer works as a signal for the economy.
Broken.
I couldn't disagree more, because it's the one thing that actually has a consistent trend over the past year. And it's the one thing that does represent the continual softening of an economy under pressure from the central bank and under pressure from our own habits of the COVID speculative boom that still are weighing down on us. Look at Bitcoin down 6%. Another clear example of where gross speculation still has painful unwind to go. I don't know what else to say. It's like the slowest moving train in the world. Said many times on the show that Silvergate was a ticking time bomb, wasn't going to make it. So Silvergate blows up, and now we're starting to see some more of the ripple effects. There is still $800 billion in the crypto world, and so it matters. All right, I'll talk some more about this at the end of the show. Right now, let's get things started with Kevin Hanks, Renita Young. Let's talk the trading here underway first, Kev. Just kind of the dynamics of today. The most bizarre thing about this whole situation is that the strength this morning was because of weak employment data. That's how twisted we are right now, where it seems our best bull case we can come up with is bad economic data. I mean, why would we ever rally on that to begin with?
Yeah, you know, you and I actually teased the jobless claims data this morning going, this isn't a reason for the market to go up. And by the way, that data was pretty strong, 211,000.
I didn't know it was going to be released today, no.
Insurance is still historically strong. So that wasn't even a reason. Even if you thought that move from 190 to 211 was something to take comfort in, it wasn't.
392.34 is the bottom wick of
that the ensuing
pretty big
rally
range.
Didn't last very long. And so
SPY's on 1.6%.
You know, I think now though we're getting to some really interesting areas. That 39.39 in the S&P 500, that's the 200-day moving average.
Has not been phased by this last
You know, we're still significantly away from the 200-day moving average in the Nasdaq, but this Russell, the banks in the Russell, it is a bloodbath today because of what's happening with the yield curve. I mean, boy, the Russell is having an extremely weak day, Oliver. Now,
I mean, I wasn't even
the Nasdaq's having
anticipating the budget affecting the market. So I wasn't really looking forward to that.
Financials in the Nasdaq.
Anyway.
So there's no weakness there to take over that indice. But Oliver, if you look at the sectors of the S&P 500,
just an excuse for a sell-off.
Are the weakest of the day.
Market's
but
scared.
Everything across the board is down right around. Well, utilities aren't down 1%. Energy's not down 1%. Everything else is down significantly, Oliver. They're really they're panicked going into the end of the day here, and you can see since we've come on the air, the S&P sold off about another 0.2%. It's getting weaker into the bell, Oliver.
Yeah. Okay, let's dig into some of these details here. The Silvergate one is pretty easy to follow. Crypto, busto, pretty much the end of story there. What about for SIVB? It gets a little bit more complicated there with Silicon Valley Bank, Renita.
This stock is bleeding market share today. At the moment, it's more than 60% down on the day.
Oh, my.
As a matter of fact, early this afternoon, shares halted, and that was when it was down around 54%, and it's continuing that tumble. And so it comes after the bank holding company disclosed a $1.8 billion loss yesterday, and then as a result, announced those plans to sell $2.25 billion total in stock sales to try to shore up its financial position. And so that includes $1.75 billion. That's going to be common equity and mandatory convertible preferred shares. Also, one of its longstanding clients, General Atlantic, is purchasing $500 million worth of shares from the company. And then another offering $1.25 billion of convertible and preferred and common stock as well.
Wow, they're doing like a fire sale.
It's a fire sale. It's exactly what we were talking about earlier. It's a fire sale. And so this bank, it's very good to know this piece of information to understand why this is so bad. This bank is a lender to VCs, or not to VCs, to startup companies. Mm-hmm. You know, it's a bank, it's a lender for businesses. Most of them are VCs. A lot of them are not VCs. A lot of them are tech startups.
Yes.
And so tech startups have been having a particularly hard time during this time. I mean, we've seen what's been happening with the larger tech companies, right? With all of the layoffs that have been happening, right? And so in a letter to investors, the CEO, Greg Becker, he said that they need the money because the bank expects those continued high interest rates pressured public and private markets, and they are going to have elevated cash burn for some of their lendees or some of the companies that they lend to, and they expect that to come down on the company's own financials as well. So it's really a bad picture all around, unfortunately. It's like their clients aren't doing well, and they're not doing well as a result of it.
You know, one of the things, well said there, and good recap for us. One of the things that I've had trouble with people saying over the last couple of years is that crypto doesn't matter. And I think that SVB here shows us some of the linkage where you don't have to have a direct crypto exposure. You don't have to be holding digital assets. You don't have to be a lender to Michael Saylor like the case of Silvergate. But the fact of the matter is that whole area, and the whole market is a tech market, and tech people own crypto. Crypto is tech. All the stuff is linked together. So when there's pain in an epicenter, if you're not in there, you may not be on fire as bad as some of these companies, but the knockoff effect for Silicon Valley and tech as a whole, this does start with a tender in crypto that was lit. And that's, to me, where, Kevin, this asset class, when there's almost $1 trillion of it left, seems like it plays a role.
Oliver, I've been a skeptic of cryptocurrency, or at least acknowledging that the potential volatility here, you better have deep pockets and have a very small percentage of your assets in this. And it amazes me that these banks are worried about interest rates and they're getting hurt when interest rates, they haven't gone up, Oliver. They've normalized from historically low levels for an extreme amount of time. And so, these banks that are getting hit by or feeling pain from higher interest rates and exposure to crypto, boy, Oliver, that is just not responsible risk management.
Yeah. So we're down 62% in this stock right now. The whole financial sector is under pressure as a result, as there's concern about what's happening here. You mentioned that they had the circuit breaker earlier this morning. They came out with a statement and said that their financial position is strong, but that's not really helping. History tells us it never really does help when the company comes out and says everything's okay, we've got the money. They had deposits of $89 billion, which was up about $500,000 since December. And they talked about reducing their digital asset exposure. They tried to do this, so they've been aware that this was a risk point.
Right, which shows you just how cautious, it's going to be going forward, and how much more cautious. Maybe they might pass along that advice to their, to their customers who are very much in it, and who, just as you say, these tech entrepreneurs, a lot of them are invested in cryptocurrency.
They're on SPY.
Are partners with a lot of the companies that are, in the cryptoverse. So
SVB is
it really
crazy.
is interesting, and then it's more bank news happening today. With Credit Suisse.
Yes,
of course.
That's true. Give us that too.
Even more, right? So Credit Suisse, that stock is diving today after delaying its quarterly results for a late night request from the SEC. Now, the SEC has been asking for information about how this company has been recording its financials, its cash flow statements, specifically for the 2019-2020 season. And so a letter actually from Credit Suisse shows that this may not be the first time that the SEC has asked this company about how it's recording its financials.
Yeah, it just broke that low.
And so, as a result,
Wow.
several compliance officers
it's flushing
have left
through
the
there.
company today, or have announced that they will be
could have held
leaving
some
the
more
company
shorts.
today. We also see that it's eliminating most of its staff in Japan. That's around 20 people. And it's down maybe about 65 or more % from its yearly high. The stock is almost touching an all-time low today. It's
all right,
just
Grant.
not a great day to be a bank today.
Yeah. The Credit Suisse thing, I think, too, is
This is crazy. Yeah, we just broke this low from over here.
A couple months ago, there was some real deep concern about this company, and now we're down 4.5%, trading at $2.80. So it's like, all right, maybe the zero bound, I guess, for Credit Suisse. All right, employment tomorrow, Kevin. What are we rooting for at this point? Is there any way to win? Because if it's warm, rates go up. If it's cold, economy's slower than we thought.
It's starting to just capitulate.
As long as they don't surprise a lot on the upside, Oliver, there may be a relief rally here. Watch the wages, 0.3 and 4.7, up from 4.4. That'll scare the market. And obviously the jobs in the twos is fine. Anything higher will probably scare the market, Oliver.
Okay. All right, thanks, guys. Really nice to run down of the bank situation there. We need to appreciate the thoughts on the trading action, Kev. All right, let's talk some more about the situation with Peter Anderson, joining us, founder at Anderson Capital Management. Peter, you are not a crypto fan. You've made this publicly known, and so I guess a good day to have you. We didn't call you for this, but it worked out well with the timing.
Yeah, sometimes it does.
Hey, what do you think when people say that crypto is an isolated, siloed off thing?
Well, crypto is an isolated, siloed off piece of lunacy. I mean, I would agree to that. I think that the whole crypto lunacy that has transpired for the past year, 2 years, 3 years, has really taken a life of its own. The supporters are almost more like a political party or a religious cult.
I'm going to close it down here pretty soon.
No analytical foundation behind valuing, say, Bitcoin. If you ask any proponent of Bitcoin, what is the fair value? Watch them hedge like no one has ever hedged before and opine on a world equality and move on to some kind of qualitative discussion rather than just
this is
showing
a
us
pretty
on
big flush on
paper
that
and
level.
pencil how these things are valued.
Yeah.
That's the killer question.
I've been in that conversation too many times myself.
Smart crash is not force all shorts to
Peter,
cover. No.
When you look at, when you use the word lunacy, absolutely couldn't agree more on the crypto stuff. But then I look at COVID and the speculative boom we had in stocks. Seems like there's a lot of lunacy there too. And now we've got banks that are just Silicon Valley connected. Yeah, they've got some crypto, but they're not as a pure crypto player. I mean, where do the tentacles reach? How far do they go, do you think, in that overall tech lunacy?
Pretty far. You know, I think the Fed.
That's quite the flush, almost 2% now. Holy smokes!
About that in a moment, but one of the byproducts
Glad I held
of that,
one.
I think, is what you're seeing at SVB right now. Is that
would have been $4,000 if I did a full size yes.
And you're a bank that is mainly involved with tech clients. And remember, I find this ironic. You know, a lot of their clients are private equity or VC based clients.
This is a big.
And, you know, they tend to invest.
Holy smokes! There's not even a relief
fixed income,
rally.
High quality treasuries.
There's no buying.
When they're
no
telling their
bid
clients
support.
to put the money in the highly speculative deals that they're doing, but their own money, they hardly ever invest in that, and they put it in treasuries. So I think we're seeing a byproduct of that, and probably some other banks we will see the same type of pain. So this FTX issue, which mainly has, in my opinion, almost been swept under the rug. You know, the attention to this has really kind of moved on, but I do think that combined with the Fed's actions,
Flush on Tesla. Thing's up 150% now. It's gained 50% in the last 30 minutes.
We've seen in the past.
That's crazy.
When you look at the connection between what the Fed is doing and the speculative excess of COVID that is the paragon, which is Bitcoin, but could be used to describe a lot else the last couple of years. What historical comparable period should we be using then? Because a lot of people right now, they look at inflation, they go to 70s. But our inflation is not there, right? Is it something more like .com? Banks today, people are worried that our recession might be like an 08 situation, but this is so far much more limited than that, obviously. So what do we use as kind of our benchmark?
Well, as humans, we always like to see patterns in things, and we always like to say, oh, that reminds me of such and such, where we have a
Take some time for this thing to come down.
I have said since the onset of COVID that sadly there is no playbook for this. And I think that's why a lot of people are totally freaking out about the market and watching every action, you know, what Powell is having for breakfast tomorrow seems to be more important than fundamentals of stocks.
Paper trades make me sad.
So I say this, that when you start to look at some of the signs of inflation, like containerized shipping, for instance, you know, a lot of people just don't spend time thinking through this stuff. Containerized shipping rates, the spot rates right now, are back to pre-COVID levels. But everybody is more focused on the current contractual rates that are like 2 or 3 years out. So if you ask somebody that signed a containerized shipping contract a year ago, they're going to tell you the rates are sky high. If you talk to somebody that's going into the shipyard now and signing, they're going to say, this is great. We're back to pre-COVID
I mean, we saw this. This whole move right here, this is where we should have been. This was just a Boston pump. Now we're back on that trend that we were on before he pumped it.
And there's no straight line on this. Everything is murky.
We're below it, but we're on the same trend.
From my perspective, everything is moving in the right direction. We just need to calm down a little and have a little bit more patience.
It kind of sounds like, and I have to say, it does seem like this is somewhat
390.53.
evidenced by the
Literally hit right at my
trading
line.
behavior is that
The heck?
what's bad in the short term might be good for the long term, that maybe we have to take kind of a more traditional look at the way the Fed creates cycles and just accept that they have to kind of sink speculation at the moment?
Well, you know, I think the Fed is being very, and I don't think anybody's ever described them this way before, but very artful in blending. Now, remember, we're coming up on the 1-year anniversary when they
green
first
candle.
made a hike, right?
Maybe.
Last March.
I'm gonna hold my short
So
and
if
just
you're the
add to
Fed,
it.
You have to be saying to yourself, all right,
This
the
is
jump
so far
rope
from my
is
cost
already
basis now.
rotating, but I need to jump into that rotating jump rope. So I need to synchronize myself in real time. And what I'm trying to get at is they are now going to acknowledge that last year's hikes are coming home to roost, so to speak, and we will start seeing the impact of those hikes. However, they're still in a hiking state of mind, so they have to marry the current hikes with the impacts that we're going to see at any month now of the past hikes. That takes a lot of art and skill and not a lot of analytic thought, but I dare say intuition in marrying these two types of actions they're taking. And frankly, I think they're doing one heck of a job.
All right. Like it, there's definitely a little contrarian flair in there, but most
Quite the
folks are
move.
bulls,
All right,
so
I need to cut it off.
Makes sense. If
I'm
you're happy
gonna
with
do a
the
recap
Fed,
video,
what they're
go over
doing
some
right
technical
now,
analysis,
Peter, thanks for
over
the convo.
futures trades today,
You're welcome.
options.
Yeah, I appreciate it. Peter Anderson, founder at Anderson Capital Management.
And
good guest
yeah.
for today's action.
Crazy.
When we come back, let's
Thank
talk some more
you so
about
much,
whether
Ace, for dono,
number has any way to be a
as well
good
as you.
thing for bulls.
Big hugs.
What do we
Hope
want?
you guys had a
Leak
good day,
data?
fun time
Is
on
that really
stream.
where we're at right
Thank you for
now?
your
Or
support, guys, your
roofing
subscriptions, your
economy
likes. I
soften
saw
up?
that like come in. Thank you. Hit the bell, get notified. Jump on our Discord server. Link for that's pinned up above or in the description. As well as our Twitter, you can follow us on. We do Twitter Spaces at times. Thanks, Ace. Thanks, Dink. Make sure we get the bonds that bought. Keep getting devalued. Thanks, Grant. Thanks, Furs. See you in my next pair. Pray win the lottery tonight. All in on BBY. Looks like Spies maybe hit a bottom here. I don't know. This is crazy. Crazy, crazy. All right. Thanks, guys. We'll see you on Discord or the recap premiere.